morning. You're watching India Market Open, and we're setting up for a very, very interesting week and an action-packed weekend. A blockbuster election result in Delhi. Completely, I mean, it was predicted by the polls, but still unexpected, I would say. BJP back in Delhi after 27 years with huge margins. And Trump with his tariff bugle once again.
Yeah, and not from the White House. We're talking about an announcement that was made to reporters in Air Force One. So he's talking about tariffs 30,000 feet from the ground as well.
He's talking about tariffs on social media.
I think he can do it from 100 feet underground as well, for all you know.
That's not going to matter. The time and place is barely the concern now.
Yeah.
So, yeah.
But what a week, yeah. Today, the China reciprocal tariffs take effect, and he's promised this week reciprocal tariffs on all other countries. Prime Minister Modi and Donald Trump's meeting slated for Thursday. CPI data coming out on Wednesday. Aero show begins today. It's a packed week.
And the earnings season getting over.
Oof.
Finally.
Finally. Yeah, Aero show, we're going to get some great pictures from there. And of course, a report from our very own Sajid Mangat. So watch out for that. But let me do the global setup for you very quickly before we get our first speaker on. So Friday trade was not that great for US markets. These tariff fears are back. The Dow dropped over 400 points. And we'll pull up the Dow futures as well, mildly up in the green. But largely tariff fears has dominated on Friday's trade in the US markets. Amazon was down nearly 4% because they've guided for revenue growth between 5 to 9%. That's their weakest on record. And that, of course, has disappointed investors. Non-farm payroll data finally came in. It rose by 143,000 for the month, but expectations were 169,000. And the figure for December was 307,000. So definitely a disappointment there. The unemployment rate moved lower from 4.1 to 4%. And you saw bond yields spike after that jobs data showed a 0.5% increase, specifically in the per hourly wage. That was expected to be 0.3%. So that was a bit of a concern as far as inflationary pressures go. So the 10-year at 4.48%. Oil prices were also hit amidst tariff fears, Brent at about $74 mark. And gold prices have risen 6 weeks in a row on safe haven demand. I mean, forget all else. Gold is turning out to be one of the best bets this year as well. Asian markets have also opened mixed under that tariff cloud. We've seen some recovery there, but yeah, you've seen the Shanghai about 0.5% up. Hang Seng doing okay. I'm going to pull up the implied for India very quickly before we get to our first speaker. And, set up for what we can expect from Donald Trump. 56 points down on the Nifty. Now, here's what's happening in our Trump tracker. President Trump has said, and I quote, "I'll be announcing that next week there will be reciprocal trade so that we're treated evenly with other countries." I think we have a soundbite as well, and maybe we can play that out. But what he's also done is he's promised to announce 25% tariffs on steel and aluminum today. These will apply to all countries. He's also said Nippon Steel can't have a majority stake in US Steel. You saw Nippon Steel stocks fall after that. And of course, he's very excited about the efforts of the DOGE department, which is Department of Governmental Expenses. So Trump in focus, his tariffs on focus, and the whole week is going to be dominated by this. Monday is tariffs on steel and aluminum. Tuesday or Wednesday, he might announce reciprocal tariffs. Let's listen to what he said.
Every country will be reciprocal. That's
Mr. President, can you confirm
it won't affect everybody because there's some where we have similar tariffs. But the ones that are taking advantage of the United States, we're going to have it's reciprocity, it's reciprocal. We're going to have a reciprocal tariff. But we'll have a news conference Tuesday or Wednesday.
Peter McGuire, market strategist at XM.com, joining us this morning. Peter, thank you so much for being on the show. We always love having you here. The latest on the tariffs is back, and we saw round one of this with it ending in a bit of a whimper, in the sense these were seen as a bargaining chip, and at the end of the bargain there was a pause for a month on tariffs on Mexico and Canada. Are you expecting something like that once again with a new set of announcements?
Well, good morning, Tamara. Greetings from Sydney. I think a couple of things. Yes, it hit everyone by a little bit of a surprise this morning. Certainly Asia trade didn't like it, and you've seen that US dollar have a little bit of a tick up. this is the uncertainty, and as we've discussed this many times together, that's what the market doesn't like. The market wants certainty to a certain extent, and those unusual, I suppose, statements that come through from President Trump in the sense of unusual, they drop, and then the impact that has to market and to sentiment. And this is, I think we've just got to get used to it. We're in probably week 3 or week 4, I think week 4 of President Trump's presidency, and he's staying very much on course, isn't he?
Hi, Peter. Morning. Alex here. You track the dollar very, very closely, and I quite enjoy the notes that you send from Coogee Beach. It sounds much better than where we're at right now. But why don't you tell us about your expectation about the dollar? It's at over 108. It reacts very sharply to any updates on tariffs, and it did based on the latest announcements as well. What is your estimation as to how high it can go, or do you think that the gains will be capped at some point?
Well, Alex, good to see you. And, when you're thinking about what we've seen over the last couple of weeks, you had a 109.70 down to that 107.70, so incredible swing in that 2-week window. And now you're back at that 108.37, 108.38. I think it's on an upward trend, and a couple of reasons why. I mean, you've only got to have a look at this condition as far as Eurozone. They'll be cutting rates further. And, of course, the pound, they cut last week. So I think then there's no talk anytime soon of a rate cut from the States. So I think that's going to trend upwards. And, of course, King Dollar, he is the King Dollar King, President Trump. He only wants to see a strong dollar, and certainly the US to be the #1 currency. So I'm expecting the dollar to take a little bit further uptick, and maybe a 109 handle, 110 possibly. But again, volatility is going to be the name of the game, Alex. And it's just incredible for trading.
Peter, everything else notwithstanding and being uncertain, good afternoon to you. The demand for gold, 10.7% returns in INR terms, YTD. That is stuff that dreams are made of. You reckon there is more to come here?
Yeah, Niraj, good to see you. How do you stop it? It's like a freight train at the moment. It's just cranking through 2,900. It'll be probably there this afternoon in our time, probably your morning. So, the Indian appetite as far as central bank buying is just unheralded. You've seen global demand absolutely off the charts from central banks, and, of course, retail across the paper market, and, of course, physical. And I mean, I'll be over there in a couple of months, and I'm looking forward to seeing the three of you. And, the likes of India, 3250 is the number you've got to have in your back of your mind. I think it's going to crank up to probably 3,000 relatively soon. If it marches through 3250, then I really do think it'll go to the races. It'll be on. So, big uptick, and I'm not expecting major pullbacks across that gold market anytime soon.
Okay. Peter, thanks so much for joining in this morning, and pleasure as always speaking to you, and look forward to the next chat as well.
Thank you, Alex.
All right. Let's talk about very quickly what happened in trade on Friday, because really, it's a whole setup that you should watch out for today, and everything that's happened over the weekend is what matters. But you saw FIS selling once again to the extent of 470 crore rupees. The gross numbers were actually quite significant. That is belied, of course, by the size of the net number. That was matched more or less by domestic institutions. The Nifty 50 swung near a 250-point range. The benchmark ended about 0.6% off the high, but also about 0.5% off the low. And in fact, you had the broader markets that ended mixed. The Nifty mid-cap index gaining about 0.1% or so. The small-cap index down about 0.4%. Banks, especially PSU banks, underperformed. The Nifty PSU bank, in fact, was the worst performing index, down about 1.4%. FMCG and energy were the other underperformers, but you had on the other end of the spectrum metal counters, which could be in focus at the start of the week, that were the biggest gainers, in fact, led by steel companies. There was, in fact, a surge in volume in several large cap counters, and I've pulled up just a few where you had very significant delivery percentages. GVTND, of course, has been in focus on account of earnings, and the stock has moved very sharply. So you had significant delivery action there. ICICI Pru, Shree Cement, and then a couple of others. I saw Axis Bank as well. You had Kotak Bank, you had Infosys and HCL Tech, all with delivery percentages over 70%, Neeraj.
Yeah, I mean, it was an interesting week, Alex, and promised to be staying that way until maybe Friday happened, right? And the post-policy follow-up didn't quite happen, and that was a bit of a bummer, if you will. But be that as it may, I think that it's an interesting week, this one, simply because of the fact that there is, amongst other things, Prime Minister Modi and Donald Trump meeting, and so much of issues around, so much of sweat around what could happen to tariffs if indeed India gets slapped. But I think this meeting might well give some glimpse of the camaraderie. My belief is that it will do that, if you will. But the Nifty has closed higher than the previous 4 weeks close for the second straight week. And that is, in technical parlance, important. Now, this week, of course, markets will keep one eye out on the new income tax bill contents as well. We haven't seen a reaction thus far to the Delhi elections. Tamanna would be better placed to talk about it, but I would suspect that maybe some salute to that might come in the extent of the victory. She spoke about it, so that is something to keep an eye out for. Metals have had strong moves thus far. Difficult to predict an encore unless China's strength continues, but defense could well be in focus today by virtue of the Aero Show commentary that comes in the next couple of days. It's a sector that has been beaten down out of shape, so you watch out for that. And lastly, in terms of sectors and stocks, I think today, like for example, M&M, consensus upgrades by brokerages. Insurance, very strong data, particularly for HDFC Life, and we'll talk about some of those. So that could be interesting. And last but not the least, I thought the Nomura note on weekly FI flows was interesting because it might well be the trade in the near term, if you will. So Nomura, of course, spots that the EM Asia ex-China stocks saw net selling by foreigners of about $2.1 billion and net outflows from India, which is the 8th straight week, $894 million, even though net selling kind of came off a little bit week on week. But there was net selling 8 straight weeks. And one of the reasons this might well stay is because China is attracting flows. 3 straight weeks of US listed China ETFs posting net inflows. And this is because of 2 things. One, that China is slapping in the 10% tariffs kicking in today. If there is no reciprocal action again from the US, then the world might believe in its wisdom until Donald Trump does otherwise, that this is what it is, and DeepSeek benefits coming in because people are now saying that, okay, China has gotten an alternative to AI threats, etc. Plus, if this is the worst of the tariffs, then the valuations are certainly in favor. So if that continues, then all other nations see a bit of an issue. So that is the bit of a cliffhanger, if you will.
I'm just wondering that the only upside perhaps is that the dual action of the income tax cuts, which help with the consumption problem, plus the 25 basis point cut. And I know that the response was muted. Was very muted. Maybe it's a delayed reaction that we will see, because the fact is that 2 big measures have been taken. This was the ask, and it has happened. Agreed. So, and I know that most things get discounted in advance, etc. But somewhere or the other, I think that these 2 factors will play out, and that might be the pivot for the turn that we're waiting for.
And the other thing, of course, is post the earnings season, Neeraj, of course, we'll have probably a patchwork of how many met and how many didn't meet, but it hasn't been as terrible as we were anticipating. It has. And so from that perspective, I think you'll take stock at the end of this week.
Yeah, most certainly. So highest underweight by FIs in the last 15 years, plus the measures taken by the government and the regulatory bodies, all of that augurs well. The only caveat is that if the world money is preferring China, and if those outflows continue, and with right reason, I mean, China is so cheaply valued that if those outflows continue for the next 1-2 weeks more, then that puts a lid on the upside.
Otherwise, nation after nation is banning DeepSeek. Nation after nation. Not that in the AI arms race, well, of course, China is well ahead at this point. But let's come to specific stocks that should be on your radar this morning, and quite a few announcements over the weekend as well. I'm starting with LIC. And I would say a mixed set of numbers, but largely a thumbs up, only because of how their margins have grown. And this was better than expectations. Growth overall slightly below expectations on LIC, but value of new business was a beat, and margins, that's VNB margins, value of new business margins, an extremely strong beat. So the net premium income was down 8.6% to 1.07 lakh crore versus 1.17 lakh crore. Net profit was up 16% to about 11,000 odd crores. So an improvement there. Total annual premium equivalent was down 24% to 9,950 crores. So that's, I would say, the negative on it. Value of new business was also down 27%. Remember, a lot of new surrender rules have come in for insurance policy, and that impact is being seen. But the saving grace, so to speak, for LIC is margins. VNB margins were up 150 basis points to 19.36%, which is why on those metrics, it's being seen as a bit of a positive. There you have it, all of the details there on your screen. So LIC, watch out for it. Obviously, insurance pack will also be in focus simply because of the numbers that have come in both in general insurance and life insurance. On that parameter, LIC wasn't that great, but just based on the numbers and then the conference call after, where now the focus for the management is going to be on the agents channel. That might see a bit of a positive. Not so much for Amara Raja. Amara Raja is a thumbs down all along. We're taking standalone numbers over here for Amara Raja. Revenue was up 10% at 3164, but EBITDA was down 4% at 415 crores odd. Margins were down about 195 basis points at 13.14 versus 15.09. Net profit up 23%, but the net profit up 23% because of a one-time exceptional item of 111 crores. That's what's positively impacting the profits. They also received 175 crores towards an insurance claim for property, plant and equipment, and the claim was lodged on account of damage due to a fire accident at their manufacturing facility in Chittoor in 2023. So this is where they got 111 crores. Overall, but demand has been slow for Amara Raja. The conference call will be today, so that's one factor to watch out. Management commentary, that is, but overall not great. Defense, we spoke about defense. The Aero show is on, but Paras Defense numbers on its own looking pretty good. So a thumbs up there for Paras Defense. Third stock on my list. Revenues up 33, nearly 34%. At 86 crores versus 64 crores. EBITDA up 77% at 22 crores. Margins have gone up quite robustly, healthy upside in margins from 19.4% to nearly 26%, and net profit at 15 crores versus 7 crores. I quickly just wanted to add Brainbees. I'll take a second for it, just because the numbers looked interesting for a company in this space. Revenues up 14%, EBITDA up 84% at 108 crores, and margins have gone up fairly decently, 3.1 to 4.9 crores, 9%. This is a stock that has been beaten down a fair bit. Even at last rate, it was down about 10%. That's because its lock-in for its IPO is ending. Investor lock-in is ending, and there's a whole host of other companies which are in that space as well. But their net loss has also come down a fair bit. And their inventory levels have destocked, which is one of the reasons for their number. So just a quick word on Brainbees.
I have got 3 thumbs ups on my list, and they're all on the back of earnings, which is what was the point that we were making earlier, or at least I was making to Neeraj. Fortis Healthcare is the first stock that I will talk about, and it's looking very good against the estimates, consensus estimates. It's beaten it on several fronts. The revenue is increased by close to 15%. The EBITDA is up about 32%. The net profit is increased by 84% to 284 crore rupees. There is an exceptional, but even if you account for the exceptional, it is still a beat. The margin is at 19.5%. What are the factors that have worked for Fortis? The revenue growth in the hospital business is led by the average revenue per operational bed growth, which is close to 10%, a very strong number. 6.2% growth in occupied beds, and the occupancy stood at 67% compared to 64% in the comparable quarter a year ago. And in fact, it is looking like a very good company or result. Remember that a lot of these healthcare companies have been buzzing in the recent past, so that's a thumbs up, and you should watch out for it at the start of trade. The second one is Action Construction, and actually this result bodes well for the rest of the space as well, I think, because the revenue grew by a healthy 16%. You had EBITDA growth of as much as 31%. The margins have expanded, and the net profit is up as much as 26.5% at 112 crore rupees. Of course, this company manufactures construction equipment, and so if this company is reporting a 16% growth in revenue, it certainly bodes well for the rest of the space. And the final stock that I'm talking about today is Balu Forge, which has a very strong set of numbers yet again, 74% growth in revenue. The full year expectation is a growth of 55 to 60%, which seems comfortable at this stage. The EBITDA has grown quite considerably as well. In fact, it's more than doubled. It stood at 67.7 crore rupees. The margins have expanded, and that is expected in a range of 25 to 27%. So this was also in line with their own expectations. And the PAT number is more than doubled as well. The revenue was led by client addition as well as specialized engineering products. And the margin expansion was on account of an improvement in scale as well as a change in the product mix that the company has reported, Neeraj.
So, well, those are the three or a few stocks. I'll just quickly add the ones that are on my list. I'm starting off with, I'm giving you a good number, a bad number, and then some other news. So the bad number is delivery. And I thought it was bad simply because it came in way lower than estimates. Keep an eye out for that. The net profit came in at 25 crores versus the estimated 66 crores. And even the revenue number and the margin number was okay. Brokerages have given a bit of a thumbs down to this. Goldman Sachs, for example, has cut the target price to 370 from 400. I would suspect that delivery could see a bit of an issue in the quarter. And keep in mind, I mean, loosely, there's a platform company in logistics, and most logistic companies have actually come out with good numbers. So delivery might see a bit of an issue today. The insurance data looked very strong. HDFC Life was the fastest growing player in Jan 25 with 25.3% of retail APE growth, which is the annualized premium equivalent. This is the metric on which a lot of analysts evaluate insurance companies, and HDFC Life has grown very well. SBI Life has grown about 18.4%. ICICI Pru has grown about 8.7%. And I think from the brokerage's note I was reading, I think it was a Nomura note, which said that the ask rate for both HDFC Life and ICICI Pru to meet their annual guidance is now very, very low. So they don't have to do too much in the months of February and March to meet the guidance. So therefore, if you think of all of those things, HDFC Life did well in the month, ask rate not very high. I would suspect that HDFC Life could be a stock that could react. And boy, do these stocks need reaction, because HDFC Life has been around this price for maybe the last 5 years. The stocks haven't gone anywhere, and therefore I think it does need. Look at that. I mean, just around that price, right? This is the 12-month chart. If you look at the 5-year chart, it pretty much look the same thing. Gone up, gone down, and then back to 600 odd levels. So virtually gone nowhere. I think they need some triggers. So watch out for HDFC Life. VATech Wabag is the third stock on my list. The numbers were okay, but I think the more important part for VATech Wabag was the order win. 3,200 crore order for wastewater treatment from Saudi. Now remember, viewers, it was the Saudi order loss that really hit VATech Wabag very, very badly, and the stock came off from 1,700, 1,800 all the way to current of 1,360. The fact that they won this order, and this is an EPC order, might help VATech Wabag, so watch out for that. And last but not the least, I'm adding a very quick fourth one because M&M deserves this mention. We'll have the management, of course, at 9:40 live today, so you got to tune in for that. But look at the brokerage view on Mahindra and Mahindra. Nomura maintains buy, hikes target price 3681. Goldman Sachs maintains buy, hikes target price to 3800. BofA maintains buy, target price of 3650. Macquarie maintains outperform, target price hiked to 3643 from 3511. Everybody has hiked target prices. Could be one interesting auto stock for the morning.
All right. So M&M, astonishing, and I'm looking forward to that conversation that you had with Dr. Anish Shah as well. We'll take a very short break. On the other side, we're talking about Delhi, the victory over there. Amitabh Tiwari is joining us to tell us why this is a big deal, even though Delhi sends just 7 MPs to the Lok Sabha. All of that on the other side.
सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up.
All right, let's spend a few minutes on the Delhi election results which came in on Saturday. And yes, there were some very, very optimistic polls which said that the BJP could win after 27 years. But few of them may have expected this margin of victory. Out of the 70 seats in Delhi, BJP has won 48, sweeping back to power after nearly 3 decades. The Aam Aadmi Party reduced to 22, and the Congress and others have got 0. Now, what has, some astonishing results there. If Arvind Kejriwal, the 3-time Chief Minister of Delhi, actually lost from his own seat. And a number of factors came into play. Allegations of scams, U-turns on multiple issues, a whole host of factors came in. An interesting note this morning from Motilal Oswal, which talks about how the double engine sarkar, the double governance model has worked. And the note looks at this from the perspective of positive for markets, because it says that any kind of concern after the Lok Sabha elections of what an alliance government at the center will look like, its stability, have now diminished even further. The BJP has been on a winning streak since the Lok Sabha elections last July. Amitabh Tiwari, political strategist and commentator, joining us now to take us through this. Amitabh, this is a big, big deal, isn't it? Especially because Aam Aadmi Party seemed unshakable from Delhi.
It's a big day in a sense that the Aam Aadmi Party, after the Congress Party, also was emerging as one of the key opposition parties to the BJP at a national level. See, there are a lot of messages from this victory of the BJP, though it's a small state, as you mentioned, but it has significant implications. The first is that it provides some momentum to the BJP going ahead to face the future elections. Now they are facing big battles in Bihar at the end of the year and in West Bengal the next year. And after setback of losses or a loss in 2024, now it's a hat trick of wins, and wins where the party was on a back foot in these states. So it's a hat trick of victories in a sense. It also seizes the momentum away from the Congress party and the opposition, because they had then done unexpectedly well in the Lok Sabha elections, and now it's a hat trick of losses for the Congress, not only in Delhi, but even in Haryana, Maharashtra, and Delhi now. It adds to the political stability at the center, as you were mentioning, because there were concerns as to how the BJP could be able to push its agenda in an alliance government. But that now seems to be put to rest, because it seems to be business as usual, and continuity of its policies is the message, is likely to be the message from the BJP. It also strengthens brand Modi, because a lot of people had written off brand Modi after the Lok Sabha upset. and people were mentioning that probably he is at the peak of his popularity or going to enter a decline stage of a brand. But he's come back strongly because in this election, he was clearly the face of the BJP. And the last is that it also aggravates the infighting within the opposition. Now, the India bloc already has been facing demands from regional parties for a change of leadership,
Right.
change of and this could just aggravate infighting and could even probably lead to a split in the India bloc with region forming.
So on a national scale, it reinforces the strength of the largest political party right now, the BJP. I'm just wondering, Amitabh, do you have a take or a guess on who could be the BJP chief minister from Delhi? Because before the elections, and we had a conversation, this was one point that came up, that Aam Aadmi Party has the face in Arvind Kejriwal. Who's the face for the CM from the BJP? Clearly, it's not mattered. The votes have come on Prime Minister Modi, but who could be the probables?
No, essentially, whenever surveys show the question as to who is the face or who is leading in the CM ratings, the follow-up question is what they don't ask, as to how many people are voting in the name of the CM candidate. And a CSDS survey has come today, which shows that only 4 people voted in the name of the CM candidate in Delhi elections. That's why probably the fact that Arvind Kejriwal was leading the CM race did not matter, because a lot of people did not vote on the CM face. Now, coming back to the BJP is known for springing surprises. However, we've seen in Maharashtra that the name of Devendra Fadnavis, who was the front runner, actually he went on to become the CM. So here also, if you see, Pravesh Verma is a giant killer. He now represents the New Delhi Assembly constituency, and whoever wins the New Delhi Assembly constituency normally goes on to become the chief minister. Also a Jat face. So from a political messaging point of view, it's a message to voters in Haryana, Rajasthan, and the upcoming big battle in UP. So he ticks some of the boxes. Nepotism, dynastic politics will be raised by the opposition if he is named. So there are caste and creed, socioeconomic factors, political messaging. It's also now BJP, we've seen adopting a generational shift policy. So he's young, but we'll have to wait and see as to how the BJP takes into account all these factors. The biggest factor, I think, is they need a person who will be able to implement the promises they've made in their Sankalp Patra, because they've made a lot of promises, including freebies, social welfare programs, and also solving the issues of pollution and Yamuna cleaning.
Yep. You know, the interesting thing, and thank you for all of that insight, Amitabh, but just the interesting thing, for the first time, there is complete cohesion in who runs Delhi at every level. The state government, the central government, from the LG side, from the municipality side. So, of course, with great power comes great responsibility. All the questions of people from Delhi now at the BJP's door. But let's move on to the FNO setup for the day, and Agam joining us to give us a sense of what the day is looking like. Implied open showing a negative start, and of course some volatility there.
So a lot of the major events are out of the way at the moment, and even though we are expecting a little bit of volatility, it won't exactly be on a significantly higher side. Let's take a look at how things have panned out as far as the day of trade goes last Friday, and we did have again a marginal cut and very little change in open interest, so we have seen very little position building here. To talk about the Bank Nifty as well, we don't have too much traction there, but a 0.5% cut, a little bit of an increase in open interest towards shorts. But coming down to the options market as we move into a new week, we have 24,000 as the one which will provide the Nifty with a significant amount of resistance on the higher end, and we don't have too much going in as far as put writing is concerned just yet. So we're waiting for a little bit of a base formation before it comes through over the course of the next couple of days. Let's talk about stocks then, and again it was a day of trade where we did see a lot of pull and push between advances and declines, but a lot of longs for Ramco and Abbott. On the other hand, shorts for NCC, Gujarat Gas and NBCC, and among stocks which saw unwinding, we did have short covering in Torrent Pharma, Phoenix Mills and Apollo Tyres. SRF and Bajaj Finance, on the other hand, looking at long and winding. So it was a mixed day of trade, and this is probably what we're expecting going into today as well.
Okay, thanks so much, Agam, for getting us those details. Neeraj, I saw this in your graphics, but you didn't speak about it. And it's an interesting context ahead of the next chat, which is why I'm going to bring it up. The gain in gold prices year to date, it's beating any asset hollow, right?
10.79% INR terms.
Wow.
Which is incredible.
Incredible, and we are only in the first 2 months.
And the targets of $3,000 does not seem very far off now.
Yeah, I mean, if all of this continues, yeah, who knows? I mean, who is to predict? But the beauty is, right, you know, there was a 15-year chart, there was a DSP MF note. India INR prices wherein the Sensex probably nudges gold, but a lot of other countries, in local currency terms as well, gold returns have beaten the index returns hollow. So as much as we are all fans of equity markets as we should be, but gold has a special place of its own.
Indian women know best.
Of course.
But you know, the only downside to gold, if at all, if as expected and promised, if there is an end to conflict in Ukraine, Russia, if there is an end to conflict, a decisive end to conflict in the Middle East, then you could see some of that sheen coming off.
Yeah, but 15-year returns, CAGR 15%. Yeah.
That was the point that I was going to make. But you know which other group of stocks watches gold prices very closely? It's the gold lenders. And there's an interesting update, L&T Finance entering the gold loan business space with 537 crore rupee acquisition. Not a very large one, but it's an interesting move by this company. The company that is being acquired is Paul Merchant's finance business, and Somit is joining in to tell you how this will impact L&T Finance. Somit, morning.
Well, yes, L&T Finance will be entering the gold business, gold lending business right now, and they have announced that they will be acquiring Paul Merchant Finance Private Limited for around 537 odd crore rupees. Now, PMFL, which is Paul Merchant Finance Limited, has a gold AUM of nearly 1,000 odd crore rupees. They have 98,000 active customers and nearly 130 branches spread across 11 states in the country. Now, what are the positives that could come out from this deal for L&T Finance? Firstly, the gold loan can be a complementary to the rural business, rural MFI business that the company currently has. L&T Finance has a large rural base of around 16 million active customers that they have. Also, this will lead to increased share of secured loans for L&T Finance, which will be positive. Currently, if you look at the unsecured loan, they stand at around 51%. So this could come down for L&T Finance going forward. And valuation at which they have acquired this business is also fairly reasonable, around 1.9 times, which is below compared to what the listed peers like Manappuram and Muthoot are trading at. And also this acquisition will be return on equity and EPS accretive, given the fact that this business is profit generating. And one thing that the analysts have also pointed out is the fact that if they would have undertaken this operation, this business independently, organically, then it would have taken nearly 3 years for the company to scale up to this level. So that's a positive coming out for L&T Finance. However, some negatives that could come out from this deal for L&T Finance is, firstly, there would be a marginal decline in the tier 1 capital ratio, as gold loan carry a higher risk weightage of around 125%. Also, this unit that the company has acquired has a high geographic concentration. Punjab and Haryana contribute nearly 77% to the company's 1,000 crore AUM that it has. Also, PMFL is a wholly owned subsidiary of a listed company, that is Paul Merchants Limited, and Paul Merchants Limited is engaged in business of foreign exchange, tours and travels, and international money transfer. And this unit, that is the gold unit, contributes nearly 50% to the total profitability of the parent company. And the interesting part here is this: despite the fact that this unit contributes 50% to the profitability, Paul Merchant is valued at close to 323 odd crore rupees, and L&T Finance is paying nearly 537 crore rupees for this just one unit, which is nearly 66% higher than the market cap of the parent company. Also, there is an ongoing proceeding by the Enforcement Directorate against the parent company, that is Paul Merchant. However, there is nothing on the gold unit, and the ED investigation is on the parent company. So these are a few negatives that has come out from this acquisition that L&T Finance announced on Friday.
Somit, you went at a breakneck speed, so I just want to ask you a follow-up here. Paul Merchants, not too many people have heard of it. So there is a plus and a minus. The plus is the valuation differential. The minus might be the Enforcement Directorate investigation. Is that a good summation?
Well, the ED investigation is on the parent company, not in the gold unit.
Right.
But that could be taken negatively by the street. Also, the fact that they are paying 537 crore rupees for this gold unit, while the entire parent company trades at a 323 crore market cap. This could also be taken negatively, given the fact that the street would be wondering why such a high valuation is compared to the parent company L&T Finance is paying at this moment.
Agreed. But for the listed stock, Paul Merchant, not a very heavy volume stock, but
right.
For the listed stock, Paul Merchant, this is a good deal, but there is an enforcement directorate investigation on them, so the street should be careful about that, right?
Right, exactly.
Got it. Wow. Samir, thanks for bringing this out. I mean, not too many people would know that Paul Merchant is a listed stock and its subsidiary has been sold to L&T Finance at a valuation which is higher than the current market cap of the parent. So bear that in mind.
Considerably higher.
Yeah, considerably higher. Yeah. So just bear this in mind. Paul Merchant might see a bit of an uptick. The caveat though is that it's got some ED investigations going on for that. So that's to be kept in mind. But time for the NDTV Profit watch list. Let's just quickly tell you what are the stocks that are top of our mind. You heard some of them at about 8:10. But here's the summation of the key 9 names that we want to bring to you. BHEL has received an 8,000 crore order and should be up for some reactions today. LOA, of course, on that. Paras Defense, profit is doubled, margins have expanded, could do well. M&M, brokerages have raised the price target almost unanimously, could see a bit of an uptick today. Viatech Wabag has won a 3,200 crore order, EPC order from Saudi on the wastewater treatment plant, and this could be a big positive. And Golium International, the operating profit was up 50%, could be an interesting one to monitor this morning.
Balu Forge was on my list. The profit over doubled in the third quarter. Numbers looked very, very strong. It's another thumbs up. On the losing end, you have Delivery, which was on Neeraj's list, down, and it's not a good quarter. In fact, the analysts have cut the target on the back of that weak performance in the third quarter. Amara Raja, we spoke about this as well. It's a weak set of numbers and it has missed estimates across the board. And finally, Archean Chem. The profit has fallen as much as 50% and should be on your watch list as well because it's a big thumbs down.
All right, the 15th Aero India 2025 show begins today, featuring participation from 80 nations and 26 defense ministers. The event will host several conclaves focusing on new age warfare, sustainable defense manufacturing, and public-private partnership. My colleague Sajit Mangat is at the Aero show joining us live. Sajit, very good morning to you. It's an exciting couple of days set up.
That's right. It's a windy morning at Air Force Station Yelahanka in Bengaluru, where the 15th Aero India show is going to be inaugurated in a while. You're going to see a lot of participation coming in 80 countries. You have 30 defense ministers coming in, and the who's who of Indian defense industry, which whether it's in the public sector or private sector, would be here for the defense ministers CEO conclave, which will happen over the next couple of days here. So it's going to be an interesting thing. The mood here at the curtain raiser was more of the questions ranging from the advanced medium combat aircraft, how far is India from that, and the delay in Tejas, which is being produced and manufactured by Hindustan Aeronautics.
Okay. Thanks, Sajit. We look forward to a whole set of interviews from you. Can you give us a sense of some of the exciting names we might hear?
Yeah, so we're trying to get a hold of Brokerage here. HL is supposed to happen tomorrow. Over and above that, we are trying to get in Boeing and Lockheed, they're setting up here, and a couple of Indian companies, which includes BML, and the Cyient, DLM. These are some of the companies, Zen Technologies and Paris Defense. These are some of the companies that we are going to interview over the next couple of days as the air shows progresses from here.
The visuals from here, Sajid, thanks for that. The visuals from here promise to be very, very exciting. I mean, aircrafts and defense is anyways fascinating a field, and to see all of that live would be quite stunning, really. Or in the background of Sajid's would be quite stunning.
Yeah, some of those pilots are incredibly skilled. You get to see some of those aerial displays of the technology that is being built.
Yeah, so should be very, very interesting indeed.
What's also interesting is where markets will go today. Soni Patnaik joining us for her insight on that. AVP JM Financial Services. Very good morning, Soni. Great to speak with you as always. Just your sense of where we're heading this week and today at the end of what was fairly decent. I mean, it was rocky most of last week, but markets showing some resilience, which you think will carry on?
Good morning, everyone. Thank you for having me on the show. I think, yes, Tamanna, you've pointed it out rightly. There's some resilience. The level around those levels or resistance can be seen around the 23,800 odd levels. The next leg of rally can only happen if it's able to cross this level. Then upside can be seen towards the 24,000 plus marks. But as of now, I see that for a day or two, there could be more of a sideways trend. On the downside, 23,300 to 23,200 is acting as a strong support. It could get tested. So if it gets tested and it's defended, there can be a bounce back from those levels back again towards the 23,600 to 23,700. But considering that how aggressive call writers are positioning themselves at 23,800 and 23,700, there could be some resistance around those levels. And as long as that range is not breaking, the further upside may be a bit difficult. Broadly, structure is still positive. One may say a buy on dips may be still intact as long as the 23,200 support gets defended, and it may remain range bound to sideways at best for the next 2 to 3 days. Similarly, if we talk about Bank Nifty, I think Bank Nifty is also held on to its support levels, but of course only if it's able to break above a 50,500 on intraday basis, it can test towards 51,000 mark. It is holding quite strongly above a 49,500, which is an immediate important support. So if it's not breaking below that, Bank Nifty may be the one to pull Nifty out of the woods and perhaps head towards the 51,000 plus marks. So I think all eyes still should be on Bank Nifty, and maybe the heavyweights give the support to the indices for coming out of the woods, consolidation woods, and see further upside.
What would be your top stock picks this morning, Soni?
So first would be a buy from the metal space, that is Vedanta. We've seen a very strong close in Vedanta on Friday. It has closed above all its short-term moving averages on daily charts, giving a strong intraday breakout. So one can buy Vedanta at CMP and on any small declines up to 452, keeping a stop loss of 445, and a positional target towards 470 to 475 can be seen. The second buy comes in Kotak Bank. So like I was just mentioning, a heavyweight supporting Bank Nifty index could just do the trick. So Kotak Bank has given a very strong breakout and a close on Friday with very strong fresh longs witnessed in this stock. So one can buy Kotak Bank on small declines up to 1950 around in cash levels, keep a stop loss of 1935, and targets of 2000 plus levels can be seen.
So many interesting ideas, and Vedanta seems to be in the thick of things. Friday too, it was an idea, and remember, metals have had a very good run on Friday. Let's see if that were to continue or not. But it's a day which is filled with some very strong result reactions as well. Vineet Bolinchkar, Head of Research at Ventura Securities, joins in to talk about his thoughts on the markets and the outlook ahead. Vineet, good morning. A quick one on the markets first, Vineet. Post the MPC decision, a bit of a pullback, and the US markets haven't had a great Friday either. Are we likely to dip in the near term, or do you reckon that after a consolidation period we might actually move higher from where we are right now?
So we played the MPC wave till the rate cuts were announced. It was already discounted when we saw 1,000-point run from 820 to 800 odd levels. And now with all the elections done, Delhi elections done, we're again gyrating to international, sound bites and macro themes that are playing out. So, we are seeing a lot of money flow into the US markets. The Japanese have committed $1 trillion. They're signing deals for buying American gas. And, a lot of these, and, what suddenly you're seeing is that America is now kind of taking away a lot of the traditional businesses of other players. Like for Saudi, who's Japan was a primary market. So with these kind of moves taking place, you're obviously understanding that the way to go for the FII money is going to be the US market. And unless we offer a compelling case for investment, I think we will take a hit in the Indian markets, and this is going to be led by stocks which are overvalued and cannot justify their fundamentals. So we're going to see a lot of corrective action take place in select pockets in the mid cap and small cap space, because their valuations are quite expensive. And unless you don't have a compulsive investment case for having very, very strong earnings, I think you should be pairing your positions, especially in these markets.
Okay, but having said that, Vineet, and good morning to you, I'm just wondering, in the set of numbers that you've seen in the recent past and in that broader space, what are those names then that have made you say that this is a compelling buy? Because there are some very significant positive surprises also that have come through.
So, as a space, I think PSU banks look very interesting. Okay. They're growing at par with private banks. Their ROEs are there with them. NIMs are also comparable. Cost metrics are also comparable. So I think PSU banks, which are quoting at hefty discounts to their private sector peers, offer a very interesting case. We like Bank of Maharashtra, Canara Bank. It has got a couple of IPOs in the offing, whose value is significantly higher from where they stand. Kotak Bank is one private sector bank which we like because, despite RBI coming strong on them, they continue to grow at double digits. They've grown 16%. They've grown 13% year to date, and we don't see any reason why they grow 16%. And they've guided for doing 1.5 to 2 times growth of the nominal GDP. So you can take off a private bank growing anywhere between 16 to 20%, whereas their other peers or private sector banks are really struggling with growth. So I think Kotak Bank is one idea which comes to mind, which is a contra idea. Not many people are talking about it. And we've just reinitiated on that with a double target for the next 24 months.
And it is in fact Sony's pick as well, Kotak Mahindra Bank. The stock seeing delivery buying at the end of last week. So a lot of interesting factors proving to be a confluence for this particular stock at the start of trade. Certainly keep it on your radar at the start today. Sony, anything from the broader banking space that you would want to pick up at this juncture? I know Kotak is your pick, but anything from the PSU basket?
I think from the PSU basket, I would still keep it as a wait and watch. Not a lot of strength or that confirmation of data can be seen. Could be SBI, could be PNB, but neither of these stocks have given you that confirmation. Rather would wait because SBI, on a very contrary play, it has given sort of a breakdown. And if it continues to stay below 750, you can see it testing its lower support levels towards 700 to 680 mark. So it won't be the exact price, a right price range to accumulate at this level. Perhaps if it's able to cross the 750 mark, above that, it may show you some trend reversal. But as of now, it's strictly a wait and watch. And so are the rest of the stocks in this space.
Just let's take a look at a few other stocks that you should be tracking in trade today. Varsha is joining us in with those lists. We're trying to cover as much as we can for you before we hit the open of trade.
Thank you, Tamanna. So let me start with BHEL, wherein they've received 2 orders. One is 8,000 crore order, which is for a thermal power station, and the other order is into renewable energy project, which needs to be executed by 2030. Now, order book as on 31st December standard around 1,60,000 crore, and order inflow was up 33% for the company. Next on my list is Sarda Energy. Now, if you see, they've announced their Q3 numbers, wherein overall good set of numbers, but the highlighting part here is EBITDA, which doubled. Now, the margins, if you see, were 28% versus 20% last year. This is due to decrease in expenses, the cost of material, which now accounts to 55% to the overall revenue versus 61% last year. And lower tax outgo also helped in growth in net profit for the company. Then on my list is Gokaldas Exports, wherein good set of numbers. They've crossed 1,000 crore income for the first time, and they expect volume business to pick up in both the acquired entities, and the strong order book and better execution has resulted in improved performance over the previous quarter. But if you see the margin, so margins were at 10.5% versus 11% last year. Now this is due to cost build up in the MP unit to meet the execution and delivery timelines for the new export orders executed in Q3 FY25. Last on my list is Archean Chemicals. Weak set of numbers. Actually, in last quarter, company was facing challenges. They also acknowledged headwinds due to logistics challenges and cyclonic disruptions, which had impacted inventory and production. But they were expecting a steady demand going forward. We do have con call. Let's see what company has to say in their behalf.
Yeah. Okay, Varsha, thanks so much for bringing us those details. Now, I'm just trying to understand this, Vineet. There are a few numbers, and then I'll, of course, want Sony to come in on what the chart patterns of some of these could be. But today, Vineet, there are some smaller names, but which have come out with some blockbuster numbers. Sarda Energy was one. Balu Forge is another one. Very strong numbers. We saw some significant margin shore up from Brainbees from 3.1 to 4.9%. That's exceptional, and that helped them reduce their losses as well. You track any of these, Vineet?
Sarda Energy is what we would be interested in. Definitely the steel pack as well as the energy sector is going through very strong moves, and we believe that this company can continue to do well. The important thing out here is that commodities are expected to do well, and this commodity plus power play seems very interesting to us.
Okay. Sony, can I very quickly ask you 30-40 seconds? Any of these, a Balu Forge, this thing, a BHEL 8,000 crore order, anything that stands out on the charts for you very quickly, Sony?
So I think for right now, BHEL is not looking that strong, but Balu Forge on the other hand is looking sort of decent. One can actually see it crossing the 20 EMA resistance. It can head towards a 680 mark, and the immediate support is around 630.
Thanks so much for that. We have to slip into a very quick break, but then we've got Market Open up next. And in fact, we've got a lot of stocks that we still have to talk to you about, so do stay tuned.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हैं।
Welcome back. You're watching India Market Open, and we've spoken about several stocks that you should keep on your radar at the start. And I don't think that we can speak enough this morning about Mahindra and Mahindra. So let me go across to Vineet Bolinskar to find out what he thought of the numbers. And of course, there are so many brokerage notes that have come through upgrading the stock or increasing the target price. Vineet, were you as positive as they seem to be?
So, what we've seen is a metamorphosis of the group and particularly its PV business. They've been doing remarkably well, gaining mind share and customer market share also. And we believe that it has become a formidable play to Maruti as a large manufacturer who can, really challenge Maruti's market share. So we think that, as the market increasingly goes towards the SUVs, we are already seeing, it become a very, very dominant play. Between Maruti and M&M, I believe that they offer a very, very refreshed portfolio. Maruti's portfolio is looking a little bit vintage. And, considering the fact that, Indians flirt with new portfolios, new logos that get launched, I think M&M is going to have a dream run going ahead.
Also in the automotive space, an update that I read is on Bajaj Auto and the fact that, Vineet, it is heading into the electric three-wheeler space. And I understand that it's a very unorganized market. But I'm just wondering, with its suite of products and the fact that the three-wheeler for them is actually one of their highest margin products, if they add this new product by the end of this quarter is what the expectation is, does it change things materially for them heading into next year? 45,000 units is the estimated size of the market.
So, the electric two-wheeler market is now at an inflection point. And we think that going ahead over the next 3 to 5 years, the market is going to grow at 30 to 40% going ahead. It can probably even double. So out there, I think Chetak has caught the fancy of the EV buyer. And we think that, as EV contribution goes up in your portfolio, the value of stock that you sell also goes up. And although your margins might remain a little subdued to an extent, but what is going to happen is that the EBITDA is going to mirror the top line growth. And faster moving EBITDA will mean, operating leverage taking place. And that is where Bajaj can benefit from that. But, at this point in time, we think that, whatever we have built in our business model, we believe that it's still a hold at this point in time.
So as we wait for the first set of rates to hit on the pre-open session, I want to ask Sony if you're excited about Mahindra and Mahindra at all on the charts with the kind of brokerage notes we've seen. Is that something you've been tracking?
I think the only auto stock that actually has been performing quite strongly. So certainly yes, and it looks quite strong for an upside move towards a 3,300 mark on short-term basis. So one can actually accumulate at current levels on any dip up to 3,150. I think that's the ideal range to accumulate. It has strong enough support towards 3,100, 3,080 range. Should hold that level and look forward to a target of 3,300. Even if it's able to surpass that levels, it can continue towards a positional target of 3,500 plus.
Okay, just in terms of, because you spoke earlier about how Bank Nifty is the bet compared to Nifty, I'm just wondering, within some of those counters, within the whole banking space, what are you really liking? I think you mentioned Kotak Mahindra Bank earlier, and that's doing fairly decently in the pre-open session. But anything else that you have on your radar in terms of banking stocks?
I think, Tamanna, apart from the Kotak Bank, I would still stick to only the private banks which have been looking strong on charts. The second bank would be HDFC Bank. Now, that again is a stock which has moved above all its short-term moving averages, and it had actually started to show a very strong rollover sign for February series. So the whole series is expected to perform on a positive side for the stock. Any dip towards 1,700 is a very strong support. One can accumulate around these levels, and it's wise to accumulate on that dip only. 1,650 can be the stop loss for a positional target. It can again head towards 1,760 to 1,800 levels.
Okay. The other aspect is, of course, we know that the metals will do very well. The other stock which could actually be in focus, aside of BHEL, is Mahindra and Mahindra. Great numbers. Tractor guidance raised. I don't know, is that positive for escorts? I don't know. But tractor guidance certainly raised, and all brokerages hiking the target prices. So consensus, at least the 3 or 4 that I've seen. So watch out for both M&M and escorts. Now, Vineet Bolinchkar, I haven't quite seen your note here, but I would love to know what did you guys think of the M&M numbers, and is there upside there? Also, does this tractor guidance getting raised augur well for escorts? That's my key question. You spoke briefly about M&M. Is there more upside and you would buy it at a higher level today? Part one, but part two, what about escorts?
So, this year the Rabi crop is expected to be bumper. And the fact that, it's quite a well-penetrated market, the tractor market. And here when M&M is coming up with guidance, which is very, very positive, I believe that escorts will also benefit from this. And keeping this in mind, I think you should be looking at escorts too. As far as M&M notes are concerned, our note will be out today. But we believe that, very, very strong numbers. I'm in sync with what the street expects. And as I mentioned to you earlier, that important is that M&M has caught the mind share of the Indian PV buyer, and that is going to translate into market share gains for M&M, which will help it to grow its portfolio in a market that is stagnating.
Vineet, do you guys track Viatec Vabag? And if so, what did you make of this large order win that they have gotten? 3,200 crores EPC order, takes their order book much higher. Any thoughts?
See, Vabag is a very, very asset-light play. And this order book will, help it gain some credibility back because, there was a lot of back and forth on the Saudi Arabian order. And with this order coming in, I think more momentum will come into this stock and it can rally from here further based on purely that the Jal Board Nigam is expected to be one of the biggest infra spends of the government in the coming couple of years.
Vineet, Fortis numbers looked quite good to me. Across all the metrics, it's beating and the occupancy rate has gone up. You have the revenue per operative bed is also looking good. The growth there, close to 10%. Did you look at the numbers? Did you also think that it's positive? And do you think that the hospitals that are listed should be looked at particularly when you talk about the healthcare space?
So, when you're looking at a defensive portfolio building, I think hospitals is one of the places to get into. These hospitals are differentiating themselves in a very strong way. Here, to my mind, one of the stocks which is superlative in abilities and skills but underplayed in the market is Shalby Hospitals. They have just put out a note where, finding support in the international markets is taking too long, and one of the patients found his way towards Shalby Hospital for his transplant. So I think that this segment is going to do very well, and Shalby is one stock which is underrated in the market. It has potential to kind of give you better returns than the other discovered stocks. They also are operating at slim, occupancies of around 48-50%. They keep adding capacity. And, even at these occupancies, they have got double-digit margins, one of the best in the industry. And so I think that this is one bet which should be doing very well in the coming days.
Okay, Vineet, point well noted. So bear shall be in mind. Vineet Bulinjkar believes that's a stock that he likes more amongst all the others that have come in. Now, we'll do two pieces with Harsh and then take Soni Patnaik's view on both of these. First, the big brokerage call for the day, and that is the Axis Securities view on Kalpataru projects. Harsh, good morning, and let's start off with the first one, this Kalpataru projects one.
Well, yes, engineering and construction and Axis Securities is bullish with regard to Kalpataru projects, among others. And I'll focus in on this one because what they're saying is that the order book is strong at 60,600 odd crores, and 45% of this is an overseas order book, and it's grown by 2.2x since FY21. So very strong growth on the order book count. That's the first one. Of this order book, just trying to break it down further, transmission and distribution is around 22,000 crore, which is again very large and strong, and there the demand continues to remain robust. You've also got levers like water and railways. Both are expected to benefit from the upcycle. Strong track record with regard to execution, of course, is something that they are known for. Penciling in a growth on the top line of around 16% FY24 to 27. The company, what Axis Securities believes, is conservative in order selection as well as intake. Margin compression even during COVID was to the tune or was bottomed out at 8% odd, and therefore in terms of performance versus other companies, this one stands out in that sense. The divestment of non-core assets plus the QIP, all of that is expected to aid numbers. Working capital requirements are expected to be lower. Debt equity is healthy as a result of all of these measures, and therefore they are valuing this at around 16.5 times FY27 EPS. They're saying that it's largely, the valuations are largely in line with 2008 bottoms even now, and therefore very positive. The only risks may be execution delays, slip up in capex, and a promoter pledge starting to reverse could well lead to a re-rating on the stock. That could be big.
Okay. So we'll watch out for Kalpataru projects. Not a big reaction in pre-open. Let's see if it starts off later on. But there's a whole host of new listings when the lock-in period is expiring this week. And Harsh, give us the key ones to watch out for.
Well, yeah, big ones today. And I've broken this up for better context to try and break down the key ones. And, any stock which has rallied post the IPO, I believe, will well be in focus, because that will leave the counter open as well as the anchor shareholders open to some bit of selling. And therefore, you might want to keep your eye out on something like a Unicommerce, where the gain is 40% and 44% of outstanding shares are up for lock-in expiry. Another one is Standard Glass, where the stock has rallied 24% and 2% of shares will also be up. While small in terms of the lock-in expiry quantum, the percentage is quite small in that sense. Quadrant Future Tech is the other one, where the stock has really done well post the listing price, and the gain is around 140%, 6% of the shareholding. This is free float, mind you. This is a total shareholding, mind you. And therefore, some large amounts in terms of lock-in expiry. You're looking at Niva Bupa, where 8% gain, just about okay, but 4% of the shares will be up, and therefore that stock will well also be in focus. Some of the others are largely not doing too well post listing, and therefore while a large quantum of outstanding shares are available and lock-in expires, they may not have as much of a reaction because the stocks are already not doing as well, and therefore some of those will be in focus. I want to also try and focus in on expiries later this week. SBFC is one of them. 46% odd gains and 21% outstanding shares. This one could well be in focus as well. Cap Infra, well, just not doing too well on exchanges, and therefore this 26% expiry, not sure what kind of a knock that will carry on the stock. And Concord Bio, where of course it's a 2023 listing, but 20% share expiry and very, very healthy gains even over the last 2 years may well leave this stock exposed as well.
Interesting. So it's going to be a big factor this week, apart from everything else that we're talking about. Thank you for that, Harsh. In fact, I want to get a quick view from Vineet on this. If these lock-ins are ending this week, and of course you'll see pressure just from a supply-demand perspective on some of these counters, would this be seen as an opportunity by you, Vineet?
So, speaking of particular stocks, I think Unicommerce has displayed some very strong numbers. Post-listing, the stock price has corrected quite a bit. It opened somewhere, it's seen a high of 250 odd. I think that stock can, as a proxy internet play, be a very good opportunity to buy once the selling pressure is absorbed. Once this lock-in opens, you need to figure out how the, buying, selling is happening. And if you see pressure, just wait for a while. But, later on, this stock can become one of the very good percentage gainers of the year.
The other one to monitor is VA-Tech Vabag. We spoke about it, 10.7% higher. And Sony, 2 or 3 things, right? One is that Kalpataru projects, which was the Access Securities note. 2, any of the other stocks that Harsh spoke about. Or 3, if you don't have a view on any of those 2, then give me a view on VA-Tech Vabag, which is bouncing back today, 10.7% higher.
So Neeraj, first would be the Kalpataru project. Stock has spent 14 days below its 200 exponential moving average. It is just reversing from 1,000 support. Possibly if it's able to cross 1,060, 1,065 mark on intraday basis, the stock can again head towards 1140 odd levels, and it looks like a decent reversal from current levels. Just wait for the 1,060, 1,065 mark to be taken out on intraday basis before initiating any long positions towards the 1140 target. Much of the stocks that Harsh spoke, I was able to check only 3, and out of the 3, Concord Bio was the only one that is actually looking decent. So I think the stock is still above all its moving average, and it's holding to a good support of 20 to 50. Can supposedly test higher towards 2450, and above that again 2600 levels maybe tested. So I think it's decent to hold at current levels with a 20 to 50 of a support.
Sonia, I'm wondering, after the pre-open session, if anything is catching your eye, because this is a completely flat kind of opening that we're setting up for, any action, if at all, in auto stocks. Is there something that you are finding interesting?
So I think, Tamanna, for auto, I would still take a wait and see. Maybe, there's one particular stock apart from NMM, it's Hero Motors, which is just at the cusp of breaking above its 50 exponential moving average. If it's able to hold above the levels of 4320 on intraday basis, there's a possibility it can head towards a 4400 mark. So I think this is only stock that I would keep in radar from the auto space.
So Sony, what is your top call for the morning now? I mean, you gave us 2 calls, but now that the pre-open rates have settled, you have some idea of where the stocks will open. Based on that, what is your top call for the morning?
So it would mean Bharti Airtel. So Bharti Airtel, I think, is still holding quite strongly above a 1640 odd support, and it continues to be hovering around its resistance. One can buy Bharti Airtel if it's crossing a 1710 on intraday basis. It's a conditional buy. Look for targets towards 1740 for intraday, and only above 1710 you can keep a stop loss towards 1695.
So only buy it above 1710. If you do that, the stop loss is very important. Remember, viewers, 1695 is the stop loss. A lot of successful traders place a stop loss before they keep the targets out there when they're taking those trades. But flat start in offing, very specifically a lot of stocks, the VA-Tech Vabags, BHELs of the world, which have gotten order wins, could do well. Maybe Sarda Energies of the world on results could do well. But let's see if insurance stocks move the morning or no. Extremely flat opening. In fact, a lot of fair degree of red on the bank nifty actually relative to the indices, but 0.2%, nothing dramatic. IT, mid caps, small caps, very quickly before we get the heat map up on the screen. Flat for IT index as well, and mid caps and small caps too starting off flat. Seems to be that the bank nifty is the biggest loser, if you will, about 1/3% lower. Let's get the heat map and see. Well, metals are taking a bit of a pull back today after having a very steady and strong Friday and the whole of last week, by the way, with Hindalco, JSW Steel, Tata Steel, all of them sulking. HDFC Bank is the principal culprit on the Nifty and the Nifty Bank, 1% lower. Reliance follows suit, 0.5% lower. Wipro, Tech Mahindra, so IT too, slightly sluggish. What is doing well, incidentally? Bharat Electronics, that's also won an order, by the way, 800-900 crore order. Not very large, which is why we didn't point it, but it's having its reaction on the stock. Eicher, Mahindra and Mahindra, Airtel, which was Sony Patnaik's call, is interesting as well. Eicher 1.2, M&M about 1%, but a lot of red really. So bear that in mind. Just before I hand it over to Tamanna, can we pull up Airtel, the stock price? Because Sony had said that you can buy it above 1710. I wonder if the stock is doing that. Well, for now, 1691. Let's wait and watch if there is more in store here, Tamanna.
If you look at the list of tariffs that India and the US have, there should not be too much of an impact of what US President Trump wants to do on Tuesday and Wednesday, which is retaliatory tariffs. But clearly, in terms of mood, it's weighing in on the markets. I mean, there's no other reason for this kind of a mood in the first couple of minutes. And the worst of the corporate results are also behind us. You've had tax cuts, you've had 25 basis point rate cut, but there you have it. Look at the small cap 250, that's even a worse hit. Not alarming, 0.5% down is okay, but directionally you're seeing weakness in the markets as well. Let me pull up the sectoral heat map for you for just a second, and you'll possibly see much more red than green. Yeah, there you have it, only the India VIX up in the green. This is not something that we like. Nifty Auto managing to just about keep its head above water thanks to an M&M and a Hero, if at all. Positive brokerage notes there. PSU banks also pretty much flat, but it's healthcare which has dipped this morning. Big recipient of tariffs, if there are retaliatory tariffs, perhaps one of the big export sectors from India to the US. Metals feeling the heat. Remember, tariffs of aluminum and steel have been put into place from today at 25% on imports into the United States. There are no massive exports from India to the US on both aluminum and steel. Having said that, you still have a sentimental hit out there, 1.5%. Let's go to specific stocks and show you what's happening there. Stocks that are on our watch list as well. I'm just going to start with Hitachi Energy and BHEL actually. There's an energy order from the government of Rajasthan. BHEL doing okay, Hitachi Energy completely flat. VATech Warburg, a stock that Neeraj pointed out this morning. Again, an order from Saudi Arabia for 3,251 crores, about 10% up on that stock. Results watch, let's look at a Gokuldas. Seemed like a decent set of numbers, flat. Amara Raja, not a good set of numbers, is down. Sarda Energy was good, about 2.5% up. We should also look at Confidence Petro, Jyoti CNC and Shelley Engineering, all of them with numbers. Jyoti CNC and Confidence Petro were not that great. Jyoti CNC exceptionally poor numbers. Shelley Engineering was fine, but the stock not seeing too many takers. Clearly, it's global factors which is weighing more on the mind of investors right now than anything else, I would reckon.
Yeah, and some very sharp reactions, Tamanna, on an individual stock basis. Of course, you can see that the mood is a little gloomy at the start of the new week, and we pointed out at the start that there's a lot that will play out on the global stage. But one stock that is doing well today on the back of earnings, and we pointed this out earlier as well, is Sarda Energy and Minerals. And I just want to understand from Vineet whether he likes, first of all, or he's paying close attention to the metals pack, or specifically on the mid-cap names in the space. If not Sarda immediately, would you like any other players, and what would be the approach that you would have to invest in some of these?
So, have a look at Lloyd Metal. It may seem optically expensive, but, the company is doing a lot of value addition in terms of, building capacities, forward integrating, and they have got very, very strong cash flows. Their FE content is some of the best in the world. And, you're going to see very, very strong EBITDA margins and strong numbers play out from this company over not just a couple of years, but over the next 5 years. So very, very strong, play on the metals pack, and it stands out as an outlier for me, particularly given the fact that the other value has already been discovered. Here is one stock which is undervalued, glaringly open that their entire capacity expansion of close to 25,000 crores is going to come solely from internal accruals.
Wow. Okay. 41 times earnings trailing, but as Vineet said, I think he expects higher EBITDA margins, and that could help the stock going ahead. So bear that in mind for Lloyd's Metal. Metals have started off weak today, Sony, after having a splendid last week. So people who are long, and if the stop losses are near around the current prices for any of the steel companies, or even Hindalco for that matter, or Lloyd's Metal for that matter, would you recommend taking the money off the table?
I think once if your stop loss is hit, certainly must exit and wait for the levels around where the buying or recommendation must take place. Again, if those levels can be seen on price on charts, then only one can reinitiate. But then as a discipline matter, when the stop loss is hit, one must exit. And if we talk about Hindalco, then Hindalco is also just hovering around its support level 600. I wouldn't say exactly exit, but then if it's able to break below 595, then it can test lower support levels towards 580, 575. Now that again is another support. One can actually hold up to till 575, average around there. Again, when it rebounds, one can have the cost lower. But as of now, just maybe wait for a while. Markets have also opened with a gap down. Looks quite choppy. If the stop losses are hit, then better to exit for the intraday positions.
Well, clear downticks here, and of course for a space which has run up a little bit on not a little bit, quite a bit really, 6.9% gains last week, so clearly seeing some pull towards gravity is the metals pack, so bear that in mind. Something else, so I was looking at the kind of stock moves that we've seen from amongst the result reactions or otherwise, nothing too dramatic except for VATech Vabag, which is up about 9% higher. So bear that in mind. Actually, did we have a chance to talk about this, Vineet Bulinchkar? VATech Vabag got punished. Okay, I think we have spoken about it, Vineet. So, okay, I'll leave that out. First Source Solutions, Vineet, any thoughts here? Has seen a couple of upgrades amongst the better results in the tier 2 IT-enabled names. Any thoughts here?
So, I'm clearly staying clear of the entire IT related markets. We've done our internal calculations. We think that the entire IT space, although it has been very, very defensive and been a, beneficiary of the, depreciating rupee, I think that the valuations are not too comfortable for us. And we think that there is sizable corrections to be had in terms of fair value, and hence completely staying away from that fact.
Okay, some other stocks that are in focus that this morning and we need to look at. I mean, I'm just wondering, Vineet, in terms of and broader view here, because this seems to be the big issue on this new set of tariff announcements. Ideally, Indian metal companies should not be that badly hit. Our exposure to US markets in terms of exports are limited. But you are seeing this as a sentimental flow. Is this going to dominate for the next couple of days, in your view?
See, this is a disruptive event that is happening. You may not attack India because, in my opinion, India has already negotiated quite a bit with the US government, and we have seen a lot of lowering of basic custom duty in the budget. Just for examples, PVs and bike manufacturers, there the custom duty have been slashed significantly. So I think some of the things have been taken place, and look at the body language. He has not called out India at all. And, when Mr. Modi is going to the US and signing deals with him, Mr. Modi will only go there if everything has been backward work has been done. So you can say that there will be not anything negative coming out for India. But if the Trump tariffs are aggressive against the Europeans and against the other countries, the ones who are going to get hit directly and indirectly are the Chinese. Because suddenly you will have the Europeans and the rest of the world scampering away from China, to meet their trade deficits with the Americas. And if that were to happen, commodities will take a hit because there will be massive job losses in China, and China will devalue its currency and sell things at a song just to keep their economy and afloat and vibrant. So these are some of the disruptive events that are playing out. And in that collateral damage, we will see India also move down. But over a period of time, India will emerge much better than the rest of the world.
Soni, I am wondering if there's anything in the metals pack that you would pick up right now.
So I think I would wait, just an update also that the morning that I'd recommended on Vedanta, stop loss seems to be hit. So I think the trade may have gone wrong over there. So I think it's just wise to wait and watch. Even the markets seem to be correcting in a bit, and there's a negative divergence coming on daily charts. So it's better to wait, maybe look for some short side trades on those levels or other sectors which are actually looking weak as of the morning opening. And, it's better to just wait and watch for the levels, and we'll see how it goes about the day.
That you pointed that out. We are going to be speaking with the management of Zaggle very soon, and the stock is reacting very sharply on the downside to the earnings. I'm not sure, Vineet, if you have looked at the numbers or if you tracked the company, but any comments here?
So, I met the management a couple of times trying to convince myself because the model seemed very attractive. But, when we were doing the cash flow numbers, we were finding there were a lot of deficits building into the model. It was cash negative, and hence we stayed away from the counter. Since then, the counter has more than doubled, and it's a lost opportunity. But when it was not convincing, we did not get into it. Still remain to be convinced on the model. Happy to engage with the management on this.
One thing that I've not checked with you is on L&T Finance, Vineet, and it's a significant update from the perspective of strategy. This is a company that is venturing into a gold loan space, which I think a lot of lenders are testing the waters on and have in the recent past. What do you think about the move, about the acquisition that it has announced?
So, gold loan is obviously going to be a product which is going to find favor with a lot of people because the value of gold that Indians earn is simply going up with the rallying price of gold. Internationally, if you see, the bullion market in London is going short gold. Paper discounts are going up for ETFs and certificates in the US. So it's clearly telling you that gold is going to become a certain form of currency for central banks going ahead. And as a strategy, it's a step in the right direction. And you have seen the company evolve itself over a period of time, and they're adding new products and getting into areas which are seen as high growth. Acquisition is a faster way to getting market share, and they should be doing well going ahead.
Okay. Thanks, Vineet, Soni, both of you for joining in today. Really appreciate your time this morning. Let's shift focus to Zaggle. The company, of course, reported numbers and strong revenue growth. Harsh first joins in with the details before we go to the management. Harsh.
Well, yes, very strong set of numbers, Neeraj. They've also upped the revenue guidance for FY25, and that's a key positive. Earlier, revenue guidance was expected in the band of, or rather, revenue guidance was 45 to 55 odd percent. Now they've hiked it 58 to 63%. That's the one big positive. But why is the stock not doing well? Because you're seeing margin compression. If you pull out the margin numbers, they've come off sharply, both YOY as well as QOQ. You're seeing slight bit of decline with regard to margins. That's one area. Why are margins coming off? There are higher costs associated with the business, and there are also higher, so basically on the gross margin front there's a dilution, and there are higher costs associated with employees, and therefore those couple of factors weighing in with regard to the numbers of Zaggle. The second piece is with regard to depreciation. A sharply higher depreciation number has led to a dilution in EBIT margin, which I believe the street isn't too happy about. So those couple of factors holding back the stock, at least in trade today. The other piece is with regard to margins and the margin guidance. Curious to know how quickly they'll get to that teens in terms of margins. They've guided for 14 to 16% margin in the next 4 years. And therefore, what's the journey like over the next 4 years is something I'm curious to know.
Let's ask this to Avinash Godkhindi. He's co-promoter, MD and CEO at Zaggle Prepaid Ocean Services. And Avinash, good morning and thanks so much for joining in yet again. This is Neeraj here. We were trying to think about what is it that has led to the disappointment on the bourses today. Your stock is down 10%. And you raised the guidance. You've spoken about nearly doubling the revenues in 2 years' time. So we're trying to scratch our heads, and except for the margin disappointment, nothing else seems amiss. Is there something that is in the notes or something that you've announced or going to announce, Avinash, which might be leading to this massive disappointment on the bourses today?
Good morning, Neeraj. We are very happy and buoyed by our results. So I don't know why the response is the way it is. We take it with humility. It's the market. Market is ultimately the final decider. But these are short-term movements, so honestly, we don't worry too much about short-term movements.
No, Avinash, completely. The idea was only to
Yes.
check if there is something that we've missed, because optically our research seemed to suggest that most things except for the margins seemed okay. So let's first dabble with the good ones, right? Yeah, the numbers that you've clocked in the quarter, and the fact that you've raised the guidance, right, for FY25.
Right.
Now, what gives you this confidence? Tell us a bit about this.
Oh, I think just the buoyancy in the business, these are our best numbers, Neeraj. And I think we obviously see the momentum kicking in, the kind of partnerships that we are signing, the kind of contracts that we are signing, the momentum in Zoyer, and there's a module in Zoyer called Brome, which is branch recurring operating monthly expenses. And we've had some phenomenal brands come in on Brome in a very short time. The product went live, first sale happened about 6 months ago on Brome, right? And we have Subway, we have Blinkit, we have Zepto, we've got, Dr. Batras, we've got Berkowitz, we've got a whole host of these large names who just lapped up this product. We have a bunch of NBFCs, we've got large retail chains, very large retail chains, and they've just loved the product. So that's great validation for us. So overall, if you look at our momentum on the fleet side, where we launched that about a year ago, so Torrent's live, we went live with a big, go live on Think and Pratham Gas, where the chairman himself, launched the card. It was 4-city launched. It was a big event. It's a big success. We have a couple of other large names who have signed up for our fleet solution. So we are seeing momentum not just in our, core business, but also in the newer areas. Core business continues to do phenomenally well. So that's something which gives us a lot of confidence about how the future looks like.
So here's my question then. For 9 months, your revenue growth is about 78%, right?
Yes.
And you guided for the year growth of 58 to 63. Now, does that mean, therefore, Q4 will show that substantial downtick relative to the growth that you've shown thus far, and which is why the street may be a bit disappointed?
See, Neeraj, ultimately, we are always going to give a guidance as by nature as a company on the conservative side, right? We will not give a guidance which, we believe is, likely to happen. We'll give you a guidance where we are 100% or 99.99% sure that this will happen, right? That's our nature as a leadership and as a company, and we will want to stick to that. So, will the numbers stay in this band, or will we outperform a little? That's only time will tell. The second thing, of course, is that Q4 is always the larger quarter for us in terms of revenues and all numbers. Q4, Q3 are the biggest, and that Q4 tends to be a little higher. So, on that larger base, delivering that larger growth is always a bit of a tougher ask. So we want to be clear about what we can do, and we've been very calibrated in the way we've increased our guidance through the year. As soon as we've got clarity about what the number will look like, we will share that guidance with the street.
Avinash, good morning. Tamanna here, and great to speak with you. Let me come to you on the margin question and what, in your view, has eaten into margins. In some part, it is employee expenses that you've mentioned, etc. But can you detail that? Because your cash PAT margins down about 20% year on year. EBIT margins have also come down. Where is this hit from?
See, the EBIT margins, Tamanna, we I think it was covered in by your analyst as well on the show. It's a higher depreciation cost of about 1.5-2 crores, right? And that's because we bought a new office space in Hyderabad. And obviously the depreciation is there, right? We had multiple offices in Hyderabad. We needed to consolidate that. And that's an asset that we've acquired. So that's something which we believe is a big positive for the business, and it's going to help our business, grow much faster and for collaboration to be much better amongst teams, right? So that's one part.
Yeah, so that understood. But what about the incentives and cashback? You can just elaborate on that point.
The incentives and cashbacks, the growth is in line with revenue. It's not that the percentage of incentives and cashbacks have materially increased. It's just that revenues have grown and cashbacks also have grown. And you're seeing momentum in the business, which requires certain amount of engagement. As you sign up new corporates, for them to start using the platform, their users, their employees to start using the platform, the first set of users need to be given some sort of a carrot to switch, right? If you're a avid user of one particular payment instrument, if I need to get you to switch from that whenever you make a purchase on, say, Zepto, you need to register the card, or an OTP will come. So there is some incentive that needs to be given, but this is nothing out of line in terms of what we have planned or what we have seen. So we are very, very clear in the path. We are very clear in the direction. And we're very happy that we're progressing extremely well in that path.
Okay, so there's this one-time depreciation hit. There's cashback and incentives, which is part of business cost. There are these ESOP, etc., other costs for employees. So just help us understand then where your margins will settle at.
So Tamanna, look at it like this, right? Our 9-month numbers, the profit, the PAT has grown 123%, right? I don't know if that number has been looked at as much. So even though our revenues, we are giving a guidance of growth by 58 to 63% for the year, the profits overall till date, and this is actual numbers, has grown up by 123%. So I think I would draw attention to that as well. And EBITDA guidance, we've given an EBITDA guidance that in the next 3 to 4 years, we will be in the range of 15 to 16%. That's something that we've already given a guidance. And obviously, it's not going to be a steep step up one day overnight. It's going to be a gradual ramp up. So every year we'll see that. And probably there'll be a little bit of a arch and there's acceleration later, but we will continue to focus on improving our margins in the coming quarters.
Fair enough. The 9-month figure is truly good, which is why I just want to get a sense of directionally where you're looking at margins, Mr. Avinash, because you're in a business where you have so many announcements in terms of new companies onboarded, you're on that growth path trajectory, and that's coming as a cost, like you just explained. You have to give incentives for people to switch. So what is the margin picture and guidance looking like?
Margins, as I said, in 3 to 4 years, we'll be at 15 to 16%, and it won't be a gradual, it won't be a step up. It will be a gradual increase. So you will see margins expand in the coming, years as we go along. That's something that we are clear about. And this is not a business where margins have always been suppressed. Historically, we've had higher margins. It's just that in the last 2-3 years, we've focused a lot on growth. Cash flow has been a focus, and we've gone cash flow positive this year. Last couple of years, in our entire journey of about 14 years, we were always cash flow positive. A couple of years, we invested more post the IPO, and cash flows went negative, and we are back to positive cash flows now. So same with EBITDA. EBITDA has taken a little bit of a dip in the last few quarters, and we will come back.
Okay. Well, we wish you all the best for that and more. Avinash, thanks so much for speaking to us today.
Thank you. Thank you so much.
Right. Well, moving on, we spoke to Dr. Anish Shah, Group CEO and MD of Mahindra Group, about the company's PV sales numbers and what's the outlook for the quarter coming by. Listen in to a small slice of the conversation as he talks about what will happen in the quarter to come, more importantly for FY25, FY26.
Yes, it does seem like clockwork, but I can tell you it's been a tremendous amount of effort that's been put in by all our associates. This is a result of multiple businesses firing on all cylinders. We've been talking about that for some time. We are seeing that in the numbers. And that is what has enabled us to be consistent in our growth and provide a growth of 20% quarter over quarter, or rather from the quarter the previous year, as well as on a year-to-date basis, we have grown 20% over the same time period the previous year.
Yeah, I want to start off with autos, naturally so, and some interesting observations really. Okay, actually, before I get to that, can I just quickly ask you, you've done 14.4% margins, your console margins aided no doubt by what the tractor division is doing so well. We just heard the announcement that China has said that they are not going to let the property sector slump, which arguably means that metal prices could have found a bit of a bottom. Could there be input cost pressures that might be difficult for the industry to meet if indeed steel prices were to end up higher? Or do you reckon that it is something you'll be able to take on your stride?
So Neeraj, if we look back at the chart that we presented, over time in the tractor business, we've been able to maintain margins despite fluctuations in industry. The chart did not show commodity prices, but that's something that we have been able to manage over time as well. The auto business has seen growing margins. This is, again, a function of great growth in the business, as well as very strong operational excellence that has been achieved by the team. And there will be challenges along the way. We have seen many challenges, and our approach is to ensure that we are ready to face them, we are agile in terms of addressing them, and we will see quarters where input prices go up or where demand has slackened a little bit, but I think we're well prepared to be able to address those.
Got it. Okay, let me try and talk about some estimates. Now, our math suggests that FY24, I'm talking about electric vehicles first, FY24, the market size was probably 90,000 odd vehicles. We've probably not seen dramatic growth in FY25, and my analyst tells me that on the presentation and in the conference, you guys have said that you will do 60,000 in FY26, nudging up to nearly 1 lakh in FY27. Now, do you expect the market to grow as much, or do you expect that you will essentially grow maybe at the expense of some of the others?
It's going to be a combination of both. The market will expand because the quality of these products is something very different from what we've seen in the market today. And that's something that will create a market expansion. Some of it will also be gaining market share from others. But if you look at which one will be greater, my sense is market expansion will be greater, because this will also enable us to get a much higher penetration of EV in the Indian auto market, and that's something that will continue to happen over the next few years.
Yeah, and because you started exporting as well, I reckon that the South African exports are EVs, and correct me if I'm wrong here, but I'm just trying to understand. But you're starting off on a low base and a low number, forget a base, but a low number relative to what, let's say, Maruti does in an annual year, right? So I'm guessing the sky is the limit, if you will, for you. How do you expect the export market to be for your vehicles, which are now being very well received in the Indian market?
So South Africa is right now about the 3XO, not yes. EVs as yet.
Okay.
EVs will be focused on India because we do expect a lot more demand than what we can service, and it's important for us to be able to meet that demand in India before we go to markets outside. But there is huge opportunity for us outside, and that is going to be one of the further growth vectors that we have in the auto business, because we are starting to see a lot more pull and demand for our products in international markets, as we have seen in India. We have not been able to serve international markets well enough so far because we've been focused on serving our customers in India. But as we've increased capacity, this is going to be clearly a growth vector for us.
Not a bad problem to have, Dr. Shah. The other small question that I would have is around the rural versus urban. Now, I remember in Davos you told me that you are following an EV first strategy. In this result, you've said that there are no new launches in the ICE segment. So I'm presuming that 3XO and Thar are probably the two that go. Now, I heard various other companies in other markets, other segments, not autos necessarily, say that rural has started to perform better for them. I'm just trying to understand if the rural markets are picking up. Do you service them only through the existing launches that you have? Because I'm guessing rural may not have the appetite for EVs as much and might have a larger appetite for ICE engines.
So to start with, Neeraj, we've had two major launches in ICE in the recent past. So which is the reason why in this calendar year we don't see the need for a third new launch. We will continue to have refreshes, and we will have a series of launches again starting next year. So from that perspective, we feel that we've covered ICE very well, and we've got a great set of products there where the demand continues to be very strong. We also expect that EV will get demand from rural markets, and rural has done well for us. Even you see on the tractor side, rural's picked up fairly well. And for us, urbans continue to do well as well. I think it's been a function of the products.
Yeah, okay, fair call. So you are saying the existing ICE engines give you the comfort of meeting the rural demand as it would rise. Okay, fair call. Speaking about that only, I think we spoke about this briefly in Davos, but you still remain confident of the tractor up cycle. The RBI governor has done this 25 basis point. And by the way, I want your view on that as well. Do you think that the policy did enough to spur demand in the economy? So two questions rolled into one. One, that, I mean, for the tractor up cycle, are things firmly in place? If the monsoons work well? And two, is there enough done on the liquidity and the rates by the Reserve Bank in the last 1 month to help corporates like yours in the next 2 to 3 quarters, or let's say a couple of quarters?
So we're seeing good demand on the farm side, and we've said that we expect the fourth quarter to be 15% higher than last year, which is a fairly significant number in the context of where we've been in the recent past. And the rate cut should also be looked at in conjunction with the recent demand stimulus that was provided in the budget. And a combination of both of those two factors, I think, will address some of the short-term issues that we were facing in the economy. And I think we will see a fair amount of demand stimulus as a result.
Got it. Is liquidity an issue, Dr. Shah, currently right now for large corporates like yours? And because March is also coming up, or have the measures started kicking in and helping out on that front?
For us, it has not been an issue. For the economy overall, it was an issue till more recently, but we're starting to see some positivity there as well.
Got it. Last couple of questions. One is on the other gems, right? The growth strategy, you outlined that over the last couple of years quite consistently. Yeah. Are all of them meeting the marks that you might have internally set, or is there some work that needs to be done on maybe a couple of them?
We are very happy with where we are right now. Our businesses are performing very well. Not everything is going to be perfect. It never is, and there's always work to be done. So that's something that continues to happen. Some things work very well in a certain point in time, and some require a little more effort. So on balance, I think we are in a very good shape right now.
I have one last question, Dr. Shah, and which is on tech. Now, the banking earnings from the US have been very constructive. People are taking that in their stride and believing that tech spends from the US will be strong. You, of course, are not as dependent as some of the other peers on that, but I'm just taking this hint from you. Do you expect this to be a strong year? You've outlined in the past that you're coming from the lows, if you will, and you are trying to take Tech Mahindra back to its normalcy level. But does the banking commentary and the other commentary from the US and other regions help?
It definitely does help because there's some positivity that we see there. But overall, the business is on a good path. It's on the track that has been outlined, moving towards a 15% margin by 27. And the structure that's been put in place, the focus on delivery excellence, all of those things are very positive. So that's something that will help us keep Tech Mahindra on that turnaround track well.
Well, a slew of answers on the M&M group, and wonder what the stock is doing because it got a consensus uptick from brokerages this morning. Flattened out completely, just the way the markets are, right? I mean, I think just pull up the markets as well once. 123 points lower, if I'm not wrong, on the Nifty. Yes, 132 actually, 0.5% lower for the index. 23,427. That break about 23,500 seemed short-lived. Time now for an NDTV Profit exclusive. An investor summit focused on the Vidarbha region was held at Nagpur from February 7th to February 9th. And on the sidelines of that, we spoke to Union Minister Nitin Gadkari ji. He talks about Vidarbha being one of the most resourceful regions of the country. In fact, he also mentions that Vidarbha has the potential to be the steel hub of India. Let's listen in.
देखिए, विदर्भ ये महाराष्ट्र में ऐसा एक भाग है कि महाराष्ट्र का 75% मिनरल्स विदर्भ में है। विदर्भ में सबसे महत्वपूर्ण बात है कि 80% फॉरेस्ट महाराष्ट्र का विदर्भ में है। जहाँ तक विदर्भ, नागपुर इज़ टाइगर कैपिटल। नागपुर के आसपास 350 टाइगर्स हैं। 0 माइल नागपुर से शुरू होता है, तो लॉजिस्टिक कैपिटल हम बन सकते हैं। अब विदर्भ में इंटरनेशनल एयरपोर्ट नागपुर में बन रहा है, अमरावती में एयरपोर्ट बन रहा है, अकोला में एयरपोर्ट बन रहा है, विदर्भ में गोंदिया में बड़ा एयरपोर्ट बना हुआ है। और निश्चित रूप से विदर्भ पावर का भी हब है कोयले के कारण, वेस्टर्न कोलफील्ड का सेंटर नागपुर है। और इसके साथ सबसे बड़ी बात जो अभी हुई है, तो इस एडवांटेज विदर्भ का सबसे बड़ा अचीवमेंट है कि विदर्भ में सुरजागढ़ में, गढ़चिरौली डिस्ट्रिक्ट में जो आयरन ओर है वो 65 ग्रेड का है, और देश में जितना आयरन ओर अच्छे क्वालिटी का है वो 55 ग्रेड का है। और इसका जब लोहा बनता है तो इसको 30% थर्मल कोल कम लगता है, और क्वालिटी में ये सज्जन जी ने कल कहा कि विश्व में अच्छी क्वालिटी है। तो आने वाले समय में ये स्टील हब बनेगा, और स्टील हब केवल बनेगा नहीं तो स्टील से 70-80 प्रकार का स्टील तैयार होते हैं। तो ये सब इंडस्ट्री यहाँ आएगी, और यहाँ से अब स्टील पूरे देश में नहीं तो विश्व में जाएगा। एक भद्रावती में प्रोजेक्ट शुरू हो रहा है, वो ग्रीन स्टील तैयार कर रहे हैं। तो मुझे लगता है कि आने वाले समय में यहाँ के मिनरल्स के कारण, कोल के कारण, कोल गैसिफिकेशन, मिथेनॉल बनेगा, अमोनियम नाइट्रेट बनेगा, कोल का भी काफ़ी माइंस यहाँ ओपन हो रही। तो ये जो पोटेंशियल है इसको ठीक प्रकार से उपयोग करके इन्वेस्टर को लाना और विदर्भ के विकास में ग्रोथ को बढ़ाना विदर्भ पर्यटन के दृष्टि से बहुत महत्वपूर्ण है। विश्व के टूरिस्ट अब ताड़ोबा आने लगे, ताड़ोबा, पेंच, उमरेठ, जहाँ अक्सर लोग 4-4, 5-5 टाइगर देखते हैं। तो ये भी एक आकर्षण का केंद्र बना हुआ है, और मुझे लगता है कि इन सब बातों को ध्यान में लेकर विदर्भ की स्ट्रेंथ को हमने एक प्रकार उसका मार्केटिंग करके करीब 5.5 लाख 6 लाख करोड़ की इन्वेस्टमेंट हमें इसमें आई है स्थिति में मिलेगी, जिससे एम्प्लॉयमेंट खड़ा होगा। विदर्भ में कॉटन है, और कॉटन के कारण आज अमरावती में 22 फैक्ट्रीज है, रेमंड से लेकर बड़ी बड़ी, जो विदर्भ में शुरू हुई है। फार्मास्यूटिकल की बड़ी इंडस्ट्री आ रही है। आज एक बहुत बड़ा यूनिट वर्धा ज़िले में, ये जो हमारे नागपुर वर्धा रोड पर काफ़ी बड़ा विश्व का प्रसिद्ध यूनिट, वो वहाँ इन्वेस्टमेंट करके आ रहा है। और बिहान में TCS, इन्फोसिस, SCL, टेक महिंद्रा सब है। तो अब करीब 1 लाख लोगों को वहाँ रोजगार मिला है। इंटरनेशनल एयरपोर्ट है, अभी काम शुरू हुआ है। नागपुर के अजनी और मेन स्टेशन बड़े अच्छे बन रहे हैं, उनका काम शुरू हुआ है। तो मुझे लगता है कि इन सब बातों का विचार करते हुए विदर्भ की जो स्ट्रेंथ है उसको बढ़ाकर उसमें ग्रोथ कैसे बढ़ाना और रोजगार कैसे निर्माण करना और विदर्भ को प्रगति और विकास की ओर कैसे ले जाना, इसी मिशन से जो हमने काम किया था उसके विविध विषयों पर सेमिनार्स हुए, इन्वेस्टर्स आए, अलग अलग प्रकार की चर्चाएं हुई, और इसमें से निश्चित रूप से एक बहुत अच्छी डेवलपमेंट यहाँ होगी, ऐसा मुझे विश्वास है।
सर, आपने गढ़चिरौली की बात की। गढ़चिरौली का रिवाइवल एक तरीके से एक टर्न अराउंड स्टोरी है गढ़चिरौली खुद में ही। अब आप उसमें कितना लेफ्ट विंग वायलेंस जो था, एक्सट्रीम लेफ्ट विंग वायलेंस, वो काफ़ी हद तक ख़त्म हो चुका है, और अब आगे क्या रोड मैप है उसके लिए?
देखिए, उसमें ऐसा है कि सुरजागढ़ में जो आयरन ओर मिला है, वहाँ शुरुआत के समय में मैंने ये भूमिका ली कि यहाँ के स्थानिक लोगों को 80% लोगों को आप रोज़गार देना चाहिए। और एक बात ऐसी हो गई कि जो नक्सलवादी मूवमेंट में थे, गढ़चिरौली नक्सलाइट मूवमेंट का एक प्रकार से कैपिटल था। छत्तीसगढ़, इधर आंध्र, तेलंगाना और झारखंड और मध्य प्रदेश, इसके बीच में का पूरा पार्ट था। तो स्वाभाविक रूप से एक बहुत बड़ी अचीवमेंट हुई कि लोग नक्सलवादी मूवमेंट को छोड़कर ज्वाइन हो गए, अपने काम में लग गए। तो नक्सलवादी मूवमेंट ये का संबंध ये केवल सोशो इकोनॉमिक प्रॉब्लम नहीं है, ये मैं मानता हूँ, पर सोशो इकोनॉमिक प्रॉब्लम को अगर आपने सॉल्व किया तो प्रॉब्लम बहुत उसकी ग्रेविटी डाउन हो जाती है। इसका ये उदाहरण है। और आज बड़े प्रमाण पर वहाँ शांति भी है और लोगों में जागरूकता भी है। करीब 1.5-2 हज़ार करोड़ के रोड इंफ्रास्ट्रक्चर बनाने का सौभाग्य मेरे डिपार्टमेंट को मिला। अब गढ़चिरौली को हम लोग रायपुर विशाखापट्टनम के रोड से सुरजागढ़ को जोड़ेंगे, उधर काकीनाडा को जोड़ेंगे, इधर मंचेरियल से नागपुर हैदराबाद हाईवे को जोड़ेंगे। और इसलिए गढ़चिरौली ज़िले में अब काफ़ी स्टील हब बन रहा है। गोंडवाना यूनिवर्सिटी वहाँ आ गई, इसके कारण अब एयरपोर्ट गढ़चिरौली में बन रहा है। तो मुझे लगता है कि इन सब बातों का एक परिणाम ऐसा आएगा कि निश्चित रूप से यहाँ की परिस्थिति भी बदल गई है और वहाँ महिलाओं ने रेडीमेड गारमेंट बनाए, वहाँ ड्राइविंग ट्रेनिंग सेंटर, स्किल ट्रेनिंग सेंटर, टेक्निकल नॉलेज के लिए इंजीनियरिंग कॉलेज, अलग अलग प्रकार के आदिवासी बच्चों के लिए सुविधा प्राप्त हो रही है। इन सब बातों का परिणाम वहाँ की परिस्थिति बदलने की शुरुआत हुई है। ये बहुत बड़ी अचीवमेंट है।
जी सर, अभी फ़िलहाल बजट अनाउंस हुआ है, उसमें एक इंफ्रा का दोबारा करीब 11 लाख करोड़ रुपए का निवेश है इंफ्रा में। आप उसमें से आप कितना देखेंगे कि महाराष्ट्र को और खासकर विदर्भ में कितना उसमें
देखिए, एक सच्चाई ये है कि भारत सरकार में मोदी जी के नेतृत्व में सबसे ज़्यादा प्रायोरिटी इंफ्रास्ट्रक्चर डेवलपमेंट को दी है, वाटर, पावर, ट्रांसपोर्ट एंड कम्युनिकेशन। और मुझे बहुत खुशी इस बात की है कि अब बड़े प्रमाण पर हमारे क्षेत्र में रोड इंफ्रास्ट्रक्चर अच्छा डेवलप हुआ है, महाराष्ट्र में सब जगह हुआ है। पावर की कोई कमी नहीं है, सोलर पावर में हम काफ़ी आगे निकल चुके हैं, विंड पावर भी है और थर्मल पावर में तो विदर्भ हब है क्योंकि कोयला है। अब आने वाले समय में निश्चित रूप से हम न्यूक्लियर पावर भी प्रायोरिटाइज हो रही है, तो हम ज़रूर इसके बारे में विचार करेंगे हम पावर हब करके कैसे पावरफुल रहे। रोड इंफ्रास्ट्रक्चर हुआ है, पानी की अवेलेबिलिटी है, बड़े बड़े डैम्स हैं और इसलिए मुझे लगता है कि आने वाले समय में बड़े बड़ी इंडस्ट्रीज में आने में हमें बहुत बड़ा फ़ायदा होगा। अभी जो नई टेक्नोलॉजी के हिसाब से ये जो आयरन ओर की सरी है वो हम लोग डायरेक्ट पाइपलाइन से निकाल कर गढ़चिरौली से वो फैक्ट्री तक जाएगी, तो ट्रांसपोर्ट कॉस्ट, लॉजिस्टिक कॉस्ट और कम होगी। तो नए नए टेक्नोलॉजी का उपयोग करके जो कुछ नए नए उपक्रम आ रहे हैं उनका सबका परिणाम होगा। एक तरफ इंडस्ट्री आ रही है, दूसरी तरफ बाम्बू का विकास हो रहा है। अभी यहाँ एक स्टॉल है जिसमें बाम्बू के कपड़े थे, बाम्बू के टावेल थे, बाम्बू के हर चीज़ के कपड़े बने हुए थे। अभी दूसरी तरफ ऑरेंज के ऊपर हमने काफ़ी काम किया है। मदर डेयरी का आया है, मदर डेयरी जो किसानों को फ़ायदा करेगी। अभी 5 लाख लीटर दूध हम लेते हैं, 50 लाख लीटर 5 साल में करने का हमारा इरादा है। यहाँ हमने 650 करोड़ मदर डेयरी की फैक्ट्री खुल रही है। चीज़ से लेकर, घी से लेकर, आइसक्रीम से लेकर पनीर तक सब यहाँ बनेगा, एक्सपोर्ट होगा। संतरे का भी हमने काफ़ी बड़े प्रमाण एक्सपोर्ट की रचना की है। तो एक प्रकार से ये जो एग्रीकल्चर, रूरल, ट्राइबल सेक्टर में भी डेवलपमेंट होगी, इंडस्ट्रियल मैन्युफैक्चरिंग सेक्टर में भी होगी और टूरिज़्म के कारण सर्विस सेक्टर में भी होगी। तो एक प्रकार से इंटीग्रेटेड डेवलपमेंट के साथ यहाँ कोई डिस्क्रिमिनेशन नहीं होगा, तो गाँवों में भी रोजगार निर्माण होंगे और शहरों में भी होंगे। और इसलिए हमारे एग्रो एडवांटेज में ये जो हमारा विदर्भ एडवांटेज विदर्भ में हमने यूनिवर्सिटीज़, IIT, इंजीनियरिंग कॉलेज इनको पार्टनर लिया है। सभी वाइस चांसलर ने इसमें मदद की है और जितने लड़के आ रहे हैं वो इंजीनियरिंग कॉलेज और ये पॉलिटेक्निक कॉलेज के, MBA, IIT के ये आ रहे हैं। IIM का इसमें कंट्रीब्यूशन है ताकि ये एंटरप्रेन्योर्स बने और यहाँ के इंडस्ट्रियल प्रोग्रेस में वो भी कंट्रीब्यूट करें। तो एक प्रकार का एक मिशन सामने रखकर जो हमने किया था उसमें काफ़ी उपलब्धि हुई है। फार्मास्यूटिकल यहाँ बहुत अच्छे कॉलेजेस हैं, M.Pharm तक, PhD तक काफ़ी लोग हैं। हमारे यहाँ सिम्बोसिस है, नर्सिंग मुंगजी है, 49 इंजीनियरिंग कॉलेजेस हैं। टाल करके कंपनी जो टाटा की है, वो जो एयरबस और अभी एविएशन का कैपिटल बनने वाले हैं, जो टाल कंपनी है उसमें एयरबस और बोइंग के 1200 पार्ट्स बनते हैं। राफेल नागपुर में बन रहा है, डोसाल्ट यहाँ है, फाल्कन 11 और 13 सीटर यहाँ बन रहा है।
MROs भी है,
MRO है। अभी MRO में बोइंग यहाँ शुरू कर रही है कि जो एग्जिस्टिंग पैसेंजर प्लेन है उसका कन्वर्शन वो गुड्स के लिए कन्वर्ट कर रही है। तो उसके कारण अलग अलग प्रकार के एविएशन का भी उद्योग विकसित हो रहा है। तो मुझे लगता है कि इसका ओवरऑल इम्पैक्ट विदर्भ के डेवलपमेंट में, जो प्रधानमंत्री जी कहते हैं आत्मनिर्भर भारत, $5 ट्रिलियन की इकोनॉमी और वर्ल्ड की 3rd लार्जेस्ट अर्थव्यवस्था, उसमें महाराष्ट्र कंट्रीब्यूट करेगा और महाराष्ट्र में विदर्भ भी उस मिशन में अच्छी तरह कंट्रीब्यूट करेगा।
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV.
All right, further weakness setting in the markets right now. The Nifty about 0.5% down. The Bank Nifty also at the same level. It's a tough day. It's a tough day on the street, and there seems to be no great fundamental reason from an Indian perspective that is dragging down markets. They seem to be more of global woes. And why we're saying that tariffs could be a big reason is because look at the Nifty metal. All metal stocks down in the red. And the Nifty metal hurting more than others is what we're noticing this morning. Yeah, there you have it. The Nifty metal also down about 230 points. What's working? What's working is some of the results which have been decent. Those seem to have at least some movement there. Let's look at a brain bees. We talked about it this morning. It was on our watch list as well. Margin improvement has helped. Their losses have narrowed. That is good. The other one which is buzzing is PNC Infra, about 8% up. Now, why is PNC Infra buzzing? That's brain bees, but we're talking about PNC Infra about 8% up. In a significant development for the company, the Ministry of Road Transport and Highways has reduced the company's disqualification period for participating in new bids from 1 year to just 4 months. My colleague Anushi joins in with more details. Anushi, when did this happen?
Hey Tamanna, now this is effective from the 18th October, the period from which they were disbarred earlier only. So let me bring to you the whole picture as to what had happened earlier and what is happening now for the company. So if we see now, the Ministry of Road Transport and Highways, they have reduced the period for the company to be participating in new bids. They were debarred from it for a period of 1 year. Now that has been shortened to 4 months. This is from the date of 18th October only when this was effective. So if we see from the 18th October period, now it's in February, they'll be completing that term itself. This disqualification had come after there were some cases related to the bribery and CBI investigations going on with the company, especially in June 2024 of last year. So the disqualification was a result of this. The company had challenged the appeal to Delhi High Court before. They were looking for a complete revocation of this disqualification, but considering that now the Delhi High Court has now appealed the MOR MRTH, that's the Ministry of Road Transport and Highways, and NHAI to consider this instead of giving the full revocation, they've shortened it to 4 months. So this is a significant development for the company. If we see, as now they can start participating for fresh bids from the road ministry as we go forward. How the companies were impacted earlier also. Now this 1 year disqualification that we had seen was comparatively much significant to the earlier companies which were there. GR Infra, Ashoka Buildcon, Dilip Buildcon have all been disqualified earlier, but it was the period as to which now they have been disbarred for 30 days, 45 days and 120 days consecutively. But 1 year comparatively was much significant, which would impact the order inflow for the company. So now that the term has been shortened, this could bring another outlook in terms of where the order inflows are concerned, and we'll look out for the management commentary on how this could lead to additional inflows for the company as to whether they change their commentary on basis of what the order book and the order inflow can be for the company. So PNC Infra is in focus on the back of this.
Okay, PNC Infra definitely in focus, 8.5% up now. Another set of stocks that you need to look at closely are the OMCs. Now, Singapore GRMs, that's gross refining margins, have risen to levels of up to $8.7 per barrel. It's its highest level this year. Or actually in a year, not this year. What does that mean and what's the impact? Somi joining us with more details.
Well, yes, Singapore gross refining margin, which is the Asian benchmark for refining margin, has surged to around $8.7 per barrel. Now, Friday this was trading at around $2.8 per barrel. So it's a sudden surge that we have seen in the Singapore gross refining margin. In fact, the current level of 8.7 that we are seeing is the highest in almost 1 year for the Singapore gross refining margin. So what could have led to this sudden spike? Firstly, it could be because of lower refining output globally. In fact, some reports suggest that China's independent refiners have slashed the processing rates to the lowest level in the last 5 years, and this has been done because of the lowering Russian crude discount, which has led to lower profitability, and hence this reduction in the processing rate for China's refiners. Apart from that, it could be supply disruption and tariff concerns, which kind of also led to this sudden spurt in the Singapore gross refining margin. Now, generally, every $1 per barrel a rise in the Singapore gross refining margin benefits MRPL's EBITDA by nearly 1,000 odd crore rupees. For Chennai Petro, it increases their EPS by around 30%. For IOCL, BPCL and HPCL, it increases their earnings per share by around 14 to 16%, and for Reliance Industries on a consolidated basis, their earnings could increase by around 4 to 5%. However, do remember that for this rise in Singapore gross refining margin to actually benefit them, it needs to sustain at current levels. So we need to watch out for how the gross refining margin pans out over the next 1 or 2 weeks, and we have to understand whether this higher rate is sustainable or not. If it does not, then there won't actually be any much benefit for any of the oil marketing companies or oil refiners given the sudden surge that we have seen. So it needs to be tracked whether this level of Singapore gross refining margin sustains or not over the next 1 to 2 weeks.
We'll watch out for sure. Thanks Somit for that. Two big auto results coming in today as well. Escorts, Kubota and iShares. What's the street anticipating from these? Puneet Johnson for that. Puneet.
Well, thanks for that. So one of them, the Eicher Motors results is expected to be really strong. The company is expected to report roughly a 22% growth in its revenues, coming in at roughly 4,963 crores on a standalone basis. Also on the EBITDA, 19% growth estimated, with the overall margins coming in at 26.9%. Now, it's a quarter where the company had mentioned they'll be focusing higher on sales and lower on EBITDA margins, but it's expected to come in really strong compared to the same time last year. Profits also expected to rise roughly 23% to come in at 1,128 crores. Now, this all has been led by a higher volume growth across the Royal Enfield brand as well as the VECV, which is the commercial vehicle arm of the business, both up 19% in terms of sales in Q3. It's expected to have a continuing effect in Q4 as well. MK is also estimating margins to expand roughly 50 basis point quarter on quarter, as we mentioned, because of higher volumes. On the other hand, Escorts Kubota is going to be an inline set of numbers because of price hikes. But, apart from that, it's a better quarter on quarter performance expected because of higher sales as well. So while revenue is expected to rise roughly 35% to come in at 3,134 crores, EBITDA is expected to rise 26% again, with the overall margin picture coming in at 12.6%, but it's lower by 40 basis points compared to 13% in the same time last year. and net profit again expected to rise by 13%. One of the key updates though here will be on the new business that they've sold, the railway business to Sona BLW. So any kind of update on that aspect will be something to watch out for. MK also expects the margin to improve quarter on quarter, but they mentioned that the numbers will be restated because of amalgamation of the Kubota JV as well in the same time last year. So a lot of one-off expected for Escorts, but overall a decent set of numbers. But between them, Aisha is going to outperform today.
Okay. Thanks for that, Puneet. The other one is LIC, of course, which is in focus after the company announced its Q3 numbers. Harsh, what stood out and what didn't?
Well, when you're looking at the numbers, you're seeing degrowth both on the top line, which is the annual premium equivalent, as well as on VNB. But the VNB decline is slightly lesser than the decline with regard to top line. So one, growth is definitely one portion which is affected where LIC is concerned. Why is that so? The larger focus with regard to profitability and growth with regard to non-participating products, that's where really LIC is focusing on. So when you're looking at margins overall, they've improved quite sharply, both on a sequential basis, year-on-year basis, slight bit of decline, but they're holding up far better than what analysts are really projecting. In fact, when you're looking at non-par as a component of overall business, was single digit at, and non-par, by that I mean non-participating products, which are more profitable. As a component of the business during listing in 2022 was single digit in terms of overall mix. Currently sits above 30%, and therefore clearly visible is the focus with regard to focusing more on non-participating products. Higher ticket size also affecting growth, and therefore volumes as well are lower where LIC is concerned. So those two are the key concerns. Growth even in January 2025 slightly sluggish. They're giving up market share, but the management commentary is clear. We're going to focus in on profitability, and VNB, which was slightly above estimates, while growth was lower, VNB slightly above estimates, but VNB margins very strong beat.
Okay. All right. So, both ways you can look at it. I think the VNB margins going up by this extent is a bit of a positive as well. But LIC, there it is. Samir Arora joining us now. He's founder and fund manager at Helios Capital. Samir, great to speak with you, and thank you so much for your time on NDTV Profit. We're speaking at an interesting time when I suppose everyone in the world is wondering what Donald Trump is going to do next. Is the Trump effect something that is going to haunt Indian equity as well?
I think Trump is overall positive for the world, overall, because some of these things have to be set right. Within US, that the wastage and everything else and whatever the overdoing of the left side. The other thing which is positive is that, which actually the Indian budget also took a little bit from that, which is you cut taxes and you save or save wastage or cut wastage or generally keep the government a bit more tight. And so these things are positive. But because he announces every day new things, which sometimes we follow through, sometimes not, that creates uncertainty, and that is a negative. Rest of it, I think everything is positive. He has already achieved a little bit, and I think he's on the right path, but it's just that he's very volatile. So sometimes you may be doing the right thing, but you also have to do them in the right way.
No, I mean, overall positive is definitely there, Samir, and I think we saw that in the way all asset classes responded when it was clear that Trump would become the next president. But from an Indian perspective and the erratic statements that you're talking about. For example, this week, Monday is aluminum and steel 25% tariffs. Tuesday or Wednesday, we could have reciprocatory tariffs. We don't know the details of those. We don't know the impact for India. Thursday, Prime Minister Modi and Donald Trump meet. So I'm just wondering.
No, but this is because we are in a bad mood as a market. It has nothing to do with Trump. All these things are bad, and actually, isn't it good that the Indian system is supposed to cut some tariffs and let competition increase? We cannot have, as a market or as an economy, highly protected just to save 2-3 people or I think it's absolutely fair, some part of it, because we also have overdone it many times in terms of the tariffs and all. But this is just because why the rest of the world is not reacting so negatively. I think this
So then let me come to that point. Why are we in a bad mood as a market?
Yeah, that is the point. So our bad point, I think primarily from an FII point, I think is because of currency. And now even that has sort of happened in the sense, let's say that, because it was signaled also that at the beginning of this year that the currency was kept too strong and all. But now if you look at it over 1 year period, then the Indian INR has fallen relative to dollar by some 5.1%. And the DXY has strengthened only by some 4.9%. So first of all, now we are not, we are reacting to that. And even if you compare it to other currencies, maybe let us say, if you look at the forward market, it has to go to 89.90, let us say. Okay, now it's already 88. So it has to go to 89.90. So that's another 2-3%. And I think that, just people don't like it. I think I don't, beyond a point, never cared for it, because I used to think and still think that you can make more than that in the stock market if you wait 2% for a fall. By that time, the market will go up 2%, and therefore this wait may not be worth it. But I think that is the number one. The other is for 2-3 reasons. Our market was doing poorly, but some of those things have been, at least the initial attempts have been made. Okay, one, currency. Second, tight liquidity. Some things have been done. Third, you may say tax cuts have been given. Fourth, you may say that the government spending was not there. That is happening. If finally you look at the results, they are not that bad. In aggregate earnings growth, including BFSI, would still be some 13-15%. Now, you may say some stocks were overheated, underheated, but we were not, this idea that, oh, this is all happening because of Trump is just connecting news to the stock market every day. It is not.
Okay. Samir, good morning. Neeraj here. Rather good afternoon to you. A couple of questions on the budget. I mean, at times it becomes difficult to decipher if your tweet is in jest or you actually mean it. Did I hear you term the budget as a dream budget?
It was a dream budget. It is a dream budget. It was a dream budget because normally individuals don't dream that there will be a bridge made on some river and I dream of it tomorrow. You dream that your income will go up, your taxes will be lower, your this thing. So the dream is only related to these things. And as a thumb rule, let's say, what is the definition of dream budget? So the first dream budget was Chidambaram's budget, more popularly named by everybody. That time I was not on Twitter. There was no Twitter for me to label it because there was tax cut. Now, here the 2-3 things are principles. That money with public is better than money with the government. It just should be a simple rule of analyzing things. Second is that money was not taken from A group and given to B group. So you can't say. Third, you can't say that there were tax cuts, but the rich benefited hugely because there was a percentage cut, and therefore if somebody was earning 5 crores, he saved 10 lakhs. So that also was not there. Fourthly, you can say that for the first time ever, somebody, that is the government of India, or some government, or in our case, government of India, said that I don't need more money for infra and social. So even an aggressive target of 4.5, I will let it go to 4.4 because I don't have capacity to, or maybe need right now, because we could not even spend this money in the current year. Where else have we ever heard of this? So it was a dream budget from every angle. Now somebody can say that, but it benefited only 3% of the people. So that, of course, is there. But the middle class in our market is 3-5-7%. And if you include families, maybe it's 20%. But literally everything that is done mostly is the benefit goes to a few people. For example, if you make a road in Delhi to connect it to Haryana, mostly it does not care. The South Indian guys don't care. So it is beneficial to that 2% people who will use that road. Everything more or less in life is for a few people. If you make a sea link in Bombay, sorry, but the Delhi guys should not care about it. But they do. That's how life is. It was a dream budget.
It was a dream budget. Okay. Samir, the other question is, somebody's pointed about how with DeepSeek, and if the tariff battle remains the way it is right now and doesn't get aggravated too much, then a lot of global money might find favor in moving to China because of the valuations and DeepSeek advantage, etc. What are your thoughts here? I mean, will China gain capital at the expense of the other countries, or is the 15-year underweight, highest underweight in the last 15 years of FIs in India, means that at some point of time it will turn back?
No, China is very good, I think. So, by the way, China, even in our global fund, we have not now added, but I added some months. It's too cheap. Okay. But the big picture for that is that India plus China are together maybe 45% of the emerging. Let's say there are three kinds of investors. One may be investors who are investing globally. Okay. So those guys will have some 65% in US, maybe 1% in India, and maybe 2% in China. Okay. Assuming that's rates are somewhat similar actually, but let's say, or they have 1% also in China. Then for them to say that I have to increase 0.5% in China because that would be a 50% increase for them, they don't have to take it from India if India was separately doing well. And there is still some 30% of the rest of the world from where you can take this 0.5%. Please remember that 1 minute ago, the question to me was that Trump is creating all this uncertainty. So if you think that in 30 seconds from Trump creating uncertainty, the biggest beneficiary will be China, that means Trump is not creating any uncertainty, which broadly, I think that is the thing. Other thing is, let's say that somebody is doing India, China plus Asian emerging markets or emerging markets, then combined they will have 40 to 45% in India plus China is the index weight. They might be 3-5% underweight in China, and therefore they don't have to take it out of India. But I would say that one of the reasons why I have been optimistic this year in general is because I think that when the world is doing well, India normally does not, it may do less well, but it does not fall so much. And so I think China doing well also will be good, because at least you will not be saying this that, oh, the 50% premium and 50% premium has become 55%. Please note that now these guys say that our average premium is 65% and it used to be 55%. And all that has happened not because India has gone up a lot, but because China has fallen a lot, which makes that premium look more. So if it goes up 5-10%, even this argument would fall aside. So I would think broadly, any big market doing well normally leads to other markets doing well. They may underperform is secondary.
I'm just wondering, Samir, then what are the opportunities you're seeing right now in the Indian equity space?
I think that Indian market is not some bull run, best time ever, which I've been saying for 2-3 years. The public was overselling India to say this is the golden decade and this is Amrit Kal. That is not needed. The Indian market generally has given returns in line with its earnings if you see broadly any period. That means you do 3-year, 1 year, 10-year, 15-year, broadly the earnings growth has been 12-15% and the market growth, that is in rupee terms, has been 12-15%. Right now, what has happened is that because the FIs have sold a lot in the last 4-5 months, that has led to, of course, their selling. But secondary, it has led to this liquidity pull out, you can say whatever, because the government or the RBI had to sell those dollars to them and basically took away the liquidity. So that is being addressed. So big picture, we are not saying it's some big bull run, but there is no reason to think that this market or the world is falling apart. You'll make your same return plus minus a few percent going forward. The last 3-year returns are below average for Nifty and the 500. And 500 is more or less in line. Nifty is below average. Separately, small caps are high and okay, but the problem with small caps is there are some, 500 of them. So everybody says I have 3 of them which I like, and I don't care in aggregate what the small cap valuations are. But in the very short term, they will also be influenced by how the aggregate things are doing. But I'm not saying it's some great thing, but it's not a bad thing the way we are talking about it every day, that every excuse to say that there is something wrong with India. For example, Mr. Modi being one of the first guys to meet Trump is a big negative. I'm saying that Mr. Modi should refuse to leave White House till the morning of 14th, and so that he can say that Valentine's Day, Mr. Trump met him first.
Samir, I think nobody can beat you in those quotable quotes.
Because anyway, if he's meeting at dinner time, you just push it a little bit more and say, yeah, we'll just leave.
You're writing our headlines for us. The ones we wouldn't dare put out.
Okay, you can call it pre-Valentine's Day dinner with Mr. Trump. Not bad thing. See, India is going to be a beneficiary relatively if Trump becomes very hard, because Trump can, of course, he can say that I'm doing reciprocal and with everybody, but in some of these things, I don't think India should overly object to reducing the tax.
No, we'll take the bikes. We'll take the bikes they want to sell. They were, a few things that they want to push here. I mean, that's okay.
Let them sell a few bikes. Nothing wrong with it. What's the big deal?
Yeah, the Harley Davidsons can come. Thank you. Thank you, Samir, for speaking with you. The inimitable Samir Arora, with the dialogue of the morning, the pre-Valentine's
Most certainly.
Modi meet. But not too negative on Indian markets, even on what is looking like a pretty bad day.
Yeah, which is actually a good thing to start off the week with. But it's a good thing to end the show with as well. So thank you so much for joining in on India Market Open. Up next though is Ask Profit. Stay tuned.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and with me is Mahima Vajrajani, and we'll take you through the next 1 hour of trade. And it's not the best start to the trading week, unfortunately, and it all has to do with what Mr. Donald Trump said 30,000 feet in the air when he was flying on Air Force One. He spoke about tariffs, and he spoke about the fact that there's going to be 25% tariffs on steel, on aluminium. There are a few more tariffs that could come through over the course of the rest of the week. And well, that's not necessarily good news for global trade, because you have possibly fears of a trade war escalation, or at least a tariff war escalation. And what happens with those tariffs is that it makes everything costlier, as a result of which you have inflation that is a bugbear that a lot of economies have gotten past just about, that might actually be making a comeback if things go the way that they are. So you have the equity markets in India that are trading at the low point of the day, and look at that on your screen, right? You have a lot of the metal counters that were doing well at the end of last week that are getting beaten down, and beaten down heavily. 7% gains for the metal index last week. Let's in fact pull up the metal index as things stand right now, if we can get an intraday chart, because that will just drive home the point. All right, so 260 points or so lost on the metal index, and all of them in the red. Pull up the intraday chart as well if we can on the metal index, because really that's going to give you a picture of how things are. 3% lower. Let's also pull up the heat map, or rather the sectoral map, the heat map, because that will give you a sense of what is in the green. And there's only FMCG that's holding out with gains of about 0.1%. Remember, FMCG as a pack was beaten down towards the end of last week. Just a bit of a comeback at the start of this week. Metal, realty, healthcare, all getting beaten down. And let's pull up some healthcare names as well, because I looked at Fortis earlier on in the session. It posted its results. It's still not, actually this is not included, right? But this is Pharma. Let's pull up the healthcare pack. Fortis is down. It started off in the green on the back of a decent set of numbers, but it's also losing ground. So what should that tell you? It should tell you that even positive results are getting sold into right now, because the texture and the breadth of the market is actually negative at this stage. So you're probably wondering what you should do about the stocks that you hold, or the trades that you've probably initiated, particularly maybe in the metal counters. You may have gone long last week. How should you change that? If you've got questions for us, you can send them to us on the WhatsApp number that you see on the top of your screen, or on the landline number at the bottom of your screen. Anything else that you're spotting, Mahima?
Absolutely. Some hope in this sea of red. Brainbees Solutions, Vatek, Wabag, all of these counters buzzing on the back of earnings. So, the thing that we've kept on discussing still holds that, a good set of numbers and good valuations are seeing an uptick in trade. Vatek, Wabag up 2%. Brainbees also doing very well in trade today. The losses, narrowed to 7 crore for the company, which is why the stock is up 4%. Let's also pull up something like Sharda. That counter is also doing pretty well. Sharda Energy and Minerals, good set of numbers for the company, which is why we are seeing an uptick in the stock. But some counters which are really seeing the beating down include your Zaggle. Sharda did start at a very good pace in the start of the trade, but it's come down to around 0.4% higher. But Zaggle is something that's feeling the brunt today. It's down by about 10%, locked in lower circuits since the start of the trade. Delivery, Borosil, all of these counters are also facing pressure. Dreamfolk Services also seeing a lot of pressure on the back of its Q3 earnings. Let's also pull up something like Hindustan Foods. It's up around 7%. It was up around 7% in the morning today. But let's pull up that and see what it's doing in trade today right now. In terms of some counters that are, kind of seeing the pressure, and also include Shipping Corporation of India. There is Amara Raja on the back of Q3 earnings. There's FL India on the back of Q3 earnings. Jyoti CNC also on the back of earnings. Although good set of numbers, Alex, but the stock is seeing pain.
Absolutely, and quite a few of those counters. Let's get our experts on board. We've got Saurabh Jain, who's Equity Head Research at SMC Global Securities, and we've also got Brijesh Iyer of Retail, who's a head of retail research at IDBI Cap. Gentlemen, thank you so much for taking the time. Pleasure as always. Let me start with the first question today, and we've got a question from Rohit Akash, who's writing in from Vellore in Tamil Nadu, and he's asking about ONGC, which he's bought at an average price of 249. The holding period is 6 months, and he's in a loss right now, just very marginal, but he's asking whether to hold on. Brijesh, what's the view on the charts?
Morning, Alex. So, if specifically from the charts point of view, there has been a sell-off, and I think slowly it might correct little bit further lower. Maybe he should be open for 230 levels on the downside. So, other 10 points correction is likely. But then if he's having a long-term view for a 6 months kind of time frame, I think it is a hold. Sooner or later, we might see some bounce in the stock. So, if it comes to 230 levels, I would advise to average some of his position.
All right. The next question also I'll stick with you, Brijesh. Deshkar from Nagpur is holding 100 shares of Jupiter Wagons, bought at 393 a piece. He wants to know, should he hold at the current levels or come out? And if he should hold, what could be the stop loss going ahead?
Okay, so if he can have some kind of a long-term perspective, then it is a hold. But then purely from the trading or maybe from a short-term perspective, it is making a lower low, definitely. So that suggests me it may come close to 300 levels. So he should be prepared for those levels. 300 is where something I think it will find some support, and if it's able to manage and if you're able to do some averaging at those points, it is advisable. Long term, I think this stock has potential, but the definition of long term would be more than 1 year.
Okay, I'm going to take the next question from Dinesh, who says that he's a senior citizen and he's invested in Ingersoll Rand. And he's got 100 shares at a price of 4,200 rupees per share, and he wants to keep it for at least the next 5 years, he says. He wants to know whether or not he should average his holding right now because he has strong conviction about this MNC company. Saurabh, I'm coming to you. On the fundamentals, how does it look, Ingersoll Rand?
First of all, if you look at the capital goods sector, I think it is looking good for the next 4-5 years. I think manufacturing sector will gain. The company is into the pumps and the compressor segments. So it's a MNC, and the company has always, it has a proven track record. I mean, when the things will turn positive, I think Ingersoll Rand stands to benefit maximum out of it. So from 5-year term, time horizon, I think it's a clear hold. With regards to average, I think he can keep on adding in a staggered manner in the recent correction.
So hold for the next 5 years and keep on adding in a staggered manner is the view coming in on Ingersoll Rand from Saurabh. The next question that we have is from Venkat, who's from Bengaluru. He's holding Yes Bank and he wants to know from a longer term perspective, 2 years, what could be the target for this particular counter. Saurabh, I'll stick with you. Your view on Yes Bank?
I think overall there is some kind of a pressure on the banking industry per se because of the rising delinquency, especially in the MFI segment and compression in the net interest margin. Yes Bank is already, in my opinion, is priced to perfection because the book is not that clean. It was perceived that the Yes Bank would be able to clean the balance sheet as per the industry, top-notch banking or maybe the mediocre ones. But I don't think so. It has happened now. I think there are many good opportunities in the space, in the banking space. In my opinion, I think he should get out of the Yes Bank and maybe look for the banks like Canara or maybe Bank of Baroda.
Okay, Canara, Bank of Baroda are counters that you should watch out for. And indeed, the PSU banking pack is one to watch. Quite a few of those numbers better than expected, at least on the asset quality side. Let's get in our first caller of the day. We've got Mallikarjun who's calling us from Bengaluru. Hi, morning Mallikarjun. How can we help you today?
Hi. So my question is, I bought 200 shares of Bajaj Housing Finance at the rate of 257. So my question is should I wait or shall I exit from this stock?
Okay. And you bought it from the perspective of the long term based on the fundamental track record, etc., right?
Yes. Because this repo rate cut will, I think, housing related stocks will go up. Because of that, I took this stock. But I'm not sure. I stuck on this level.
No, can you confirm to me what level you bought it at?
257.
Okay, I'm just pulling up the chart. Let's see. All right. So it's elevated levels. I'm actually trying to figure out when it last hit this number. Can you confirm when you bought this stock, please?
Maybe 2 months ago.
Okay, fine. All right. Saurav, I'll come to you on the fundamentals. What would you say about this? So I don't think that the buy price is accurate because the stock has hit an all-time high of 146 in the last 3 months. So it's unlikely that.
Yeah. 157, not 257.
Yeah, I thought as much.
My bad.
I thought as much because from my recollection, the stock has never crossed 200. But okay, 157 is the buy price. So therefore, Saurabh, on the fundamentals, would you hold if you bought at levels of 157, you lost a little bit of ground, would you hold on?
On the business front, it is a very good company. It has grown above industry average and the recent results were also good. It is the only valuation which was concerning, and that is why we are seeing in the recent market correction, all these stocks which were trading on the high valuations are being sold off by the investors. So this is the case with Bajaj Housing Finance. I think if you have a term of next for the 3 to 5 year horizon, I think it is a very good company to keep in the portfolio. I would not recommend to average it down, but at the same time, because it's a good company with good background, I'll say keep on holding.
The stock was, just so we complete the point that we were making, Mallikarjun, so on the fundamentals, Saurabh likes it, but if we can pull up the all-time chart of this counter, it was listed in September of last year and it listed at a premium. It is done quite well if you think about the issue price, but it has lost ground over the course of that time period. It's down about 29%. It hit a high of 181. So he's not bought at the all-time high, but he has bought at elevated levels. That is the improvement from the issue price, because issue day, if I remember the day of listing, it actually made a substantial premium.
Right, correct. The next query that we have is from Vamsadhir, who's from Andhra Pradesh. He wants to know the right levels to enter Zen Technologies. He wants to make a fresh entry in this counter, and he wants to know what could be the right levels. Is this the right time to enter Zen Tech, Brijesh, as per you on the charts?
Okay, so 850, 830 is a level. What's the multiple level from where it took the breakout? So just in case if there is any future correction, so 830 can be the pullback level. So right entry cannot be defined, but then partial entry can be made, and little bit on a correction close to 830, 840 levels. Further questions can be added.
Okay. Okay, so we've got an interesting question coming in from Mohana, and what Mohana is asking is, why is the market falling at this juncture? Because from the domestic standpoint, you have a significant development over the weekend in the form of the assembly elections in New Delhi. While it is not a very large it's not very large in terms of the election as such, because it's an assembly election. It's still a momentous occasion, the first time in 27 years that the BJP is making a comeback in New Delhi, and it bodes well for the future for that party as well. But let's talk about the context, right, Saurabh? Would you agree that global factors are at play currently, and it's more to do with what is happening on the global stage than the domestic factors right now?
I think there are a host of reasons, both at local and the global. While global reasons is that US is expected to do well, and a lot of hot money is going back to the American market, leaving Indian country, and so that is the reason we are seeing huge amount of selling. The other reason is that domestically the growth is dipping because of the lower capex by the government, lower spending, and now in fact, if you look at the earnings season, the growth is also dipping in contrast to the valuation at which stock prices are trading at. So in terms of valuation, our market looks pricey, not whole, but especially in the mid cap and small cap segment, you will see that the valuation is higher than their counterparts in the large cap. So I think it is the selling, the global market, that is mother market, US market is doing well. And now a lot of statements coming from the US market with respect to tariffs, which no one knows what kind of impact it will have on the global economy, especially in the context of metal and other things. So I think after a huge run up in the last 3 years, we may see this period as a period of some kind of a correction, and both time and price wise.
Right. So that's the view coming in on the markets, Saurabh. Quite an extensive view on that one. We have our next caller, Jeevan from Karnataka, is calling in. Jeevan, a very good morning to you. How can we help you?
Ma'am, good morning. Very good morning, ma'am. I bought a Canara Bank price in the 99.64.
Okay.
In 1,000 shares, ma'am. Can I hold it or sell it, ma'am? Right now the price is 92.23.
Correct. Jeevan, when you bought
it, sell it, ma'am?
Okay, when you bought it, was it from a longer term perspective, or did you see the charts?
No, ma'am. I bought a long term for at least 5 years.
Got it. So you bought it from a fundamental point of view. Saurabh, I'll stick with you again for this one. Canara Bank is the counter. What's the view?
I think it is one of the good bank among the PSU banks. On the valuation side, it comes into the value category. If you look at the numbers were cool enough, I mean, to justify the current valuation. I think it's a market selling at which, because of which all the banks are in pressure, and some of apprehension lies because of in future maybe the delinquency rate will go up. But considering the fact with respect to the budget, I think the consumption story will unfold going next financial year. It will definitely help the banking sector. Moreover, this time around, I think a lot of money was raised from the capital market. So essentially, the credit growth which was expected did not came through the banking sector. And next year, we expect the good amount of credit growth will happen in the banking sector, and thus will propel valuation to the upside and both the earnings as well. So in my opinion, from the long-term perspective, I think it is a very good bank to bank upon.
A very good bank to bank on, which is Canara Bank. This was incidentally the pick that Saurabh had when we spoke about Yes Bank as well. He said Canara Bank and Bank of Baroda are the stocks that he likes. We've got the next question from Shrikar, and he's looking for a technical view on Apar Industries. He's already looked at the fundamentals, and he points out when he looked at it that the operating profit was a bit of a sticking point in the results. It is down about 4.7% as we speak. Brijesh, I'll come to you on the charts. The question is, if you've got a longer term perspective on this, would you use this opportunity to buy?
Yeah, so I'm not very sure, because recently what has happened in Apar is there has been a big tick during the month of Jan, 20th Jan, and then after that it went sideways. And today, after the very first time, again fresh sell-off is what we are observing in the Apar industry. So basically, the trend looks to be weak. So as long as we don't see any support or maybe some buying good volumes coming in, it will be very risky because the weekly structure is also not turned bearish. So the structure is lower top, low bottom structure, and it suggests a weak bias. So if it's taken a position, I'll ask him to hold the position only because the charts are in the oversold zone. But averaging is not advisable.
Averaging is not a good idea, and I would think that a fresh entry is also not a good idea, right, Brijesh?
Yeah, no. No, not at all.
All right. It's looking weak on the charts. We've got a caller. Alex is calling us from Kerala. Alex, good morning. How can we help you today?
Hi, Alex.
Good morning. Please go ahead.
I want to ask about Triveni Engineering.
Okay. What about it?
I'm looking this stock as to get a push from the ethanol production because from next month or might be from next quarter onwards, government will push to E20 ethanol on this one petrol. So this is one of the largest producer of ethanol, and they are into other diversified sector also, sugar, distillery, and the power sector also they are into. So is it a right stock in ethanol or any other better stock?
Okay, so you're looking at the higher blending targets for the government of India with regard to oil marketing companies, right?
Yeah.
As a trigger.
Other problem is,
as a trigger, I got it. All right. So, do you have you bought this already, or are you contemplating buying it right now?
No, I am planning to buy.
Okay, fine. Saurabh, I'll come to you on the fundamentals. While a lot has been said about this higher blending target, the question mark is whether or not oil marketing companies, one, can go ahead and increase that blending. And the second question that a lot of people have is, are the vehicles that we currently operate that are being produced and sold by original equipment manufacturers, at the automakers, are they capable of handling a higher blend of ethanol? Because you would need to have a bit of a tweak to the technology to have a higher share of ethanol, right?
Absolutely right. I mean, Alex, in this context, there are a lot of variables, I mean, which should be in favor of the companies who are producing sugar and ethanol. In my opinion, I think the last 3 years, if you look at the Triveni Engineering, the stock has does nothing. I mean, the last 3 years, the price was the same. What is the problem for these sugar companies and the ethanol making companies is that they are not able to make money either on the sugar and the ethanol because both the prices are governed by the central government. I mean, they notify what kind of pricing, what kind of margin they'll be able to give on the ethanol. Yes, while the branding is expected to rise, but it is the profitability which market is eyeing that these companies will be able to, for these companies, it will be difficult to make profits both on the ethanol and the sugar. And that is why I think the stock price is languishing. So I think it is a cyclical kind of a stock. In my opinion, I think it is very difficult to judge what lies in the future. So in my opinion, I think it is a avoid.
What is the view coming in on Triveni Engineering? The next question that we have is from Joseph, who's from Qatar. He's invested in Tips Music. He's purchased 150 shares at 879 a piece. So he's sitting on a significant loss of 33,000 odd rupees because he's bought at elevated levels. The stock is currently trading at 657 odd rupees. He wants to know, considering the current scenario, should he keep holding them or average out at current levels? 6 months is his time horizon. Brijesh, I'll take your view with respect to the charts on Tips Music.
So lately, the stock has been correcting, but then maybe a few months before, there was a very good buying setup in the Tips, and there were a lot of people who were buying Tips Music. So somewhere the long-term charts are okay. Means I'm not saying that super bullish, but then there is something which is cooking in the Tips. So if he's already having a position, I will ask him to hold the position. The recent swing low, which was like 595, so that should be his stop loss, and just hold the position. And once it is above 730, 740 levels, then the bullish bias can come in. So you just need to keep a wait and watch kind of a scenario with the 595 as a stop loss.
Okay. Brijesh, thanks so much for joining us today. I understand we have to say goodbye a little early today. Thanks so much for joining us on Ask Profit. Saurabh, do stay with us. We'll be back after this very quick break, and viewers, we'll be back to take more of your questions, so do stay tuned.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
कि अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims?
Welcome back. You're watching Ask Profit. We'll take a quick detour. So callers who are waiting on the line, just hold for a bit. We'll talk to the management of Akzo Nobel because it's in focus on the back of its Q3 earnings. We've got Rajiv Rajgopal, CMD of Akzo Nobel, who's joining us now. Rajiv, a very good morning to you. First of all, on the numbers, revenue was up around 1.7%. EBITDA did see a growth of around 0.3%. Margins have, slid a tad bit, and net profit was down by around 4.6%. To you, how did the numbers numbers pan out for Q4? Because demand scenario has been under pressure. What's the reading like in Q4, and going ahead, what are you expecting?
Good morning, Mahima. Good morning to you and all the viewers. As far as the last quarter is concerned, for us, the earnings have been a tad lower than what we wanted. As far as top line is concerned, we were targeting about a mid-single-digit growth. We ended up at about 2%. Our coating vertical grew in terms of volume between mid to high single digit, and our paints vertical also registered growth. In terms of how we see it, I think it's a positive step because we've registered volume growth despite not participating very aggressively in the lower end in things like putty, etc., where there was deep discounting in the market. And as a result, you've seen we've been able to maintain our margins, not just versus last quarter, but over prior year, same quarter. As far as the PAT is concerned, look, we had given a one-time special dividend commemorating 70 years of Akzo Nobel in India in November, and as a result, there is a slight drop on the interest income, which sort of impacted. But we think it's normal. We believe that look, as far as January is concerned, we've had a good start, and we believe that look, we are poised to sort of make sure that we continue our market share gain that we have now been doing for more than 9 to 12 quarters. So that's really the focus, Mahima.
Rajiv, 2-3 follow-up questions on what you said. First of all, with respect to the volume growth that you talked about, this quarter, what was the volume growth exactly in absolute terms, and what was the volume growth like?
See, the volume growth, look, we don't give out the exact numbers in absolute terms, but suffice to say we registered sort of a mid-single digit volume growth, really. You can see our revenue growth was approximately 2%. So clearly there were two concerns. One, really, what really did well was that our premium portfolio really did well across decorative paints and the vertical and our coatings vertical. Our challenge was really, and you were reading it, is really the forex, and that sort of impacted a bit on the margins. But we believe that, look, at this point of time, and there's been a price erosion, Mahima. If you look at from the beginning of the year, industry price erosion of almost about 4.5%. So there was a slight price increase in the months of July and August that's gone back largely into discounts. So really, structurally, we believe that, look, and that base effect is over at the end of January. So we believe that going forward, volume value will start getting, gap will start getting closer, and we believe that, look, we should poise well and deliver strong growths.
Rajiv, with respect to what you said in terms of market share gains, we still, when I talked to the other paint players, I was asking them with respect to the competition, touch points with respect to Birla Opus are really rising, and every quarter they're increasing the touch points a lot. But the big ones came out and said that, in terms of value proposition, it's not quite significant right now. Is this the same reading that you also have, or you think that some kind of competition has propped in and that it is affecting your sales, in this particular quarter as well, and you expect them to kind of hurt by a tad bit going forward as well?
So first and foremost, the touch points have increased. Look, I think it's important to understand in decorative that we are largely a huge premium player with a 16% market share. And really, the player you talked about really, has really focused on the mass economy, primers and certain other categories, undercoats, etc. And of course, they've started making inroads into premium. Initial placement has been strong. It would be, I think, naive for me to say that, look, there is absolutely no impact, but I think we are managing it very well. The fact that you can see our results, and you will see as the industry results come out over the next few days, have been pretty much ahead, clearly demonstrates the fact that our product quality, which is our USP, I believe is unmatched. We believe that, look, we offer services and we have a team that's really sort of rising to the occasion with a lot of other things happening in the background. And we believe that we are poised to win. Look at our coatings business. Our marine protective powder business have had a phenomenal performance in the last quarter. And, the start, as I told you, in January has been fairly strong. So I think, look, yes, there will be a bit of a shake-up in the, perhaps not immediate, but maybe in a year's time if this continues. And we are taking note of each and every competitive player that comes in. I would be naive to say that, look, it's no impact. And you're right that the distribution points have increased.
Rajiv, with respect to Akzo Nobel NV, there was a filing with respect to, it considering selling of powder coating business as well as international R&D. And, the management also had said that, they might explore potential acquisitions or, going ahead, any kind of, potentials of any sale of business going ahead in the decorative segment as well. Any update there? What's the view with respect to what's coming in from the holding company?
No, at this point of time, Mahima, there is no view. We are still in very early stages. There's a lot of speculation. I am sorry, I'll have to refrain myself from making any comments, but I can tell you it's fairly early stages. You're right, there are two tracks. But both, I think in my view, will take time. And as per process, Mahima, we have to first work with the board, and take the approvals of the board and follow the SEBI disclosure processes before coming back to you on anything. So that means there's nothing material at this point of time. We stand tall on governance as far as this company is concerned. And at an appropriate time, we will definitely inform all of you, which is the way we've been always doing business in India.
Fair enough, Rajiv. Just one last question before I let you go. You said that you were targeting around 25,000 outlets. Where has this number gone right now, and what does it look like in terms of outlook, FY26 down the line?
Yeah, I'll give you an indicative number, but we are between 22,500 to 23, and I think we are well on course in terms of getting into certain geographies which are fairly underrepresented. We've as you know, we've got approximately about 160 distributors with almost 90% more than 10 years of age and doing an excellent job. And we've now started a hub and spoke model where we are appointing micro distributors, particularly in our weaker geographies and states where we are underrepresented. That's well on its way. We had some challenges towards the prior quarter, but we've addressed it, and now we are going full swing. So we should be on way to our target. Now, whether we land at 24,500 or 25 plus, that's a function of how well we execute our plans. But we are monitoring it and supporting the teams to ensure we deliver it.
Right, Rajiv, thank you so much. We leave it at that. Thank you so much for taking our time and speaking with us at NDTV Profit. Always a pleasure talking to you.
Thank you, ma'am. Thank you for having me on the show.
Yeah, all right. Shifting to our queries now, we have Anup Bhattacharya who is calling in from Kolkata. A very good morning to you, Anup. I believe कि आपकी query Ujjivan Small Finance Bank पे है.
Yeah, very good morning.
Good morning. Go ahead with your query.
So, I'm a new joiner of the stock market, and 3 months back, though I have various types of stocks, but I have 500 quantities of Ujjivan Small Finance Bank and the price of 40.
Okay.
So I have a longer view, no matter it will take 2 years or 3 years. And few days back, the Ujjivan Small Finance Bank is applied for the universal bank. Okay. So I just want to the long-term view. That's it.
Okay, Arup. So you've studied the company well before buying it, if I'm not wrong, right? And you want a fundamental view on this?
Yeah.
All right. Saurabh, I'll come to you. Ujjivan Small Finance Bank, what's the view?
It is because of the problem with the balance sheet, rising delinquency, rising NPA, the stock got hammered down. I think maybe he'll be able to get his purchase price because of the bounce that is coming in. I think he should look for a bounce and exit close to his purchase price, because I feel that the problems are still there for quarters to come. So I think the stock will remain in pressure. It is he can only wait for the bounce to get out.
Ajit Mishra joining us as well. Ajit, hi, good morning, and thanks so much for joining us on the program. The next question is also a long-term question, so I'm going to come back to you, Saurabh, on this one. Vijeta from Kolkata is asking about this, and it's a stock that is under pressure today. Archean Chemicals Industries, this is a company that posted results over the weekend, and it's a 50% decline in the net profit that the company has reported, and the stock is under pressure. There is a little bit of pressure on the operating profit as well. Stock is about 5% lower. But she's pointing out that in December there was fresh buying both by domestic and foreign institutions that she has tracked. And she's wondering whether this is a good opportunity to add for the long term. And she's defining that, Saurabh, as 5 to 6 years. Would you buy?
I think she can take a contrarian call because it is a good company. It is the business which is now which is reflecting adverse condition, because but 5-6 years is a long time horizon, and it is expected that the things will turn for positive for the companies like Archean Chemical. I think in terms of valuation, it looks like a value buy, trading at about 3.5 times to book value. So she may add in a staggered manner.
All right, so that's the view coming in on Archean Chemicals. The next query that we have is on SBI Bank. We've got 1,000 shares of SBI Bank. The time horizon is 5 years. So Saurabh, I'll have to stick with you again. What's your view with respect to SBI? Because the viewer has 1,000 shares, Mohit from Ludhiana, and is holding it from the 184 levels. Should he keep holding it from a 5-year term horizon?
Simon, 5-year time horizon is a very good period, and SBI is a marquee player in the banking sector. And I think in the times to come, when the consumption will rise, it will boost manufacturing and so the credit demand. I think in going next year, the credit demand will surely be higher than the current year, which was earlier expected that it should be good. But anyhow, I think going forward, things will be better. In terms of delinquency, I think the bank is well covered. There is the latest results demonstrate the credit quality of the loans that is given by the bank, and even bank has ensured that to the some of the top 3-4 MFIs it has exposure. The MFIs have also given the bank statement that their credit book is good enough. So in my opinion, I think it is a good buy for next 5 years.
Okay, that's the view on State Bank of India. Ajit, I'm coming to you on Quest Corp. This is a question coming in from Chandrasekharan, who's writing in from Chennai. He's bought at an average price of 845, and he's wondering whether to average at the current market price, or should he sell and book loss? He can hold for another year.
So, Alex, this stock has had a history of volatile swings, is what I've been seeing. So since 2018, if you'll see the stock move from 850 to 150 and then again to 800 mark multiple times. So currently, yes, this time around is comparatively better. Means the retracement was closer to the major averages around the weekly charts around 550 area, and then we are seeing some stability. But for any directional move or any strong uptrend in the stock, we need a close above 850 mark. So it seems unlikely, at least in the near future. But since his view is long term, let's say 1 year plus, I would recommend him maintaining a stop at 550. If it breaks this level, definitely he should exit. Otherwise, he can stay put.
All right, let's take the next question. Niva from Chennai is asking about this. 250 shares of Sigachi Industries, bought at 52 rupees per share. Let's pull up the chart and see where it's currently trading. Niva would like to know whether they should add more at the current level or sell. Need a view for the next 6 to 8 months. The stock is currently trading close to that 40 mark, Ajit. So therefore, would you buy at this moment or would you wait?
Again, here's Alex, if you'll see, it's a very volatile stocks to trade or invest in. And as of now, the trend is clearly negative. Means the recent decisive swing low was around 43, which it breached last week. And since then, we have been seeing gradual decline continuing. The recently, plus we are seeing uptick in the volumes on the down days. So it's again, indicating further pressure in the stock come. So I would recommend liquidating his position, and for any sign of reversal or recovery, the stock should hold above 50 decisively. Then only should consider. Otherwise, avoid.
Okay, that's the view coming in on Sigachi. The next caller that we have is Venkat from Andhra Pradesh. Venkat, a very good morning to you. How can we help you?
Yeah, good morning. Thank you for connecting me. Hello, good morning.
Yeah, I can hear you, Venkat. Good morning. Go ahead with your question.
Yeah, I have 3 stock names I want to buy for 1 year. So one is Motilal Oswal Financial System.
We'll be able to help you with only one stock, so you have to choose between the 3.
Yeah, I want to choose between these 3. CDSL, the second one is CDSL.
Okay.
And the third one is Aeroflex Industries. Among these 3, which one I should select for 1 year investment?
All right. Ajit, on the charts, Motilal Oswal, CDSL and Aeroflex, which one looks more attractive?
Honestly, all 3 stocks are witnessing correction, Mahima, and I feel that there could be more down legs in the recent move. But Motilal, I feel that the stock has retraced very sharply, and there could be a possibility of some consolidation around 600 mark. So he should gradually accumulate, not buy at one go. So maybe closer to around this 600 to 580 zone. He should start accumulating, with 550 being the lower band, and then he should wait it for 700 plus level as a position targets.
I must say that was Venkat. That was very sneaky of you. You're supposed to ask one stock and you asked 3. All right, but we've got the next caller. Firoz is calling us from Kerala. Firoz, good morning. How can we help you today?
Good morning, sir.
Please go ahead.
Yeah, I'm holding Finolex Industries in 1,000 shares at the rate of 249.
Okay.
Should I need to sell or average, or what's your view
so
on
you
this?
bought at 250. When did you buy the stock?
3 months before.
3 months, okay. And when you bought it, Firoz, what was the thinking that you had? Did you buy it based on the long-term prospects?
Long-term prospect. Yeah.
Okay, so you are comfortable holding for 3 years, 5 years?
It's okay. I'm planning for holding more than 3 years.
More than 3 years, okay. So then, on the basis of the fundamentals, Saurabh, you want to come in on this Finolex Industries. It's lost a little ground, 250 or thereabouts is the buy price. I mean, it's lost about 28% in 3 months, so it's very sharp, along with the rest of the market, right? So, would you suggest you can hold on for 3 years?
I think if you look at the markets in the last 1.5 months, many of these stocks have lost to the tune of more than 20%, and so is the case with the Finolex industry. It is in the good space. I mean, in the pipes and tubes segment. And if you look at the December quarter earnings, sequentially there was a growth in the profitability. But if you look at the year-on-year, there was some kind of a degrowth in the profitability. So, in my opinion, I think if you look at the valuation side, it is at very comforting level. For the next 3-5 years, it makes sense to hold Finolex Industries. My take would be a hold.
All right, the next question is coming in from Puducherry, and we've got Kutten who's asking about this. Nalco is the name of the counter that he wants to know about. 199 is a buy price. All right, the question is, should you hold or sell? Short-term view is being sought, and it's a 6-month time frame that he's identified. Ajit, what would you do with this? 249 is the buy. No, sorry. 199 is the buy price.
So Alex, till last week we were seeing that most of the stocks from the middle space were buzzing, and today the beginning is on the negative note, and we are seeing pressure across the board, and National Aluminium is also facing that same burn. But comparatively, if you will see within the metal basket is among the top performers, means it has retraced from its high, but comparatively still we are holding the strongly above this previous swing highs when it comes to the weekly charts and all. So basis that, I feel that if his view is, let's say, 6 months to a year, definitely he can stay put until we break this 180 mark decisively. In the next leg of the up move, once this consolidation is over, let's say in the range of 210 to 190 zone, then probably 235 to 40 is something that the stock might attempt. So yeah, with the 6 month of time horizon, he can maintain with closing stop loss of 180.
All right, stop loss of 180, but you can keep holding the counter as the view coming in from Ajit. The next caller that we have is from Ramesh. He's from Bengaluru and he's calling us. Ramesh, a very good morning to you. How can we help you?
Yeah, good morning. Thanks for connecting me. I want to ask a question on Afcon's infra shares.
Okay.
I have an average price of 480, 3,000 shares.
Okay.
So current price, I mean, I'm just for long term, for 1 to 2 years.
Okay.
Can I average it or can I hold it?
Okay. Did you study the company, Ramesh, before buying it, or I mean, what was the idea behind buying Afcons Infra?
Yeah, I studied it. I applied for IPO. I got some, and then when it is going down, I added actually.
All right.
So I saw the, results also. Is okay, but I just want to keep it that way because it's a very good infra company. That's why I said.
Got it. Saurabh, Afcons Infra, what's the view, and if you have a view on the entire infra space right now?
I think for the entire infrastructure space, if you look, there is some amount of selling, especially after the budget because of the lower capex budgeted in the budget. So with regards to Afcons Infra, I think it is relatively a new company listed on the bourses. I think in the recent quarterly numbers, we saw some kind of a degrowth, good amount of degrowth, I must say, if you look at the sequential numbers. On the valuation side, it is trading about 4.5 times to book value. And I think we should see 2-3 more quarters to get the sense how the company is working on the operation side. Or in my opinion, I think if he wishes to switch over, then he may switch over to companies like HG Infra, which has a proven track record and a good order book in hand. So my sense, in both the situation, from both the situation, he can opt for one. I mean, he can wait for the 2 quarters for the earnings, or maybe switch over to HG Infra.
All right, one more question before we hit the rapid fire round. Black Box is the name of the counter, and Sandeep is writing in from Mumbai asking about it. He's bought at levels of 600. The stock is currently trading sub 500. It's under pressure today, down about 3.5%. What should he do for the short term? Ajit, on the charts, how does it look?
So Alex, the trend that the stock was experiencing earlier, it has definitely deteriorated after the breakdown below 580 mark, and now the stock is hovering around major averages, long-term averages. I would prefer exiting the stock if it fails to hold this 485 mark, because in that case, the long-term trend is also turned southward. So 486 should be a strict stop loss, and use any recovery towards 530, 540 zone to exit your position, because it's likely to consolidate in the coming days.
Okay. All right. So we can't take broad-based questions, Prakash, so I'm going to hold this for tomorrow. But it is time to hit the rapid fire round. This is where Ajit and Saurabh, we throw as many questions as possible at you over the course of 2 minutes. Let me start with a question on on Patel Engineering. We got Swaroop, who's got 35,000 shares and bought at levels of 60 rupees. He's looking for a long-term view. Should he hold or exit? Very large holding. Saurabh, would you hold?
Hold.
Delta Corp is the next counter. Kiran wants a view whether this is the right time to make an entry or not. Ajit?
Avoid.
Okay. NCC, we've got Manju, who's bought 55 at 277. Would you hold or exit? Ajit?
Add more and maintain a stop at 190.
All right. Aegis Logistics is the next counter. 2,000 shares are being held by Menak, and he wants to know whether he should buy at current levels, add more, hold. What should be the view, Ajit, on the charts?
Aegis hold and maintain a stop at 750. Volatile stocks, so be strict with your stop loss.
Okay. Vishwanath wants to know, Reddington bought at levels of 167. Would you hold? He's holding 200 shares. He's not specified a time frame. Saurabh, would you hold for the long term?
Hold for long term.
Okay, Shivani wants a view whether she can buy Suzlon at the current price for the next 3 years. Saurabh?
Buy.
Titagar, if you bought at levels of 1650, would you advise to buy on dips? Puneet wants to know. Saurabh?
Buy on valuation, avoid.
All right, Lemon Tree is the next counter. Should the person hold from a shorter term perspective or sell? Ajit, your view?
Hold, but maintain stop at 130.
Ajit, Keynes Technologies, coming to you on this one. Subhadeep from Kolkata is bought at levels of 4,400. What is the outlook for the next 6 months?
Seems like that it's extremely oversold. Accumulates, stop loss 3,700.
All right, Ola Electric, Saurabh, your view on the counter?
Hold.
Okay. All right, unfortunately out of time on this leg of the rapid fire segment, indeed on the show. Saurabh, Ajit, thanks so much for joining in, for answering all the questions, and absolute pleasure as always having you on the program. All right, and that brings us to the end of this edition of Ask Profit. It's been an absolute pleasure having you on the program, as we normally do, taking all of your questions. We'll be back tomorrow to take even more from Mahima and myself and the team that put the show together. Thank you so much for watching. This is NDTV Profit.
सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021. The second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. Well, today we're taking up Action Construction, and this is actually a construction equipment company which, well, essentially looks at cranes. Now, it was established back in 1995, and it was the world's largest pick and carry cranes manufacturer. It also offers other products which would include construction equipment segment. But if you just look at the way, the revenue split is for the financial year gone by, you see that about over 70% of the revenues come from cranes, and that's followed by construction equipment at around 13%. And let's not forget, you also have material handling at 7% and agricultural equipment, which stands at around 8%. But majority of it comes from the construction and the selling of cranes. Well, what we usually do in this show is that we take a look at the several parameters for this company to assess it on a fundamental basis. So we talk about the income statement over the past few years. We talk about the balance sheet as well as the cash flow statements. Based on these statements, what kind of return ratios are you looking at? And we move beyond that and take a look at several of the other factors as well. That would include the shareholding, the street credentials, street coverage, as well as the valuation picture, which would give you a better idea about where the company stands at this point in time. So, before I do that, let me get in my colleague Puneet Javeri, who is also going to help us shed more light on this particular company. So, Puneet, welcome and thanks for joining in. Let's start by talking about the revenue and the PAT. Over the last few years, it certainly has done well.
Yeah, definitely. It's the company, of course, is a small cap company and getting there in terms of growth aspects. But over the last 3 to 4 years, specifically post the pandemic, we've seen a strong growth across all parameters in the income statement. Revenue, of course, has grown at the 33% CAGR over the last 3 to 4 years. For FY24, it was roughly about 2,909 crore, and it has continued its momentum over the last 3 quarters. It's already achieved this particular number in the 3 quarters of this year itself. So it's doing very well on the growth aspect. EBITDA on a profitability side has grown at a CAGR of 53%, while the overall margins are one of the highest in the segment that it operates in at 16.5%. In the latest quarter of Q3 of FY25, it came at roughly over 18%. And these are some of the stark numbers because, while not a direct competitor, companies like Escorts, Kubota operate in the 12 to 13% in terms of EBITDA margins. And profit as well, coming in at 328 crores, has almost tripled over the last 3 to 4 years. So definitely on the income statement side, it has grown steadily, and it's reflected in the numbers as well as sales performance as well.
So there you have it, some very strong revenue numbers as well as your bottom line, of course. And we're looking at reasonably good margins too. So let's move on and talk about the balance sheet. Now at this point in time, it does look like it has a very strong balance sheet. Sure, its net worth it stands at around 24%. That is shareholders' equity, but it does not have any debt, and the debt it has become debt free over the last few years, and it has cash in bank at around 64 odd crores. So it's certainly looking like it's a sort of favorable place. And remember that because it's into capital goods, well, I know that this can be categorized in many different ways, but essentially, given the fact that the company actually deals in the manufacturing of cranes, is also the reason why in many ways it can be categorized as capital goods. One might expect that there would be a substantial amount of debt on the books, which is not the case, at least as far as this particular company is concerned. In fact, you will have a significantly higher debt even in automaker, an auto manufacturer, but that's not the case for Action Construction. So, of course, the kind of growth that we've seen over the past few years has aided the company in becoming debt-free, which is why we'll give this one a thumbs up as well. But Puneet, then let's talk about cash flows. They look all right as well.
Yeah, definitely. We spoke about the income statement growing at a very steady pace, and that's reflected in the cash flow from operations as well. So it's come in at 433 crores in FY24, and that's grown at a steady CAGR of 71% over the last 3 years. And that's been one of the key positive aspects about this company, that while the revenue has been growing, it has firmly focused on the cash flows as well, and that's reflected in the numbers. While on a net cash flow basis, the company has, degrown in terms of, negative 3% over the last 3 to 4 years, but it has heavily invested in building up capacities. And while you rightly said, Agam, that it has not taken on as much long-term debt, which has benefited the cash flows as well. So overall, while the net cash flow has been negative, it's expected to do better over the next 2 to 3 years, while the net cash flow from operations has been growing steadily and is expected to continue this momentum as well.
All right. So, moving on from your cash flows as well, let's talk about your return ratios, and that will also give you an idea about how things are panning out as far as profitability is concerned, the stability of the returns. And we usually talk about the return on equity, and we talk about the return on capital employed. So when it comes to return on equity, is a very, very healthy 31%. Remember that any number over the mark of 20-25% is a pretty good return on equity, and that is what Action Construction does have. If you move on and talk about your return on capital employed and you judge it by the same standards, its return on capital employed for the year gone by stands at around 43%. And remember that some of these numbers will resemble those of your staples companies. So this is a pretty good return on capital, return on equity, as well as return on capital employed, which is why it's certainly going to be a thumbs up here as well. So if you consider your overall income statement, you consider the balance sheet, the cash flows, as well as your return ratios, it does look like the company is on a very, very strong footing. Of course, we'll talk to the management a little later on the outlook of the company, but so far it has done very well, and it does seem like it has taken advantage of the push in infra as far as the nation is concerned. And to a certain extent, we've also seen that demand come through for the company, which is why we've seen such a strong growth rate. So this is as far as your financial statements go. Let's talk about the shareholding then. And okay, so Puneet, why don't you take up this aspect? How do things look here?
Well, definitely, the promoter shareholding has been very stagnant and not a lot of movement there at 65.41%. And that's one of the key positive as well. While foreign institutions own almost 12% in this particular company, we've seen lower ownership by domestic institutions. So specifically, your mutual fund houses, among others, have lower ownership on the company, but the public as a whole have close to roughly about 21% in the company, and it's a well-diversified company in terms of one of the retail, wouldn't call it a retail favorite company, but specifically one which has been in the radar of investors, and that has, propelled the stock, over the last 3 to 4 years as well in terms of share price performance as well. So Agam, overall, while, promoter holding has been stable, that's one of the key positives. Rest of the factors also don't seem too much of a complaint about Action Construction in the shareholding aspect.
Right. And so now, we're coming to a little bit of a puzzling aspect, and I'll tell you why that's puzzling. Is because I'll talk about the street coverage. And if you consider the Bloomberg consensus, where we don't have anyone who's covering Action Construction, this isn't exactly a small company. It has a market cap at around 15,000 crores, and it has grown from strength to strength, as will be evident, when Puneet talks about the kind of returns that the company has given. But even as you see such companies climb, you tend to see at least sell-side analysts, if not buy-side analysts, initiate coverage. And while we do have a handful of companies, or rather brokerages, cover Action Construction, we haven't seen anything very substantial. at this point in time, which is why, and given the fact that after the kind of growth, we haven't seen any coverage, we're going to give this aspect a thumbs down for now. But in terms of returns, as I was telling you about, well, Puneet, certainly a huge multi-bag over the last few years.
Well, definitely. We've taken the 5-year return performance just for comparison, and it's up almost 15 times. It's given 1,550% in terms of stock price performance. It currently trades at around the 1,200 to 1,300 range, and it's fallen from the highs of about 1,600. That's largely because of market performance. But I did just check the lowest agam for this particular stock price, and it was around 56 rupees in the COVID time. So from there, it's gone all the way up to roughly about 12 to 1,300. And definitely, if someone held on to the share or got in at that particular point in time, it would have been a big multi-bagger for them. While the dividend yield is not too much to talk about, it's a high growth company. It has been investing heavily in terms of new products, R&D, as well as increasing the capacity. So wouldn't take this as a negative, so as to say, while the dividend yield is just 0.16% for this particular company, there are some other factors to look at. So definitely not a negative. It would be somewhat not a thumbs up or a neutral as well, but it's just the fact that while the dividend is low, a high growth company, definitely a big positive for Action Construction in terms of business performance, and they've been investing there as well.
Okay, so that's coming down to the kind of returns that the company is given. It's very evident. It's for everyone to see. Even if you consider the 1-year returns, the returns that you got is positive. The reason why we don't want to consider 1-year returns at this point in time is because the markets in general have taken quite a hit over the last 4 months particularly, and which is why it may not necessarily be fair to especially compare a relatively mid-cap company with the benchmarks, or for that matter, something in the mid-cap, the small-cap company. But I will tell you this, that even on a 1-year basis, it has given you positive returns, even as we see a lot of the other companies reel and under pressure and give you those negative returns. Well, I come down to the aspect of valuations then. And when it comes to that, again, as if you consider the FY24 valuations, based on that, it's coming in at around 46 times. One might say that it does look expensive, but we must also remember that the company has once again shown a tremendous amount of growth in the 9 months gone by. And if you consider that, well, the valuations will be considerably lower, around 30, 35 times. And at this point in time, given the kind of growth that the company has seen, the expectation of the company in terms of growth, well, that would perhaps tend to suggest that the valuations are not unreasonable at this point in time for the company. So which is why we'll give the valuations a neutral stance at the moment, because a lot of the investors are still figuring out what the new normal for valuations is, especially given the kind of correction that we've seen over the past few months. Just want to, Puneet, you want to add a factor here?
Yeah, definitely, because management in Q1, so a couple of quarters ago, had mentioned that they're expecting revenue to grow 3 times in the next 5 years, and I think that's one of the key aspects. And valuation just, of course, comes down dramatically. But we'll quiz that to the management as well once on that aspect of what's the growth aspect going forward. But one of the key aspects to look at, while there's no street coverage to compare with or forward valuations, I think the forward guidance is something that the management has always given and expecting to do well as well going forward.
Well, that remains crucial. So, on that note, I'm going to firstly sum up all the factors that we will put together and give you an overall rating on the company. So we've spoken about the income statement, the balance sheet, the cash flow, the return ratios. It's a thumbs up for all these 4 important parameters. Even if you move beyond that, we are looking at good stability when it comes to shareholding. Of course, street credentials are massive thumbs up because it's been a clear multi-bagger. I'd reckon that it does not have street coverage, so that's one factor which may work against it. But besides that, valuation picture, again, a lot will depend on the outlook. So based on that, it's got a total score of 6.5 out of 8. That's the NDTV Profit rating for the company. Now, moving on, if you just consider very quickly, we have the management standing by to chat with us. But before that, I'll very quickly go through the strengths, weaknesses, opportunities, and threats. So, in terms of strength, of course, it's an integrated player in the crane segment. Given the fact that it has a 63% market share, it does have a dominance in this particular area. and over the past few years, it's built a lot of credibility in its name, against its name as well. So that certainly is a strength. And it crossed the 18% EBITDA margins in the third quarter of FY25. That is the ongoing quarter. That is a quarter just gone by. In terms of weaknesses, again, new segments like agri and machine handling are seeing a little bit of slower growth. And there is, of course, a little bit of slowdown in government ordering. But Puneet, let's talk about opportunities and threats then.
Yeah, very quickly, the new segments we spoke about, the agri and machine handling will be doing very well over the next, 2 to 3 years. So definitely a high growth opportunity there. While new products to be, introduced in the export market, that's something that the company has been mentioning as well, and it's present in the latest presentation as well. And while threats, there's not too much to talk about. Valuations is one of the key things that we discussed at 46 times price to earnings for FY24. While not a direct competitor, something like an Escorts Kubota, which is a listed player in the tractor space, that is trading at a lower valuation, but the growth aspect is there as well. The growth is much lower compared to Action Construction, while, export will have intense competition. But, Agam, these are some of the key aspects of strength, weakness, threats, and opportunities, and I think we'll discuss that with the management as well.
Absolutely. Well, on that note, let's get in Saurabh Agarwal, Executive Director at ACE, that is Action Construction Equipment, who joins us on the show. Saurabh, good morning and thanks for joining in. So far, the company has seen a lot of strength, not just in the quarter gone by, in the 9 months gone by, but over the last 5 to 6 years. At this point in time, there is conjecture whether or not there will be saturation in the markets. I know that the government does have a very ambitious outlay in infrastructure. As far as real estate sector is concerned in general as well, there are plenty of projects lined up, which could, of course, take advantage of the construction equipment that you're in. The question now is, based on the last 9 months, the kind of growth that we've seen, what can you tell us about the growth over the next few years? You've given us a guidance that Puneet mentioned as well. Do you still stand by it?
Yeah, good afternoon. We do stand by what we have said, and the way the country is shaping up, the way the infrastructure and the focus of government on manufacturing sector is there apart from infra, and these are the two main domains in which we operate. I see no reason that we should not be able to fulfill the guidance of, let's say, doubling or tripling our revenues, which we've given in the last 2-3 years. So I believe that within this coming next year, as compared to FY23, we should be in a position somewhere to double ourselves. And then about a year back, we had said we'll triple ourselves in the next 5 years. So I think we are on track. We are seeing reasonable traction again back in the infra segment. Manufacturing has been strong. Our supply side. So I think on the whole, things are moving in the right direction. Even real estate is chipping in well. That contributes about 10 to 12% to our revenue, apart from infrastructure and manufacturing. So I think on the whole, things seem to be in a decent space as per whatever we had planned for our company.
Mr. Agarwal, good morning and thank you so much for joining us today. It's Puneet this side. I just wanted to understand about your export part as well. That's one aspect that you've been focusing on but hasn't reflected in revenues yet. I just want to understand from a medium-term perspective, next 2 to 3 years, what is the kind of potential that you're expecting from revenue in terms of the export market? What percentage? Is it somewhere between 15 to 20%? And do you see it coming from newer categories, or do you see cranes as one of the biggest revenue growth drivers in the export market?
For exports, about 3-4 years back, we had planned that we take it to about 15% contribution within our company, which was at a minuscule 1%. And till last year, we were able to grow it to at about 8% contribution. It has been a little slower this year, owing to a lot of factors, but I'm sure it will catch up. So our medium-term plan is to, get to about a 15% contribution from exports, which I'm sure over the next 2-3 years we'll be able to do. And apart from that, around that time, we had also started focusing on the defense business, and we wanted about a 5-6% contribution at least to be coming from defense, which was a possibility. So in the current year, I think we should be doing about 2.5-3% from defense. But for the next year, with orders in pipeline, which we see, I think the contribution can go as high as 5 to 6% from defense in the next year. So maybe exports and defense coupled together next year can go to 10-12%, maybe slightly more. And our medium long-term target was 20% coupled from defense and exports together. So I think we are on track, and hopefully it should play out well.
Just a follow-up, Mr. Agarwal, in the previous, conference call as well as interviews with us, you mentioned that you were looking to set up a new facility in Africa, and I think that was based on some conditions of some outlay. Just wanted an update on that, and do you see defense being more of a localization theme, or would exports also have some kind of defense component revenue as well?
No, defense is purely a localization theme. And in the past 2-3 years, we worked very closely with DRDO on certain types of cranes and equipment which are required for handling and even for some of the missile programs. And we have already successfully supplied some machines also to that extent. And it's a domestic play with respect to defense. And we are on the verge of getting one of our biggest defense orders. And it should have gone through by now, but yes, stuck up in some paperwork. So hopefully, over the next week, 10 days, we should be getting that one of our biggest orders, which will actually help us, achieving 5-6% contribution from defense in the next year, and maybe even the year after that, because we are supposed to deliver it in about 2 years.
Okay, Saurabh, just talk about the near term, and you have spoken about this particular defense order, but even beyond that, the last quarter, is that also a seasonally strong quarter for you when it comes to a higher amount of orders? Is that also the case for your particular company? And going into the next perhaps 3 quarters, what kind of ordering activity can you expect going in?
See, traditionally for our company, the first half, because of monsoons and the construction activity getting a little slower, especially in Q2. So about the first half is about 40-45% of our revenue. And the second half is 55-60% of our revenue. So definitely Q3 and Q4 are bigger than Q1 and Q2. And obviously, as it has happened in the last 25-30 years, similar thing has played out again. So second half is much stronger for us. So going forward, I think in the next year, let's say H1 next year, it will definitely be smaller as compared to H2 of next year. And, obviously we are going great guns in Q4 every year. And similarly, we are going great guns. So hopefully, I think again, we are on track for our biggest ever quarter again in the current quarter.
Mr. Agarwal, I just wanted to an update on something that you've spoken previously, which is your acquisition strategy. You had a couple of acquisitions over the last 2 to 3 years. Any kind of update that you can give on that?
See, somehow we've not been able to conclude anything much. Apart from the joint venture, currently we are in the process of forming with a Japanese company to make bigger cranes. So hopefully that should take shape by end of this quarter or within the next quarter. And but we are actively pursuing and looking at inorganic growth. So hopefully going forward we'll have some good news.
Saurabh, your balance sheet also looks like it's in a very comfortable position at this point in time, considering the growth plans that you have on the anvil, the kind of demand that you have for your equipment and cranes. Do you think that at some point in time in the next 2 to 3 quarters, you would potentially need more funds, or would internal accruals be enough for you to fund all the operations so far?
I think internal accruals will be good enough. And even currently, we have a capacity of 4,500 crores revenue. I mean, within this quarter, it'll be increased to 5,100 crores. So which should be good enough for us for the next 1.5. We are generating good amount of cash. We have close to about 900 crores available with us in the company for future growth. So I see no reason that we should be looking to raise funds or looking towards debt going forward, unless and until something really big turns up in for inorganic or something. So as of now, we really don't have any plans to raise money going forward. Right. I think we should be able to manage from internal accruals.
Saurabh, also a question on your focus in defense and of course your exports. Are those businesses, are those segments, what kind of impact can it have on your operating margins? Do you think that they'll help maintain them? Because I believe, if I'm not mistaken, we've seen the highest operating margins in the quarter gone by. Do you think that there will be some sort of an impact there, a positive or a negative? What can you tell us here?
See, again, our margins with respect to export or defense business are in line with our company margins. So, they would really not be affecting positively or negatively with increase or decrease in contribution of this business. And primarily, we started focusing on these two aspects of the business to make our business a little counter-cyclical, as it was, 5 years, 10 years back. To have certain more revenues from where we can garner business, which can, give stability to the company when, cyclicality part plays in. So I think to date, we've been able to do it at a reasonable level. And going forward, as we discussed, we want to increase the contribution from these two segments.
Just one last question, Mr. Agarwal. You had mentioned that a new segment could be the electric segment for you in terms of electric crane. How have you seen the acceptance currently in the market for that kind of a product? And do you see export margins to be higher than the domestic margins going forward, or currently what is the scenario for the same?
See, with respect to the electric crane, we had introduced this crane about more than a year back. Then certain government regulations with respect to CMVR and registrations were not in place. And these have been gazetted in November last year. So, and then obviously then we required CMVR approvals from ARAI. So there again, there is still some more clarity which ARAI requires. So I think we are still at least 2-3 months away from commercially being able to sell the electric machines in our country due to lack of regulations with respect to CEV, construction equipment vehicles. With respect to traction and acceptance or the excitement around it, I think all the bigger companies, whether in the infra and especially in the manufacturing space, are really bullish and gung-ho on that, and they're waiting for deliveries, to be very frank with you. It's just that going by the legality part of it, we are just playing safe so that whenever all the regulations are in place with respect to the government, then we should hit the market. So hopefully Q1 next year onward, we should be commercially be able to start deliveries of these machines. We have delivered some machines already, but they are primarily focused on where the registrations are not required. So I think this will start to take shape in the next this thing. There was another part to your question. I missed that, please.
Export margins, is it higher than the domestic play, or is there nothing too much to it, or is there something I'm looking for?
They're definitely slightly better, but those machines are also slightly higher spec. So they're definitely slightly better than the domestic margins, yes.
Okay, Saurabh, we leave it at that. Thank you so much for joining us and shedding so much more light on the company as well as the prospects of the company as well. Thank you so much.
Yeah, thank you. Bye-bye.
Well, and on that note, that is all that we have on this edition of KYC, and a very interesting company that we've covered, but lots more lined up on the other side. Stay tuned to NDTV Profit.
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Hello and welcome to Markets at 12. I am Puneet Zaveri, and let's quickly look at how the markets are doing today. We are seeing some pressure on the Nifty 50, and it's down almost roughly about almost 200 points in trade today. While we started off at a decent juncture, I think since then we've seen some pressure on the Nifty 50. Let's quickly look at the top contributors on the positive as well as on the negative side for Nifty 50, and we are seeing more losers. So HDFC Bank, RIL, Infi, one of the key, some of the key losers there. Let's also look at the heat map as well in terms of sectoral allocation, and we might see some more picture there because we have seen some stocks doing pretty well in terms of trade, but overall not so much. And in terms of sectors as well, almost all sectors are in red currently, and FMCG also seeing some pressure there, down 0.3% as well. But the stock flashing on the bottom of your screen, Varun Beverages currently is in focus on the back of earnings. It looks like a in basis or estimate that the company has met most of the numbers. The revenues come in 3,689 crores versus estimates of about 3,575 crores, with margins also at 15.7% versus estimates of 15.6%. So stock just seeing some reaction as well. But let's also look at the mid cap as well as the small cap index as well, because we have seen some of the pressure there in the broader markets over the past week, and today as well the trend has been continuing. It's not seen any kind of recovery. Let's also look at the small cap, and I suspect that it could be a similar move there as well. There you go, 2.4% almost down. And let's quickly finally look at the Nifty 500, because we've seen again a day where there have been some large movers in terms of stocks. Mazgon being one of the biggest gainers in terms of earnings, while the other ones like Coaching Shipyard also doing very well. Escorts Kubota is expected to report a decent set of numbers in Q3 today, so some positive reaction there as well. While on the negative side, Oil India again reacting to the numbers, and we'll speak about that in this particular in the show as well. While JM Financial is one of the top losers in terms of the BSE 500. But a couple of stocks which are again in focus on the back of Q3 earnings is LIC as well as something like a Zaggle as well. But let me get in my colleague Harsh to talk about what worked in terms of numbers for LIC and what somehow might have not worked for Zaggle. Harsh.
Well, it's a very mixed quarter when it comes to LIC, Puneet. The number itself in terms of top line degrew around 27 odd %. The AP, which is the annualized premium equivalent, which is typically the number which signifies top line, and that degrowth though came at an upside surprise. You saw margins get better on a sequential basis at the very least. When you're looking at it, YOY margins came off a wee bit, but in comparison to what analyst expectations actually were, margins have come in sharply better. And that's the key here. So while growth is getting sacrificed, they're doing better margin product, which is they're getting into non-participating product in a far bigger way. When you're looking at 2022, when LIC actually IPO'd, it had single-digit revenue mix in this particular product category. Now it has a 30% plus mix in this product category. Few would have expected this kind of pivot, and that's why there's been a bit of a surprise when it comes to margins, but you're seeing top line really lag, and that's where likely the key concern will continue to be. Can they continue to grow faster? Also, higher ticket size is the other reason why you're seeing a bit of pressure when it comes to the margin number as well as the overall numbers. Even the growth number, because of the average ticket size shooting up, is likely trailing, and because volumes have come off as a result of that.
Well, thanks for that, Harsh, but stay on, because Zaggle is again in focus on the back of Q3 earnings again, and while it was a very strong Q3 in terms of numbers, there is something the street is taking notice to on the negative side. What hasn't worked for Zaggle according to you?
Well, Puneet, on most counts, Zaggle reported a very strong set of numbers. So you're seeing very strong top line growth. Even sequentially, the growth is 11% plus. What's likely not worked is with regard to margins. Margins have come off both YOY as well as QOQ. And they continue to be a bit of a drag. One is you have operating costs which have gone up. The other thing is costs associated with the business are impacting gross margins. So while the gross profit was up just 7% on a sequential basis versus the 11% growth on the top line count, and that is dragging margins, gross margins a little lower. So that's the first piece. The second piece is with regard to employee costs. They've shot up quite sharply as well. And then you have depreciation costs which have also shot up. Of course, we sought clarification from management on some of these. They remain very positive, because what they are saying is in the next 3 to 4 years, they'll do a 16% margin number versus the sub 11% currently. And that's where a lot of the traction will likely get built. Even your cash PAT margin has come off this quarter. So there's been some pressure with regard to margins, even though growth is extremely strong. They've in fact upped their guidance from 45 to 55% was their earlier guidance to now 58 to 63% full year. And that too, management suggested was a conservative number.
Got that view, Harsh. Thanks for that. But we also spoke to the company's promoter, MD and CEO, Mr. Avinash Godkhinde, about their earnings outlook. Listen in to what he had to say.
Margins, as I said, in 3 to 4 years, we'll be at 15 to 16%, and it won't be a gradual, it won't be a step up. It will be a gradual increase. So you will see margins expand in the coming years as we go along. That's something that we are clear about, and this is not a business where margins have always been suppressed. Historically we've had higher margins. It's just that in the last 2-3 years we've focused a lot on growth. Cash flow has been a focus, and we've gone cash flow positive this year. Last couple of years in our entire journey of about 14 years, we were always cash flow positive. A couple of years we invested more post the IPO, and cash flows went negative, and we are back to positive cash flows now. So same with EBITDA. EBITDA has taken a little bit of a dip in the last few quarters, and we will come back.
Well, that was the management of Zaggle, and did speak about EBITDA margins going to 15 to 16% over the medium term. But stock not taking any respite from that aspect. But in a significant development for PNC Infratech, now the Ministry of Road Transport and Highways has reduced the company's disqualification period for participating in new bids from roughly 1 year to just 4 months now. And my colleague Anushi is bringing more on this key details. Anushi, what has worked in terms of the news which is positively impacting PNC Infratech?
Now this is effective from the 18th October, the period from which they were disbarred earlier only. So let me bring to you the whole picture as to what had happened earlier and what is happening now for the company. So if we see now, the Ministry of Road Transport and Highways, they have reduced the period for the company to be participating in new bids. They were debarred from it for a period of 1 year. Now that has been shortened to 4 months. This is from the date of 18th October only when this was effective. So if we see from the 18th October period, now it's in February, they'll be completing that term itself. this disqualification had come after there were some cases related to the bribery and CBI investigations going on with the company, especially in June 2024 of last year. So the disqualification was a result of this. The company had challenged the appeal to Delhi High Court before. They were looking for a complete revocation of this disqualification, but considering that now the Delhi High Court has now appealed to the MORTH, that's the Ministry of Road Transport and Highways, and NHAI to consider this, instead of giving the full revocation, they've shortened it to 4 months. So this is a significant development for the company. If we see, as now they can start participating for fresh bids from the Road Ministry as we go forward. How the companies were impacted earlier also. Now this 1 year disqualification that we had seen was comparatively much significant to the earlier companies which were there. GR Infra, Ashoka Buildcon, Dilip Buildcon have all been disqualified earlier, but it was the period as to which now they have been disbarred for 30 days, 45 days and 120 days consecutively. But 1 year comparatively was much significant, which would impact the order inflow for the company. So now that the term has been shortened, this could bring another outlook in terms of where the order inflows are concerned, and we'll look out for the management commentary on how this could lead to additional inflows for the company, as to whether they change their commentary on basis of what the order book and the order inflow can be for the company. So PNC Infra is in focus on the back of this.
Well, thanks for that, Anushka. And essentially, a road company not being able to, put in more orders was something that has impacted the stock negatively. And if we can pull up the 1 year chart, we'll see the sharp fall from the 500 odd levels for the company all the way up to 280. And now we are seeing just some recovery today in trade for something like an PNC Infratech. And there you go, it's still down about 29 to 30% and seen that fall from the highs. But certainly if that period is reduced, it will be beneficial for PNC if it can give in more orders from here on as well. But another stock that's in focus is L&T Finance. Now the company has entered the gold loan business with an acquisition of Paul Merchants. And then let's also pull up Paul Merchants' share price performance as well, because while we did see a strong reaction on that in the morning, some taking back on that aspect. Currently at 4.5%, was almost up more than 10%. But my colleague Somit has more details on what could be the potential impact on both these companies.
Well, yes, L&T Finance will be entering the gold business, gold lending business right now, and they have announced that they will be acquiring Paul Merchant Finance Private Limited for around 537 odd crore rupees. Now, PMFL, which is Paul Merchants Finance Limited, has a gold AUM of nearly 1,000 odd crore rupees. They have 98,000 active customers and nearly 130 branches spread across 11 states in the country. Now, what are the positives that could come out from this deal for L&T Finance? Firstly, the gold loan can be a complementary to the rural business, rural MFI business that the company currently has. L&T Finance has a large rural base of around 16 million active customers that they have. Also, this will lead to increased share of secured loans for L&T Finance, which will be positive. Currently, if you look at the unsecured loan, they stand at around 51%. So this could come down for L&T Finance going forward. And valuation at which they have acquired this business is also fairly reasonable, around 1.9 times, which is below compared to what the listed peers like Manappuram and Muthoot are trading at. And also this acquisition will be return on equity and EPS accretive, given the fact that this business is profit generating. And one thing that the analysts have also pointed out is the fact that if they would have undertaken this operation, this business independently, organically, then it would have taken nearly 3 years for the company to scale up to this level. So that's a positive coming out for L&T Finance. However, some negatives that could come out from this deal for L&T Finance is, firstly, there would be a marginal decline in the tier 1 capital ratio, as gold loan carry a higher risk weightage of around 125%. Also, this unit that the company has acquired has a high geographic concentration. Punjab and Haryana contribute nearly 77% to the company's 1,000 crore AUM that it has. Also, PMFL is a wholly owned subsidiary of a listed company, that is Paul Merchants Limited, and Paul Merchants Limited is engaged in business of foreign exchange, tours and travels, and international money transfer. And this unit, that is the gold unit, contributes nearly 50% to the total profitability of the parent company. And the interesting part here is this: despite the fact that this unit contributes 50% to the profitability, Paul Merchant is valued at close to 323 odd crore rupees, and L&T Finance is paying nearly 537 crore rupees for this just one unit, which is nearly 66% higher than the market cap of the parent company. Also, there is an ongoing proceeding by the Enforcement Directorate against the parent company, that is Paul Merchant. However, there is nothing on the gold unit, and the ED investigation is on the parent company. So these are a few negatives that has come out from this acquisition that L&T Finance announced on Friday.
Well, thanks for that, Swami. So that was on L&T Finance as well as, the new acquisition. But another stock in focus is Varun Beverages. And we did address the earnings at the start of the show that it did meet estimates. But I have my colleague Mahima joining with around some fine print on the Q3 results. Mahima.
Right, Puneet. So as you rightly mentioned, the numbers are slightly ahead of the estimates. Revenue is up around 40%. EBITDA is up almost 39% for the company. Margins are flat, however. I'll tell you the reason as to why margins are flat. And net profit is up around 40%. In terms of volumes, the India volumes grew by around 11.4%. Consolidated volumes are up 23.2% for the company. And South Africa volume, which is a new geography that they've recently entered into, the volumes grew by around 12.5% for the company. Now, in terms of why the margins have taken a hit, in fact, the EBITDA margins for the company did improve by around 105 basis points, but this has been offset by the consolidation in the South African markets as well as the fixed cost of the new capex that they've done recently. They've opened 3 new facilities in the past 9 months, which is why depreciation is higher, and on account of that, margins are flat overall. Now, in terms of other things happening with respect to the company, the gross margins increased by around 165 basis points, and this is due to the strategic procurement and storage of PET chips that kind of has availed price benefits for them, which is why the gross margins have improved a tad bit. In terms of EBITDA, there is some consolidations, and the own brands mix has gone higher for the company, which is kind of associated to the fixed cost as well as the depreciation cost, as I mentioned earlier, which is why we're seeing EBITDA margins to be flat at 15.7%. So basically, the volumes overall are good. The numbers are decent, slightly ahead of the estimates, but the margins are flat because of higher capex and of course the newer geographies that they've tapped into, which is why we're seeing a slight downtick in trade, but the stock is recovering as we speak.
Well, thanks for that, Mahima. And we did see the company also raise roughly 7,500 crores via QIP in this particular quarter as well. But stay with us, Mahima, because we have some of the other companies in focus on the back of the quarterly earnings: Brainbees, Amara Raja, as well as Paras Defense. What are some of the key highlights from the results?
In terms of Brainbees, a good set of numbers. The company also just came out with their filing to clarify that the net loss in the same base year, that is Q3 FY24, was 31.5 crore, which is reduced to 7 crore. So the net losses for the company are narrowing, which is a good deal for them. In terms of their employee costs, have gone down significantly, and we've seen that the inventories that they had, the pile-up was there for the company, which is kind of washed out, which has kind of augured the growth in terms of revenue as well as EBITDA. In terms of Paras Defense, the revenue was up around 34%, EBITDA was up 77%. Margins have significantly improved to 25.7% versus that of 19.4%, and net profits have more than doubled from 7 crore to 15 crore for the company. The next in line is Amara Raja, where in terms of revenue it is up 10%, EBITDA down around 4%, margins down by 195 basis points for the company, and net profit was up around 23%. There was a one-time exceptional item of 111 crores in Q3 FY25, which was kind of positively impacting the profits, but they've also received 175 crore towards insurance claim, and the claim was lodged due to fire accident at their Chittor unit on Jan 30th, 2023. So this is the overall view of how Q3 panned out for all of these 3 companies.
Well, thanks for that, Mahima. And we did see that positive aspect of Amara Raja getting more than 100 crore boost on EBITDA. And hence, despite that, there's an EBITDA fall compared to the same time last year. Hence, that strong 4% negative reaction on Amara Raja batteries. Now, but let's move on and look at some of the other key earnings in focus. Borosil, Jyoti, CNC, as well as Oil India is something that we're tracking, all under pressure, with Borosil almost down 10%. Let me get in my colleague Varsha to give us key highlights about these 3 results. Varsha.
Thank you, Puneet. Let me start with Oil India earnings, wherein profit did slip by 1/3. If you see, the crude oil segment revenues was down 8% on lower realization. That's the reason we are seeing overall consolidated revenue which is down 5%. Now, if you see the margins were 41% versus 41.6% last year, so they are down 91 basis points. But the crude realization is down 7% quarter on quarter, and gas realization is down 2% quarter on quarter. And they have production targets where Q3 production was hit by gas sales seasonality and shutdown, and the company is attempting to mitigate lower production by laying more pipelines. Next on my list is Borosil, wherein weak set of numbers. Revenue was up 11%, but EBITDA was down 6.3%, and margins, if you see, the key highlighting factor which is dragging the stock, I think it's the margins. The EBITDA margins were at 16% versus 19% last year, showing the cost pressure that the company is going through, and the net profit was down almost 5%. Last on my list is Jyoti CNC Automation. Well, if you see, technically it's a good set of numbers because revenue was up 19%, EBITDA was up 19%, and net profit was up 65% due to lower tax expenses and lower interest.
Thanks for that, Varsha. But, another key stock which is in focus is Mahindra and Mahindra. Now, the company reported its Q3 earnings on Friday during market hours, but brokerages have come out and, upgraded the stock as well as hiked the target price which they have. So something like a Macquarie has hiked it to 3,643 from 3,511 earlier. And one of the key aspects in the report has been that it's one of the top picks, and mentioned that the underlying auto segment margins have remained strong in this particular quarter to come in at 14.4%. While the new electric vehicle might dilute some of the key margins, it's overall very positive and one of the top picks. Same thing with Nomura, because they've hiked the target price to roughly about 3,681 rupees per share. This was roughly close to 3,664 earlier as well. And they mentioned that the tractor guidance which has been raised has been one of the key positive aspect, and the company is expecting a 15% growth over the next quarter, which is Q4 of FY25, which will also overall help the volumes for this fiscal year. Again, this also is one of the top picks for Nomura as well. While the other aspect is Goldman Sachs increasing to 3,800 rupees per share from 3,700 earlier. All the three brokerages have maintained a buy, and what is working for something like Goldman Sachs has mentioned that the SUV product cycle as well as the tractor guidance raising is one of the key positive aspects for Goldman Sachs. They mentioned that demand visibility continues for both these products as well. While EV demand might have better performance in the next year, this year we've seen some of the key aspects as well. And finally on BOFA, they maintain their buy, and the brokerage has mentioned that they'll watch out for margin trajectory, but overall very positive on the stock. But we spoke to the management as well on what has been some of the key aspects and positives about this particular quarter. Listen into Group CEO Mr. Anish Shah on the quarter gone by.
We've had two major launches in ICE in the recent past. So which is the reason why in this calendar year we don't see the need for a third new launch. We will continue to have refreshes, and we will have a series of launches again starting next year. So from that perspective, we feel that we've covered ICE very well, and we've got a great set of products there where the demand continues to be very strong. We also expect that EV will get demand from rural markets, and rural has done well for us. Even you see on the tractor side, rural's picked up fairly well. And for us, urbans continue to do well as well. I think it's been a function of the products.
Yeah, okay, fair call. So you were saying the existing ICE engines give you the comfort of meeting the rural demand as it would rise. Okay, fair call. Speaking about that only, I think we spoke about this briefly in Davos, but you still remain confident of the tractor upcycle. The RBI governor has done this 25 basis points. And by the way, I want your view on that as well. Do you think that the policy did enough to spur demand in the economy? So two questions rolled into one. One, that, for the tractor upcycle, are things firmly in place if the monsoons work well? And two, is there enough done on the liquidity and the rates by the Reserve Bank in the last 1 month to help corporates like yours in the next 2 to 3 quarters, or let's say a couple of quarters?
So we're seeing good demand on the farm side, and we've said that we expect the fourth quarter to be 15% higher than last year, which is a fairly significant number in the context of where we've been in the recent past. And the rate cut should also be looked at in conjunction with the recent demand stimulus that was provided in the budget. And a combination of both of those two factors, I think, will address some of the short-term issues that we were facing in the economy. And I think we will see a fair amount of demand stimulus as a result.
Got it.
Well, that was Anisha speaking to us exclusively at NDTV Profit. But that's all the time we have on this show. Stay tuned to NDTV Profit for more. But before that, before we wrap up, we have the numbers actually coming in for something like an Eicher Motors as well. And if we can get some of those numbers up on the screen, that's been one of the key aspects, because the results were expected to do very well in this particular quarter. Revenues was expected to grow by roughly about 22% to come in at 4,963. Apart from that, we saw that EBITDA is also expected to rise by roughly about 19% to come in at 1,334 crores, while margins also expected to come at 26.9% on a standalone basis. While there would be a fall compared to the same time last year, the company had mentioned their focus on sales growth in this particular quarter and going forward as well, a change in strategy that they announced in Q2 of FY25. Royal Enfield volumes have also grown by 19% in this particular quarter, while MK suggesting a 50 basis point jump in margins. And for Eicher Motors, this quarter is expected to be very strong, and there was some commentary around the sales figures of about 80 to 85,000. Is that something that's going to continue going forward? It seems to be over the last 4 quarters and the last 4 months as well. So that's going to be one of the key aspects. But with that, it's a wrap on this edition of Markets at 12. Stay tuned to NDTV Profit for more.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में ही ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Do you really know the company you invest in?
What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Hello and welcome. I'm Harsh Saita. With me is Anu Shivakaria, and you're watching Profit Buzzers here on NDTV Profit. Of course, it's a tough day for markets, and let's quickly take a check on where the Nifty is currently sitting at. You're around 0.9% lower on the Nifty as we speak, 0.8 in fact, and it's been a tough day. We're close to the day's lows. Let's pull up the contributors as well, and I'm going to quickly flag off some names as well, which are doing well or not doing as well on the Nifty. Well, Kotak top contributor, but just 5 points. So just judging by that, the breath is tough on a day like this. And on the Nifty, you're seeing just about 9 advances versus 41 declines. This is on the benchmark that we're talking about. HDFC, Reliance, Infi. So some of the heavyweights really contributing in terms of losses, and that's why you're sitting with a net 200-point negative on the Nifty 50 overall. You're looking at the Bank Nifty also not looking pretty in terms of the way it's performing today. And weak global cues essentially is one of the big reasons why you're seeing a tough market today. But if you felt the Nifty was, or the benchmark was choppy, well, surprise, surprise. You're looking at broader markets where the pressure is just insurmountable. Look at that Nifty mid-cap index, Anushi, 2% low on the mid-cap. Yeah. So the broader market really facing the brunt and a bulk of the pressure today.
Yeah, of course, Harsh, it's a sea of red that we are seeing across the broader markets as well. As you've mentioned, about 2% of a drop, which is quite significant. And a lot of this is also on the global cues which were there. This is on the Trump tariffs, on the steel, aluminium exports playing one of the factors into consideration, but it's also the earnings of some of these counters which are in focus. Now, if we are to see what is happening in the mid-cap 150 space, we have about 140 declines as compared to about 9 advances. So clearly in the favor of red that we are seeing. Alchem about 6% down. Oil India seeing the brunt, about 5 to 6% down on the back of the results. Max Health, Bharti Hexacom, some of the other stocks facing pressure in trade today. But let's also look at some of the positive constituents. The Masgao is one of the counters which is up in green, 6% up in trade today. This is after the companies posted a set of numbers which beat market expectations and overall positive commentary. Escorts buzzing on the back of their results which will be announced today. Cochin Shipyard, Page Industries, some of the other counters seeing about 1 to 1.5% of gain. So it's only the Masgao dog which is seeing some bit of green there. Now let's see the small cap 250 space as well. Now, if we see the NetWeb Technology is one which is emerging as the biggest loser in this space, seeing about 8% of a cut. Jyoti CNC, despite posting some decent set of numbers, it did not meet the market expectation. It's seeing about 7% of gains. Do note that this is one of the counters, the IPOs which were the top performers of 2024. JM Financial, Apar Industries, some of the other counters seeing about 5 to 6% of cut. So overall, if you see, Harsh, we are seeing about a sea of red today in terms of
pressure.
Yeah.
Plenty of pressure. Anushi, point taken. I'll just quickly mark out a few more counters. And on the back of numbers, again, plenty of pressure. Borosil Limited is one of those, down 11%. Goldiam is down 6%. Shipping Corp is down 6%. Those are just some companies where numbers were declared. Shipping Corp, just a tough set of numbers as well. No growth visible. Oil India down 6% as well. Delivery is down 6%. Archean Chemicals is down 5.5%. Dreamfolks is seeing pressure, 4% lower. Balu Forgings, after that outstanding set of numbers, still down 4%. Largely also market driven, right? But the pressure, what I'm trying to underline is that the pressure is very, very real, especially on the broader end of the spectrum. Some of the others which are in focus, Tilaknagar Industries is down 20, currently sitting on lower circuit. Allied Blenders is down 6 as well. The Bombay High Court coming out and was it the Bombay? Okay, so the High Court coming out and allowing Allied Blenders the opportunity to enter West Bengal, and therefore Tilaknagar losing out on that count. KPI Green is down 5 despite winning a new order. So just across the board, you're seeing, quite a bit of pressure in that sense. ABFRL is down 4% as well. RVNL down 3.5%. But Anushi, on the back of order wins, there are plenty of counters in focus. I'm sure that none of them are moving meaningfully, but maybe a couple of them are. Let's hear it from you on some of those names.
Yeah, absolutely. So I'll start off with BHEL, which is in focus. They've received a letter of award from Mahagenco, and this is a 8,000 crore of an order that we are seeing. It's a BTG package of Karori thermal power station, which consists of two 660 megawatt units. If you look at BHEL's outstanding order book, that stands at about 1.6 lakh crore. This is as of the December 24 figure that we are looking at, and order inflow was up around 33%. Another stock in focus on the back of an order win is Bharat Electronics. They've received a 962 crore of an order. This is for the electro-optic fire control system. Order book for this company stands at about 71,000 crore. Do note that in FY26, 26 is going to be significant in terms of Bharat Electronics. They have a lot of big ticket size orders in the range of 15,000 to 20,000 crore. Also in consideration, this pertains to QR SAM, which is the surface missile, and other orders as well. RVNL, another counter, seeing about a 211 crore of an order when they've emerged as a lowest bidder for a railway project, and Western Carrier, the other one in the list, with a 1,089 crore order from Vedanta for their logistics services, and this is a contract for a multimodal logistics solution of container-sized cargo. So a lot of these stocks are buzzing on the back of the order wins, but let's discuss more on this with Sharmila, who's our guest for today, Sharmila from sharmilajoshi.com. Hi Sharmila, welcome to NDTV Profit again. Firstly, a lot of these stocks in focus on the back of order wins. Want to understand some of your picks from the list which are there. Which ones do you find favorable in the fundamental outlook?
Also, I think outright BEL and BHEL look the most interesting from the list that you were just talking about. I think Western Carrier, honestly, I have not read too much about the company, and I was just looking at it while you were talking about the order impact, and that looks like a sort of a small cap company. So I don't want to comment on that because I've never really studied it. But when it comes to the other three, I think BEL and BHEL have to be the two stocks that would be on my list. And I think BHEL over BEL, because I think, BHEL as a company has had a sort of a transformative change over the last couple of years. And now what we see is not the BHEL of old. It's a sort of it's come to you in a newer context, and the stock has had its run up and correction from there. But I think, given the current order book, given the fact that the valuations the stock is at, to my mind, this is a very attractive stock at current levels. BL is a stock that I like simply because I think it's in a sort of a niche, and the orders that it can get will go always to BL. So once again, very strong order book. Your valuations, to my mind, are a tad higher, but overall, it's a good stock at this level.
Sharmila, just want to try and understand. So you spoke about valuations in case of BL. Hi, firstly, good afternoon. Good having you as always. Good speaking with you. Just want to try and first off understand. So BL, you spoke about valuations. BHEL is another story. It's all about execution. So they've done well when Q3 is concerned, but otherwise they've had a couple of very, very tough years in terms of execution. In fact, more than a couple. What gives you the confidence that the turnaround is there?
Very honestly, if you've been in the market as long as I've been, then you've really seen BHEL go through a lot.
Yes, absolutely.
I've seen BHEL at 4,000 rupees. So let's not so what I'm trying to say is that, as I said, it's a stock. It's a company that you're looking at in a sort of it's almost like what they're trying to do now is very different from what they were doing earlier. And I think they're on a good track. Yes, there will be challenging quarters because that's the kind of business that they're in. The kind of order sizes that they get are always very large. You're talking of 8,000 crores. For any other company, that would be like a massive order. But, when you look at companies like a BHEL or BEL, all the order sizes are typically very large because you are talking of projects and things which really smaller companies would not even really put their hand into. So these orders have to go to companies like that, and there will be problems along the way maybe. And yes, I do agree, BHEL, which is why perhaps the stock has corrected even before the rest of the PSU space started correcting. But now I think at this level it looks very attractive to me, BHEL. And that is why on BL I'm a little more it's like number 2 on my list, because I do think that there maybe valuations are still a little higher than what that comfort that I have in BHEL I don't have in BL.
Yeah, very interesting viewpoint coming for that. But there are some other reactors also, which very interesting picks. In fact, PNC Infratech, now this is in focus after the Ministry of Road Transport and Highways have reduced their period, which was earlier they had a ban for about 1 year for new bidding orders as well. But now so they have been disqualified for a 1 year period starting from October 18 to 25. Now this disqualification period, however, has been reduced to 4 months. This came after Delhi High Court had instructed the ministry to review the petition filed by the company. The company had filed for full revocation of this, but as a response of this, Ministry of Road Transport and Highways, they have reduced the period from 1 year to 4 months. Now this is significant if we compare it to what has happened with some of the other road players which were there. There was GR Infra, Ashoka Buildcon. They all had faced a similar kind of a ban before, but it was not for a period of 1 year. So when this had happened in October 24, a lot of outlook had turned negative for the company in terms of what their order inflows can be. But this is significant from 1 year to 4 months since now. The period is almost over for the company. The stock is currently about 4% high off the day's highs, in fact. So PNC Infratech is another stock in focus. Another one in focus is Vartech Wabag. Over here, the company has bagged an order worth about 3,251 crore for a sewage treatment plant in Saudi Arabia. Do note that this stock was also one of the reactors that had seen a lot of pressure after their in December 24. The company had notified that the Saudi Arabia's 300 megaliters per day order had been cancelled, which stood at about roughly 2,700 crore, almost equivalent to the FY24 revenue size of 2,856 crores. So Sharmila, I want to come to you on these two counters. While in the past we had seen a very big negative reaction as to both of these updates, one on the back of the order cancellation and PNC Infratech for the 1 year ban. Now for both we are looking at some of these positive developments. So how should one read into these two stock counters?
So between these two stocks, actually, I've been tracking Vatic Wabag for a slightly longer time. So let me talk about that first. This is a stock that I do like because I think the kind of business that they are in, where you are sort of talking of cleansing of setting up cleaning plants for effluents and sewage, etc. I think they are going to find increased sort of relevance and orders even in the domestic context. I think the only thing which I feel has sort of skewed my my liking for the stock has been the fact that we had a period where the domestic orders really didn't take off the way they should have, and then you had all these setbacks from their international order book. So I think once you start seeing their international order book sort of settling and doing well, then I think this stock begins to look attractive to me. But according to me, the bigger story would be when when the cities in the domestic context, the smaller cities, tier 2, tier 3, river systems, etc. When you start talking of orders for effluent cleaning, etc. But that said, as I said, this is a stock that I do like. Where PNC Infra, as you said, completely, given the fact that the valuations the stock is at, the correction that it's had, it's definitely looking attractive post the ban period getting reduced. And let's not forget, even over there, the broader story that's playing out, the kind of road network that we are talking of, is a very strong story to where the potential is good. So that I think is something that I'm trying to say is a commonality between the two, that the potential for business that they can get is very good for both Vatic Warburg as well as PNC Infra.
Sharmila, fair enough, but just a follow-up on the road developers which are there now. If we just go back to the budget, we've seen a flat change almost. There was nothing. In fact, if we see the order picking up, that has happened at a later part of the year. So what is your outlook on some of these other road developers also which are there in the space? Let's take the likes of Ashoka Buildcon, Dilip Buildcon. Do you think that the valuations of some of these counters are fair or favorable, considering the ordering activity has remained comparatively muted?
I think one thing that we need to understand is that when you start when you're looking at road building projects or any of these larger projects, which is something that you need to keep in mind when you're looking at a lot of PSUs also, where suddenly they corrected a lot, is that a lot of these orders are very long gestation period orders. So once you have an order to make a large stretch of road or a piece of an highway, that's an order that's going to stretch over years. So maybe you're seeing a slowdown in this year, but as those projects get completed and handed over, whatever, we know that the focus is going to shift to another area and another set of road networks. So you have to always keep that where you are in terms of as a country and a country of our size, in the kind of roads that we require and where we are now and what the potential is. So from that perspective, I think a lot of these stocks are okay. You need to look at their order books and realize that yes, this year, as you rightly pointed out, we aren't seeing that the budget didn't give us that sort of excitement that this is going to be the kind of money that we are going to spend on roads. But if you look at the money that the orders that have already been given, as well as what money could still be spent going ahead, that is what actually sort of gives me comfort when I look at these stocks.
Interesting that we've spoken about infra and the way those stocks have done, at least over the last week or so since the budget, they've been under some bit of pressure. PNC Infra, of course, seeing a bit of easing of that today. But let's switch from infra to insurance, because that's the other place where there's been plenty that's happened over the weekend. I want to first start off with life insurance. Private players showing very strong growth in the month of January, which is a big positive. You have undemanding guidance compared to the kind of growth numbers they've posted for January, which is again a big positive on the private life insurer side. We can flip the graphic onto especially something like an HDFC Life. Very fast growing for this quarter. Also, they've done very well for the year, and in terms of guidance, they seem to be on track to beat it. And likely that's one stock which is in focus. The other one, though, the other two though will be Axis, Max and iPro, where they've had a kind of a tepid kind of a number in terms of growth compared to other private life insurers. So that's one part of the headline, of course. The other part is with regard to general insurance. And when you're looking at general insurance data, again, something like a Star Health not doing as well, but Niva Bupa sitting in the green as we speak, despite some lock-in expiry that's happened. And Niva Bupa has grown 15.5%. Not only have they acquired or added market share this month, and that has consistently been the case, they've also added to their market share in the overall insurance industry. And that's why, definitely Niva Bupa is something that we'll keep our eye out on today on the general insurance side of things. I'm also curious to know, and if you can pull up the graph for ICICI Lombard, not sure what that one is doing in trade today, but I'd be curious to know as to what it's doing. There you go. That's Lombard for you. Flattish kind of move on the back of, again, numbers. So those are some numbers coming in for you. Also, you had life insurance, LIC of India's Q3 numbers. Again, the performance overall was very, very mixed. It was a completely mixed bag. And we've spoken about it through the day. Let me take Sharmila's views on some of these counters. Sharmila, I'll break my question up for ease. Life insurance first. Is this a pocket that you're liking? Because some of the stocks have really come off from the highs. One. Point number two, growth seems to be coming back, at least on the private side of things. And number three, it's been a while where they've had a flattish move as well. If you look at the last year or so, you've nearly got zero returns for an HDFC Life. It's 3 years now. So what's your take?
Oh, a very interesting space, and I agree that you sort of need to examine both the insurance spaces separately. Life insurance as a space has been something that I've liked now for over 7-8 years or so. So the thing is that you, of course, need to keep the demographics at the back of your mind, the demographics that India has as a country, and the penetration levels. I think, whether you're looking at insurance products or any of the financial products, whether you're looking at stock markets or any of these mutual funds, you need to bear that in mind, that where we are in terms of the kind of the number of people who have insurance plans and how that business can go up. I don't think that we should sort of straight away compare ourselves with any developed country, etc. That, they have so many people who have insurance, because, we are not that country. But even then, I think given our demographics, we still have a long way to go. So my strategy to cut a long point short has been to buy a basket of stocks, because I've liked SBI Life, HDFC Life and ICICI Pru Life for different, because I think on different parameters, they do sort of better than the other. So like an HDFC has the backing of the HDFC name. SBI Life has been able to, actually, to my mind, barring this quarter, I think over the last couple of years, the numbers that they've given have been better than the other. So the strategy has been really to buy it as a basket and see where it takes you. But this is a very, very long-term view. And as I said, that life insurance is a space that I continue to like.
Sharmila, it's a long show, but I've been warned that we're already exceeding time. So if 30 seconds, you can give us your view with regard to health insurance and 2 names that you like within that space.
So one is this Niva Bupa that you spoke of.
Yes.
And overall, I think, health insurance has been a bit of a laggard. I really don't know why. But within that space, given the numbers, given the valuations, I think Niva Bupa is a good one.
Okay, interesting. The other set of stocks which are in focus is because of listings that have happened. You have anchor lock-ins which are getting expired, and a ton of them happening today. And I want to quickly mark out some of those counters. You have Quadrant Future Tech down 20% as we speak. So locked in lower circuit. Unicommerce 10% lower. Acme Solar is 9.5% lower. Standard Glass Lining is 4.5% lower. Then you have a Swiggy, Ola, Seagull, all anything between 1 to 4%, maybe 3.5% lower. And then you have Niva Bupa sitting in the green after those numbers, as well as some amount of lock-in expiry, and Brainbee is also sitting in the green after a very strong set of numbers. So those are some stocks for you, and I'll tell you why Quadrant Future Tech is doing what it's doing today. Unicommerce too. We'll pull up the table which is sitting in front of you. We can look at Quadrant Future Tech and Unicommerce in particular. There you go, Unicommerce and Quadrant. Look at the kind of gains that they've posted post their listing. This is the gain post on IPO price, of course, and therefore the lock-in expiry of 6%, 44% and 2% for standard glass, likely those investors getting incentivized to liquidate some of their holdings. It's likely is what I'm suggesting, and that's why you're seeing the reactions that you are seeing on the counters today. A quadrant future tech has given very strong returns on listing. Unicommerce as well, 40% is no mean feat, and therefore some of those investors really liquidating their portfolios. But Sharmila, what's the sense like? We've seen a slew of IPOs, and when you're looking at that list, and when I was building that list today morning, what I noticed is most of them haven't done well post their even compared to their IPO price. So even if you were the lucky investor to get the IPO, you've not really made money. One, is that a concern, and should one stay away? Is that what you would infer from that?
Well, I actually stay away from IPOs. But the people who play that game they know what they're doing, because they know when. So the market gives them those times when the market is good and the issue is fancied, and they get the listing gain returns and they're out. So if I like a stock, typically, like for instance, if there is none in this list, but if there is a stock that I want to invest in, then I'll allow it to list, wait for 3 or 4 months, let all these actions happen. Then, of course, this is now a new dimension, whether there is any outstanding shares which where the anchor is going to come and sell, then you wait for those times, see how market and the stock is reacting at that time, and then you look to buy what you have to. Because, I don't think that for the first 90 days, you really get a sense of what is really happening in terms of the performance, as well as, just the market fancy. So I typically wait it out for 90 days, and but what I do think is that having a very healthy IPO market and having these investors who invest only in IPOs is always a sign of a good market.
Okay, so pros and cons to it. Sign of a good market, maybe not anymore, is what Sharmila seems to be saying. But anyway, we'll slip into a very short break with that. Sharmila, please stay with us, because we'll continue to address stocks on the other side of this very short break.
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims?
And welcome back. You're watching Profit Buzzers. It's time to shift focus to the auto space. First up, we take a look at M&M with brokerages across the board retaining a bullish call on the counter. In fact, they've hiked target prices for various of the brokerage notes that we've seen. We have Puneet joining with more details on this.
Well, thanks for that. So definitely, Macquarie, Nomura as well as Goldman Sachs have hiked the target price that they had on something like a Mahindra and Mahindra. The steepest one is from Goldman Sachs. They raised it to 3,800 from 3,700 earlier. And just want to collate the three key points that most of the brokerages are making in this particular aspect. We'll get the target prices hikes on the screen right now. The first one, now Macquarie is expecting that the tractor demand as well as the margin outlook for the passenger vehicle segment as well as the tractor segment augurs well for the company in the last 9 months. It's expected to do better in the next 2 to 3 years as well is what they're estimating. They mentioned that the underlying auto segment margins, while they've remained strong, the new electric vehicle venture, while might dilute the margins somewhat a bit, it will give a positive pivot over the long term in terms of sales growth as well as new market creation for the electric vehicle space. Nomura has mentioned that the guidance raised in some terms of the tractor market and expecting a 15% growth in Q4 of FY25 is another key positive. And finally, on Goldman Sachs, they like the visibility that the company is providing in terms of most of the verticals that they operate in, and they are bullish on the electric vehicle venture that the company has focused on with deliveries and bookings starting from February 14th itself. So overall, it's a big positive pivot. We're seeing some stock reaction today on the back of valuations itself or market correction as a whole. But fundamentally, the Q3 was a strong quarter with brokerages coming out and hiking target prices.
Okay, a big positive for M&M that we are looking at, but two other big auto companies are reporting their results today, which includes Escorts, Kubota and Eicher Motors. Puneet, want to understand what is the street expecting from these two counters as well?
Well, it's expected to be a positive beat from both the companies, but Eicher Motors today will definitely get the pivot on the back of strong sales that the company has reported in Q3 of FY25. Now, revenue is expected to rise 22%. EBITDA margins are expected to, while fall by 110 basis points, it's going to come at 26.9%. with the company's renewed focus on sales growth rather than overall EBITDA margins. Profit as well is expected to rise 23% to come in almost at 1128 crores, and that's led by a 19% growth in sales seen in Q3 of FY25 for the Royal Enfield segment, and similar growth levels seen for the Volvo Eicher commercial vehicle segment as well. It had the highest growth in terms of the industry for VECV, and that's another positive pivot that overall margins might get a big push as well because discounting has been lower in this particular quarter. Another aspect is Escorts Kubota. They're expected to report a decent set of numbers. Revenues is going to be expected to grow by 35%, while EBITDA is expected to rise 26%, but overall margins will fall to 12.6% because the growth of EBITDA hasn't been as strong as the revenue, while the net profit is expected to rise 13%. Now, there are two key aspects to note in terms of Escorts. One is that they've sold off the railway business to Sona BLW, so we might see an impact of those numbers. And the second aspect is that the Kubota JV was amalgamated in the same time last year. So on a base effect also you might see some negative impacts. So watch out for these two factors. But overall between the two, Eicher is expected to take the pivot of growth as well as strong Q3 in this particular quarter.
Okay, so that's the overall view for the auto sector. Eicher definitely focus would be there, but let's go across to our guest Sharmila for her fundamental take on some of these counters. Sharmila, what's your view on M&M and others? And also let me introduce our another guest who's joined us, Amit Bhuptani, from the derivatives and technical research analyst from Nirmal Bang Securities. But coming to you first, Sharmila, your fundamental take on M&M. We are looking at a positive set of reaction across brokerages, across what the result has been. But Eicher Motors, also another stock which is in focus.
Yes. So overall, this is a basket that I like. I do, of course, own Mahindra and Mahindra, and I'm most positive on that. I think the kind of launches that they've had, the results they've given, their EV launch, I think that's going to be something very exciting to look forward to. Also, the fact that within Mahindra, if you see, there are 3 or 4 big sort of companies that we are talking of. So I think if you're looking at an investment with over the next 2 or 3 years, which is the kind of investment horizon we are now talking of, then I think Mahindra and Mahindra is a reasonable bet.
Okay, M&M has a reasonable bet. Amit, coming to you on some of these counters, Eicher Motors, M&M, what is your preferred pick over here? Or do you have any other counters which are in focus in the auto space?
Overall, if we need to select any auto counter, M&M looks positive. I also recommend it to other media channels also. Currently, if you look at the setup is very strong. Volume is continuously getting added on daily basis. And if you look at the daily setup on the daily chart, head and shoulder pattern is also getting broken out. So currently, strength seems to be on the positive side. Once this counter gives closing or gets stable about 3200 level, then we will see another 150-200 points momentum on the upside.
Sharmila, I'll also be curious to understand from you, how best do you play auto? Would you play it through the two-wheeler? Would you play it through the premium PV? Would you play it through CV? Would you play it through auto ancillaries? How exactly would you prefer playing it at this point? Given that there are global headwinds, domestic also has a high base. How should one play it?
I think through two-wheelers and through the 2 electric two-wheelers more specifically. And the reason why I like electric two-wheelers is I think that we are going to see a shift, and we are already seeing a shift, especially in the smaller towns within the country. If you do any background check, you'll see that in most of the smaller towns, a lot of people are shifting to electric two-wheelers. And within the two-wheeler space, I think all the listed companies have a presence in the electric two-wheeler space. At the current valuations, my top pick would be Hero Motors. I own TVS Motors. That's done well for me. But at current valuations, I think that Hero Motor looks best poised, to my mind, to take advantage both of the electric two-vehicle play as well as a recovery overall that you would see play out in two-wheelers as a market, and the valuations Hero Motors is there.
Amit, curious to know your view with regard to Hero. Stock is down nearly 2.5%. We've fallen well to the day's low at this point. You can also have a look at the intraday chart while Amit speaks. It's a very interesting chart. So Amit, where to from here on Hero?
If you look at the Hero MotoCorp, the counter is still trading in the range. Downside, the support for the stock is at 4100, and the upside, the reversal or else where the short covering rally will be witnessed will be above 4300 level. So currently 4100 to 4300 level is the range for the stock. Once the range on the support of 4100 gets broken out, then only next leg of selling we will witness in this counter. But till the time it's not going below 4100 level, till that point of time we should hold the long positions, because once if counter gives close above 4300 level, the reversal pattern will be converted in this counter, from where we will see fresh buying opportunity in these counters.
Okay, all right. So, that's with regard to everything auto. But let's shift focus to more earnings. Let's bring in Varsha to talk to us about some companies which have reacted negatively on the back of Q3 earnings, or rather just reacted. Varsha, talk to us about some of those numbers.
Yes, thank you for that. So let me start with Zaggle Prepaid. If I were to talk about a few takeaways from Q3 numbers, they had a strong revenue growth, which is a key positive, but the margins hit were due to rise in incentives and cashback and rise in employee cost, and the sharp increase in depreciation have hurt EBIT and EBIT margins. They've raised the revenue guidance of 58 to 63% growth in FY25 from 50 to 55% last quarter that they had given guidance. And to meet this guidance, the revenue needed in Q4 will be around 335 crore. But if you see, if they do 335 crore in Q4, there won't be any growth quarter on quarter, and year on year also there would be growth of only 22%, while the company has shown 50 to 60% growth in all the quarters. So maybe this is the reason why the stock is under pressure. Next on my list is Borosil, wherein revenue was up 11%. The EBITDA, if you see, was down. Margins, the key highlighting point here is the drag down in margins, which were 16% versus 19% last year. Now this shows the company going through cost pressures, and which has affected their EBITDA margins, and the net profit was down 5%. Next on my list is Oil India, wherein profit has slipped by 1/3, and if you see, the revenue is down 5%. Crude oil segments revenues were down 8% on lower realization. This has affected overall revenue for the company, and EBITDA was also down. Margins were down 91 basis points. And if you see, the crude realization were down 7% quarter on quarter, and the gas realization was down 2% quarter on quarter. They do have production targets, wherein Q3 production was hit by gas sales, seasonality and shutdown, and the company is attempting to mitigate this lower production by laying more pipelines. Last on my list is Shipping Corp. Again, revenue is down almost 2%. Margins have taken a hit at 27% versus 31% last year, shows the cost pressures that the company is going through, and the net profit was down almost 44%.
Interesting. Thank you so much for that, Varsha. Let me go straight across to Sharmila. Sharmila, two stocks out of those three are clearly on my mind. One is Zaggle. Rarely do you see a stock like that correct 10%. Whatever the cause of disappointment, fast growing company, 70% on the top line front, guiding for 15 to 16% on the EBITDA count by FY28, and nearly doubling revenue every 2 years, or maybe more than doubling revenue every 2 years. Is this a good time to buy, or would you want to wait and watch?
We are talking about Zaggle, right?
Zaggle, yes, please, Sharmila.
Because I lost connectivity a bit. So
No,
I
sure.
think very honestly, they paid the price a little bit because market was expecting more, and there was, I think, that sort of commentary that seemed to suggest that so it was a little overhyped, what the numbers could be, etc. But clearly, I agree with you, as you pointed out, the kind of numbers that they've shown, the growth that they've shown, there's definite potential over there. I would just play safe and watch it for another quarter before making an investment in if you didn't have one. But yes, the numbers were good, and I think it's the kind of correction that you're seeing is a little bit overdone to my mind.
Amit, your view with regard to Zaggle? Stock is down 10.
I like this counter. Overall, if you look at the setup from last 1 year, it is continuously trading on the upper trend, and I'm expecting more buying can be witnessed. In today's session, we are seeing a 10% downside. The stock is trading on the lower circuit, but on the downside, the support for the stock is at 380 level, from which we will see the supportive base to getting created, and from that buying will be converted. So once again, if the counter comes near 390 to 400 level, at that point of time, we can create new long position with the support of 380.
Okay, so that was the technical view for Zaggle. But let's bring in Mahima to discuss more counters which are reacting on the back of earnings. We also have Varun Beverages included in this list, which just came out with its numbers. Mahima, over to you.
Right. So before I go to Varun Beverages, I'll address Gokuldas Exports quickly. In terms of the revenue, it was up by 79 odd percent. EBITDA was up 67%. Margins did take a slight hit from 11.3 to 10.5. Net profit was up 65% for the company. Strong order book and even better execution is what has led to this growth. Exports grew by 18% for the company, and overall margins were lower due to cost build-up in the MP unit. Now, cost build-up in the MP unit was to meet the execution and delivery timelines of the new export orders, which is why we are seeing a tad, downtick in the terms of the margins. Overall, capex expenditure in 9 months FY25 stood at around 122 odd crores. And in terms of long-term opportunities, China is losing market share due to rising labor costs and geopolitical trade issues, which is why Gokuldas going forward could benefit from the overall sentiment that's been going on. In terms of Varun Beverages, great set of numbers. The numbers are pretty much in line, a tad bit even higher than what the street estimates were. But in terms of revenue, it saw an uptick of 40%. EBITDA was up by around 38 odd percent. Margins were flat by around 15.7% at 15.7%. I'll tell you why that has happened. And net profit was up 40% for the company. But with this, Varun Beverages has also came out and said that they've used the QIP proceeds and they're now completely net debt free from this particular quarter. Gross margins did see an uptick, and this was because the overall PET inventory that they have, they've managed that in such a way that the PET prices were kept in check, and which is why their margins, gross margins expanded, but EBITDA margins were in pressure, and this is because of the new new plants that they've done in 9 months FY25, which is why the depreciation was higher, and that is why we are seeing that the margins were flat at 15.7%. In terms of volume, good set of numbers in terms of volumes as well. The consolidated volumes grew by 23 odd percent. India volumes grew by 11.4%, and South Africa, which is their recent new geography that they've tapped into, the volumes were up by 12.5% for the company. So good set of numbers, but the stock is seeing downtick in trade today, and this could be because the overall market sentiments are also under pressure. The last one is Brainbees. Again, the losses for this particular counter have narrowed. In terms of the numbers, revenue is up 14% for the company, EBITDA was up 84%. Margins were at 4.9 and they've significantly improved from 3.1%. Net losses have come down to 8 crore from 31.5 crore. They've also sent out a corrected filing where they had wrongly mentioned the net loss for Q3 FY24, which was 116, but the corrected filing says that the loss was around 31.5 crore, but still the losses have narrowed down to 7 odd crores. In terms of net losses being reduced, this is because inventory has been sold in this quarter quite significantly. The employee share-based payment expense is nearly half for this quarter, and the India multi-channel segment saw growth of around 15% for the company, and international revenues has grown significantly by 26 odd percent for the company. So all of these factors are working in the favor of the company, which is why we did see a good spike in the stock in the start of the trade, but it has come off and it's trading at 0.6% higher.
Well, thanks for that, Mahima. A lot of these counters, well, they started on a positive note, have faced pressure at the current juncture of the day. But let me go across to Amit for something like a Varun Beverages, which reported its numbers. It's a strong set that we are looking at. But over the last year or so, we have seen the stock down in pressure, seeing about 3 to 4% of cuts over the last 1 year. What's your view on something like Varun Beverages?
If you look at the overall setup from last 4-5 weeks, we are continuously seeing selling pressure is being witnessed in this counter. And as per the technical setup, the chart is still not giving any confirmation for the new long position to be get created at this point of time. So there will be a wait and watch recommendation in this counter to create any new long position. Once the counter goes above 560 level, then only new long can be created. At this point of time, I am expecting more selling can be witnessed towards 520 to 510 levels.
Okay, so and Sharmila, coming to you on view of some of these counters which are there like Varun Beverages, Brainbees, first along with something like Gokuldas Exports, what's your view?
All three are very interesting stocks because Gokuldas Exports has, y'all were the commentary and everything that we heard, and the fact that the geographies that were in the textile markets, whether it's Bangladesh, Vietnam, China, they are all facing concerns. And this is a sort of a stock that has been consistently doing well for a long time. So if there is very little that I like within the textile space, but Gokuldas Exports is definitely one of the stocks that I like. Coming to Varun Beverages, again, I think interesting business model, and the fact that once you have talks of a very the summer the season building up, you are going to see a lot more recommendations coming for stocks like Varun Beverages. And I think Brain is again very interesting because you're talking of First Cry, which is clothes for children, and we can easily make a case saying that now that you have this where you are expecting people to spend more within that tax bracket, which is now that with less than 12 lakhs, etc., you are going to have more spending money. People do typically spend more money on babies and children, and this is completely in that space. Losses have narrowed. So, I think all three stocks are extremely interesting. Probably, what I like best is Gokuldas Express.
Okay. All right. Let's move on though. Some counters buzzing on the back of key partnerships agreements. Tejas Networks, BHEL and Hitachi Energy are such counters. I know Sharmila is very constructive BHEL anyway. But you know what? We're going to first go to Rucha, try and get some perspective on some of those before we go across and take views. Rucha.
So here are the key partnerships in trade today. Number one is BHEL and Hitachi. Well, both of these companies have received an order from Rajasthan Part 1 Power Transmission Limited. Now, this is a special purpose vehicle under Adani Energy Solutions Limited. The project is for establishment of 2 terminal stations in Rajasthan and UP, and this one is to be executed by 2030. Well, talking about the order book that BHEL has, it stands at about 1,60,000 crore rupees as on 31st December last year. Order inflow was up about 33%. Next one is Tejas Networks. Well, the company has partnered with NEC Corporation Japan for 5G technology collaboration, and this involves an investment worth over 525 crore rupees and which is payable over next year.
Okay, so those are some counters which are buzzing in trade. Sharmila, if I can quickly come to you with regard to something like a Tejas Networks, quick views.
Very honestly, not a stock that I really ever recommend.
Okay, all right. So that's the view coming in. Amit, any views on any of these 3 counters, if you have?
If we look at the BHEL, I am expecting the counter is giving a downward trend line breakout about 212 levels. The stock is from last 4 weeks continuously trading between 190 to 205 levels. So 190 is currently the base for the stock and support for the stock. Once this counter gives breakout about 212 level, then there will be a strong buying recommendation in this counter. So we should wait for 212 level in BHEL to get a breakout above 212 for the target upside towards the 230 to 40 levels.
That's a view for BHEL. But another stock in focus is Tilaknagar Industries, also not so well for the company. This is after Bombay High Court dismisses company's plea in Mansion House trademark dispute. However, granted AVD's interim application allowing it to enter the West Bengal market with Mansion House branded products. Mahima joins in with more details on the same.
Right. So basically, Bombay High Court has dismissed plea in Mansion House, and this is an intellectual property dispute. The court has granted Allied Blenders now for the permission to enter West Bengal markets with Mansion House branded products. This is a temporary stay, and there is a temporary stay granted to Tilaknagar to file an appeal as well. So Tilaknagar will not be able to file an appeal to some extent, to some time till the stay is there. And in terms of the company, it doesn't see any financial implications of High Court decisions as of now, but we are seeing that the stock react pretty negatively to the kind of outcome that has come. In terms of the timelines of the event, to give context as to what has happened exactly, in 1987, Tilaknagar Industry had entered into an agreement with U2O, that is Herman Jensen Beverages, to obtain the ownership rights for Mansion House as well as Savory Club trademarks. In 2011, this was also disputed by the Herman Jensen Beverages, but the court back then, High Court back then, ruled in favor of Tilaknagar Industries, rejecting Herman's claim. Now, post 2011, Herman did appeal Bombay High Court decision, and the final verdict is still awaited for that particular counter. But 2025 February is when the Allied Blenders also bought in 50% ownership rights from Mansion House as well as Savory Club brands in India from Herman. And after this, ABD has kind of asserted that the agreement between ABD and Herman is illegal. This is what the overall Tilaknagar assertion was, and they've kind of violated Tilaknagar Industries' right, which was kind of upheld by the Bombay High Court, which is why we are seeing that Tilaknagar is under pressure today. But Allied Blenders is not seeing that kind of uptick because the clarity is yet to be seen as to how West Bengal markets are being tapped by Allied Blenders as well. In terms of why Mansion House, particularly as a brand, in FY24, Tilaknagar did, give 85 lakh cases of sold 85 lakh cases of Mansion House brandy itself and 4 lakh cases of Mansion House flandy, and overall 112 lakh cases were sold in terms of IMFL, that is your Indian manufactured liquor. In terms of brandy, why brandy matters? Well, right now brandy accounts for 20% of the total IMFL market, which is why we are seeing that the growing demand for brandy in India is very high, and this this court verdict kind of hampers the overall manufacturing and selling of brandy by Tilaknagar itself. And Mansion is a big brand when it comes to Tilaknagar in place, which is why we are seeing Tilaknagar facing the brunt of the High Court verdict case.
Thanks for that, Mahima. Sharmila, I want to come to you across for this. It's a big setback that we're looking for Tilaknagar Industries. Also, Mahima spoke about Allied Blenders as well. Want to understand your view considering the setback that the company is facing in terms of the Mansion brandy which is there.
So clearly both companies are not doing well in the market today. So the uncertainty hasn't gone because you don't know how things are going to change over, and the timelines are so long. You have something that is bought in 1987, then 2011, then 2025, etc. So I think it is better to focus on. It's an interesting sort of a sector to be talking of on a Monday afternoon. But what I would really like to recommend, therefore, is a Sula Wines or a Radico Khaitan, because I think this is a great market to be in, and Sula is available at great valuation. So why go into something where there is a little bit of uncertainty? By Sula.
Sula is the preferred pick in the Alco-Bev space. But Amit, coming to you on some of these counters in the Alco-Bev industry, how are you playing it at? What is your pick in the space?
If you're looking at both this counter, Tilaknagar and Sula, both are not getting recommendation right now. Both are continuously trading in a downtrend, and more selling can be witnessed while going ahead. So my recommendation will be wait and watch for this counter. I am expecting more selling will be witnessed while going forward.
Okay. Thanks so much, Amit, as well as Sharmila, for joining us this afternoon. We're completely out of time on this edition of Profit Bazaars. Hope this was insightful. Stay tuned to NDTV Profit. More action on the other side. For the moment, from Anushi, myself, everyone who puts the show together, thanks so much for watching.
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
entire entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor, Rucha Somaya. Well, this is the fourth consecutive session where we are seeing a downtick when it comes to the Nifty 50 index. And to be frank, the Nifty Next 50 has again slipped into the bearish zone. It's down 20% from its all-time high.
That's true, Somit. So seems like a bad day for the market. Again, if we have a look at the kind of sectoral heat map, we'll see that almost most of the sectors are in the red, with Nifty Realty losing the most. Nifty Bank, IT and FMCG are the ones which are actually shaping up better than the others, but still in the red. If we have a look at the advanced decline ratios, we'll definitely see that it is in the favor of declines. There you go, all about 7.5:1 in terms of decline to advanced ratios. But also let's have a look at the constituents of the Nifty 50 index. Down in the red, we have the likes there you go. We have the likes of HDFC Bank, RIL, Infosys dragging the index down, Bajaj Finance as well. But slightly in the green, we have Bharti Airtel. Remember, Bharti Airtel reported its results last week, after which the stock was up about 5% in trade. Kotak Mahindra Bank, TCS also holding up the index. But also have a look at Nifty Banking Index, and we'll see here again most of the constituents are in the red. But up in the green, we have Kotak Mahindra Bank, Federal, SBI, which are less than 1% up in trade. but the ones which are losing the most is IDFC First. IDFC First has been consistently losing over the last couple of weeks. Over here, we have AU Small Finance Bank also down almost about 3% in trade. But with that, let's also have a look at the Nifty IT Index. Well, we have just three names: TCS, Wipro, and HCL Technologies up in the green, and that also very marginally, not really something to be called out for. But losing ones are persistent emphasis, LTIMRT, largely the mid-cap names. Remember that these mid-cap names lose the most and gain the most in a volatile day of trade. But a few stocks which I want to highlight, well, in terms of the 9 stocks which NDTV Profit comes out, we have BHEL, which was given a thumbs up, which received a 8,000 crore order. If we can have a look at the stock, stock up in the green, hit an intraday high of almost to 10 rupees. Over there, we have Paris Defense also, wherein this was given a thumbs up again on the back of earnings. And in terms of thumbs down, the stocks which were not doing well, we have Delivery on the back of its weak third quarter numbers. And lastly, we have Amara Raja as well. Weak results, miss estimate. But also, let's have a look at the broader markets, like a bleeding day for them as well. If you can pull up the mid-cap 150 index as well, we'll see down about 2.5% in trade. Let's pull up the small cap 100 index. Is small cap 250 index. Okay, there you go, down about 2.5%. So everywhere it's a bloodbath for the markets, Somit, is it?
Well, yes, it's a weak market that we have been seeing. In fact, what one of our colleagues, Chenmai, has pointed out is that it's not only the Nifty Next 50. In fact, other than that, it's the Nifty Oil and Gas Index, PSU Bank Index, Realty Index, all are down more than 20% from their highs. Let's also get in Gaurang Shah, our fundamental guest for the show today. Gaurang, how are you looking into the markets? What could have led to today's downfall? At least there were no specific reason other than the Trump tariffs that have come in for aluminium and steel, right?
So the tariffs have not yet come through. First of all, good afternoon to all of you all, and thank you for having me on the show. It's a thought process that has come to the mind of American President Mr. Trump. So over the weekend, he made a statement that there is a likely possibility of 25% tariff on certain steel and aluminium products. There is no clarity about time. There is no clarity about what are those products in aluminium and steel where the 25% tariff will be imposed. And there is no clarity on which country will it be implied. So it is a knee-jerk reaction that the markets are reacting to. But given the correction that we are witnessing last week and starting this week, Monday morning, I think 23,300 could be a floor wherein we may possibly tend to bounce back a little bit. In the market parlance, it's called dead cat bounce. But remains to be seen, because this entire week is going to be interesting data point on 13th, that is 13th Feb. Honorable Prime Minister is going to be having a meeting with President Trump to iron out certain issues which are currently headwinds. So let's see how that pans out. But it's a knee-jerk reaction largely because of what Mr. Trump has said, not implemented.
So, Gaurang, do you think that the markets will further take a deep dive? I understand 23,300 is the level that you have mentioned. But what's your outlook for the medium term? Do you think that this bloodbath is here to sustain?
Well, I hope the bloodbath, we've seen enough, honestly speaking, with the kind of sell-side figure that we've seen from 1st of October 24 till date. And I was reading a report just to give you a little bit of input. For the first 6 weeks, that is 1st Jan till Friday, 7th of Feb 2025, FIs have sold somewhere close to about 97,500 crores. And the domestic institutions have fallen short by maybe about 5,000 odd crores. This is a wild side guess that I have. But despite of this kind of selling, additional to what they've sold from October to December 31st, 24, we are still relatively in a better position compared to the other emerging markets. What positive that I can say is, yes, last week credit policy was in line with what market expected of 25 bips cut. Budget more or less very optimistic and consumption driven. Q3 numbers, there are no huge dark spots or red flags that I have seen. So I think it's basically a consolidation period with a negative bias, but we should possibly find our floor somewhere around these levels.
Right, Gaurang. Well, let's also focus on Zaggle. Now, the stock reported a stellar top-line growth. In fact, the company also upped their revenue guidance. But what has led to this 10% downside in the stock? Let's get in Harsh with who has more details.
On most counts, Zaggle reported a very strong set of numbers. So you're seeing very strong top-line growth. Even sequentially, the growth is 11% plus. What's likely not worked is with regard to margins. Margins have come off both YOY as well as QOQ. And they continue to be a bit of a drag. One is you have operating costs which have gone up. The other thing is costs associated with the business are impacting gross margins. So while the gross profit was up just 7% on a sequential basis versus the 11% growth on the top line count, and that is dragging margins, gross margins a little lower. So that's the first piece. The second piece is with regard to employee costs. They've shot up quite sharply as well. And then you have depreciation costs which have also shot up. Of course, we sought clarification from management on some of these. They remain very positive because what they are saying is in the next 3 to 4 years, they'll do a 16% margin number versus the sub 11% currently. And that's where a lot of the traction will likely get built. Even your cash PAT margin has come off this quarter. So there's been some pressure with regard to margins, even though growth is extremely strong. They've in fact upped their guidance from 45 to 55% was their earlier guidance to now 58 to 63% full year. And that too, management suggested was a conservative number.
Well, let's also listen into what the management had to say when it comes to their margins, why it has come off, and what is the outlook going forward.
Margins, as I said, in 3 to 4 years, we'll be at 15 to 16%, and it won't be a gradual, it won't be a step up. It will be a gradual increase. So you will see margins expand in the coming, years as we go along. That's something that we are clear about. And this is not a business where margins have always been suppressed. Historically, we've had higher margins. It's just that in the last 2-3 years, we've focused a lot on growth. Cash flow has been a focus, and we've gone cash flow positive this year. Last couple of years in our entire journey of about 14 years, we were always cash flow positive. A couple of years we invested more post the IPO and cash flows went negative, and we are back to positive cash flows now. So same with EBITDA. EBITDA has taken a little bit of a dip in the last few quarters, and we will come back.
Okay, with that, we'll see that the management is definitely positive. But Gaurang, a 10% downfall in the stock price, that's too much. But the management is still very stubborn on the kind of growth that, they will bag. What are your thoughts for the near term, say for the next 2 years? Will Zaggle be able to maintain a 50 to 60% growth and come back to margins?
Well, first of all, I think we had covered Zaggle for its IPO via an IPO note. Currently, we don't have a coverage, so I won't give a buy, sell and on this. But since your question is regarding whether the management's business strategy will kick off at ground level and make things turn around. So, in terms of peer comparison, I cannot recollect of any such listed entity which is in line with what Zaggle Prepaid is doing. In terms of opportunity, yes, there is plenty of opportunity with technology evolving day by day. 10% downtake could be a knee-jerk reaction of what the numbers have told us, and of course what the market is reacting to in terms of the statements made by Trump. And of course, this week is going to be heavy data driven. That could possibly be pushing the market downside, and so on and so forth with Zaggle. But the management did sound confident that yes, they will make things turn around.
Okay, thank you for that. But let's shift focus to a significant development for PNC Infratech. Well, the Ministry of Road Transport and Highways has introduced the company's disqualification period for participating in new bids from 1 year to just 4 months. Well, my colleague Anushi, who tracks this sector closely, joins in with more details on this one. Anushi, over to you.
Now this is effective from the 18th October, the period from which they were disbarred earlier only. So let me bring to you the whole picture as to what had happened earlier and what is happening now for the company. So if we see now, the Ministry of Road Transport and Highways, they have reduced the period for the company to be participating in new bids. They were debarred from it for a period of 1 year. Now that has been shortened to 4 months. This is from the date of 18th October only when this was effective. So if we see from the 18th October period, now it's in February, they'll be completing that term itself. This disqualification had come after there were some cases related to the bribery and CBI investigations going on with the company, especially in June 2024 of last year. So the disqualification was a result of this. The company had challenged the appeal to Delhi High Court before. They were looking for a complete revocation of this disqualification, but considering that now the Delhi High Court has now appealed the MOR, that's the Ministry of Road Transport and Highways and NHAI, to consider this instead of giving the full revocation, they've shortened it to 4 months. So this is a significant development for the company. If we see, as now they can start participating for fresh bids from the Road Ministry as we go forward. How the companies were impacted earlier also. Now this 1 year disqualification that we had seen was comparatively much significant to the earlier companies which were there. GR Infra, Ashoka Buildcon, Dilip Buildcon have all been disqualified earlier, but it was the period as to which now they have been disbarred for 30 days, 45 days and 120 days consecutively. But 1 year comparatively was much significant, which would impact the order inflow for the company. So now that the term has been shortened, this could bring another outlook in terms of where the order inflows are concerned, and we'll look out for the management commentary on how this could lead to additional inflows for the company as to whether they change their commentary on basis of what the order book and the order inflow can be for the company. So PNC Infra is in focus on the back of this.
Well, thank you, Anushi, for providing us with all those details. Gaurang, sir, coming to you, just wanted to understand how meaningful will this be for PNC Infra if it at all track this counter? Will this lower disqualification period change things meaningfully for them?
Well, firstly, disclosure, we have coverage and we have a neutral stance as far as PNC Infra is concerned. Whether this will, iron out things in terms of further growth and waiting period getting reduced, there could be a possibility, because whenever there are these kind of gray areas, especially contracts coming in from state or central level, goes into a back burner in cold storage. But slowly, steadily, once clarity emerges, then the possibility increases.
Right. One another stock that is in focus is L&T Finance. In fact, because of this acquisition that they have done, they have now actually entered the gold finance business as well. They will be acquiring the gold loan business of Paul Merchants Finance Private Limited for 537 crore rupees. Now, this entity has a gold loan AUM of 1,000 odd crore rupees, around 98,000 clients they have, active clients they have, and around 130 branches across 11 states in the country. Now, what are the positives that are coming out of this acquisition for L&T Finance? Firstly, gold loan will be a complement business to the rural and MFI lending, and they have around 16 million rural customers. So that is a significant positive that is coming in for L&T Finance. Apart from that, this acquisition will also lower the share of unsecured loans on their book. Currently, unsecured loans stand at around 51%, and this can come down going forward. Valuation seems reasonable. They have acquired this business at a valuation of 1.9 times price to book, which is far lower compared to what Manappuram and Muthoot are currently trading at. And this acquisition will also be ROA and EPS accretive, given the fact that this business is at a profitable stage right now. And what analysts also believe is that if the company might have taken up this business organically, then it would have taken nearly 3 years for the company to complete or to come to at this level. Now, on the negative side, obviously there will be a marginal decline in the Tier 1 capital, given that gold loan carry a higher risk weightage of 125%. There's a high geographic concentration, given the fact that 77% of this 1,000 crore AUM is coming from Punjab and Haryana, and also this entity what they have acquired is a part of a listed company, that is Paul Merchants Limited. Limited, and this gold unit contributes only 50% to Paul Merchants Limited's profitability. And if you look at Paul Merchants market cap, that is trading at around 323 crore rupees, which means that the L&T Finance has actually acquired the gold loan at a significant premium compared to what the street has been valuing when it comes to Paul Merchants business. And also Paul Merchant, which is the parent company, there's an ongoing proceeding of enforcement directorate on the company, so that could also be one of the reasons why Paul Merchant is trading at a lower valuation compared to what it should be at current moment. So Gaurang, how are you looking at this acquisition of L&T Finance? Does this also mean that the competitive intensity could increase when it comes to gold loan business for Manappuram and Muthoot?
Well, so firstly, a disclosure, we have an accumulate on L&T Finance Limited. This acquisition comes at a reasonable valuation, there is no doubt about it. What remains to be seen is where is the business focus as far as Paul Merchant is concerned. One of the positive side is that this is a ready to move in business, right? Had it not been for this, if L&T had to make foray into gold loan, then it would have taken a longer time. But this is ready to move in. One concern that I have personally about gold finance is the surveillance from RBI is at an elevated level. And there are regulations, and those regulations tend to change depending upon the risk factor as far as unsecured loans are concerned. And then also you have the haircut and margin and how much of exposure you are giving against the gold that is pledged to you, etc., etc. Other than that, like I said, we have an accumulated rating on L&T Finance Limited.
Accumulated rating over there, as we can see. But let's shift focus to the FMCG sector and to the counter which has reported its third quarter earnings. We have Varun Beverages, whose revenue was up about 40%, net profit also up about 40%, but margin largely came in flat at 15.7%. But how does this turn out with respect to estimates, and what could likely be the potential stock reaction tomorrow as well? Because as we currently speak, the stock is down about 3%. We have Mahima, who joins us, who tracks this sector closely and also know more about Varun Beverages. Mahima, how does the number compare with respect to estimates, and how do you think the stock would react tomorrow?
Right, so basically Varun Beverages numbers are a tad bit higher than what the street was estimating. Before I move on to the numbers, quick three highlights from the earnings. The company has announced that it is now net debt free through the prepayment of its debt, and this is via the QIP money that it raised earlier. In terms of the consolidated volumes, they've increased by 23% and gross margins have improved by 165 basis points. In terms of the numbers, the revenue was up 40%, EBITDA was up 38%, margins were flat at 15.7%, and net profit was up 40% again. In terms of volume growth, the India volume grew by around 11.4%, consolidated volumes grew by 23%, as I mentioned earlier. South Africa business, which is comparatively a newer geography, grew by around 12.5% in terms of volumes. Now, gross margins improved due to strategic procurement and storage of PET chips to avail price benefits and efforts to reduce sugar content in their overall product portfolio. And benefit of increasing backward integration is also playing out when it comes to expansion of gross margins. In terms of EBITDA margins, they were flat due to consolidation of South Africa markets with lower margin due to 80% of their mix being their own brands. The fixed costs associated to new capex, they've done 3 new greenfield projects in the 9 months FY25 gone by, and that is what is kind of weighing down on the EBIT margins because they are yet to utilize in terms of their full potential. So this is the overall view as to how Q3 has panned out for Varun Beverages, but we'll have to wait and watch out for how management commentary comes in. The con call is at 2:30 today. We'll have to wait as to how the management commentary plays its part in terms of how the stock will react tomorrow as well.
Okay, yeah, for sure. We'll wait for commentary because that is an important one, could change the game altogether. But Gaurang, what do you think on the FMCG sector and counters like Varun Beverages and even HUL, which is down about a lot about in last few weeks? What's your outlook on the FMCG sector as a whole?
Well, so a lot of us, people on the street had an expectation after the budget on 2nd of Feb, consumption will pick up. But the fact is that all these policy changes with respect to tax cuts for those who are earning up to 12 lakhs, transition will take time. So our sense is that the new financial year, 1st April 2025 onwards, the slow trickle will happen and the large positive impact will be visible possibly somewhere around third quarter, the new financial year. We remain positive as far as brokerage house is concerned. We at Jujit remain extremely positive. Even earlier we remained positive. Now all the more reason. Likes of HUL, ITC, Tata Consumer, Godrej Consumer, Dabur, Britannia, Nestle. We are also positive on consumer durable because quite a part of this particular tax cut benefit that has been given will go over there. Then you'll have discretionary spend. We are also positive on autos, two-wheelers especially, with the push that has been given to semi-urban and rural India. On Varun Beverages, one thing I can say that, yeah, it's the only listed company, correct me if I'm wrong, there is no peer competition, and it caters to the very niche, young population of India, which is 35% of the total population that we have right now.
Okay, well, thank you so much for that. But let's shift focus to an NDTV Profit exclusive. Well, at the sidelines of Aero India 2025 event, my colleagues Sajid caught up with Manik from Godrej and Boyce. Listen into the slice of the conversation.
So for Brokerage, our passion is engines. As you rightly said, we started manufacturing for ISRO way back in 1985. And since then, we have been working with ISRO for various engines. And India does need the next generation gas turbine engine. And we won this order from DRDO GTRE about 2 years back. And since then, we have been manufacturing and developing this particular engine. We have shipped one set of engine to GTRE, and what you see over here is the second set which is being displayed over here. So we are on an advanced stage. A lot of work from manufacturing of toolings to understanding the process, metallurgy, welding, the ovality of all the various casings, etc. So a lot of learnings have come through, and I think we are well ready to deliver further engines to the Indian programs.
You know, one of the things which has been in discussion here is about the delay in Tejas. I know you don't do much for Tejas except for some of the actuators which are used here, right?
Yeah, for Tejas we have developed along with ADA the flight control actuators. Yeah. So the LESA and the ABC are now flying, and what you see over is the L1 actuator. So this will be under test very soon. Also, we have developed various lubrication pumps. The nose wheel steering is our own design. So this is a part of the landing gear where after the aircraft lands, it kind of maneuvers onto the tarmac and takes it to the parking. So that's the nose wheel steering. That's our own design. So we have ventured into the build to spec. Earlier, up to 2021-22, we were a build to print company. With this, we have ventured into build to spec. We are also working on ejector release units, again for various programs. The uplocks which take care of the landing gear when they lock in or to be released. So various hydraulic and electromechanical actuators, whether they are for the flight or otherwise, is something what we are focusing on. That's where we are developing our design team. We just launched our design team now, and our design head will be here in a short while. So a lot of new things are happening from build to print to build to spec, but focus remains on the engine.
Well, some interesting launches coming in from the Aero Show 2025. Well, with that, we are out of time. Gaurang, thank you for joining us and giving us your perspective about the markets.
Thank you.
And with that, it's a wrap on this edition of Top Trade. Stay tuned and keep watching NDTV Profit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
कि अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims?
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. Joining me also is Neeraj Shah. But let's quickly first take it up with the indices. The Nifty 50 down around 0.9 odd %, and we've kind of stabilized in that region. 200 points lower on the Nifty. Of course, global cues non-supportive on a day like this. But let's pull up the intraday chart as well and get better perspective. The Bank Nifty also trading around 0.5% thereabouts lower. There you go. We've clocked the day's low at 317. We're currently sitting around 40 points above that. But the Bank Nifty, yes, that saw a bit of a fall right off the bat, and we've seen a bit of a recovery, if at all I can call it one. 0.5% higher on the Bank Nifty, but we're below the 50k mark where the Bank Nifty is concerned. But the larger pain is at the broader end of the spectrum. Before I come there, let's pull up the... Okay, so mid cap down 2% odd, the small cap also down around 2.5% nearly now. And again, both of them near the day's lows. If we can look at the advanced decline as well, and the advanced decline reflects the weakness. There you go, 1940 declines to just about less than 300 advances. So lots of pain, especially at the broader end of the spectrum. Let's look at the heat map, and the heat map will also give context on how tough the breath is today. So you're seeing very few names in the green. Britannia for one, yes. You also have a Kotak Bank shining in trade today, so 1% higher on Kotak Bank. One of the top contributors on the Nifty today will likely be Kotak on the positive side. ICICI is trading near the flat line, slight positive bias. What's not doing well? Well, pretty much a whole host of counters. Nearly 30 stocks declining 1% plus. Really no names in particular which are standing out in terms of sectors. And let's with that pull up the sectoral heat map as well. See how each sector is doing. Well, banking, FMCG is still looking okay. The underperformance is stark, especially in metals, 2.5% lower. Realty within the broader market seeing lots of pressure, 3.5% lower. The Nifty Pharma is down 2% as well. So that's one index which saw a very good kind of return or deliver really solid returns in 2024, seeing drag now in 2025 of some sort. Energy index and media also down around 2 to 2.5 odd %. Auto is down 1.5% as well. So those are some big underperformers for you, especially among the large cap counters that you want to keep in mind. The BSE 500 top gainers, top losers, if you can quickly pull that one up. And there you go. Those are some names for you. PNC Infra standing out within that road infra space. What's not doing well? Well, there are plenty of buzzers, frankly. Some of them on the back of numbers, and we'll talk about some of them as well, get better perspective over the next hour and a half of this show. But joining me today afternoon to give us better perspective, Gaurav Bisa of Incred Equities on the technical side, and Gurmeet, I believe, will be joining us on the fundamental side. Gaurav, I want to first start off with how is the index looking for you at this point? Because the broader market is where a bulk of the pressure is. But what's in store for the Nifty 50? We've been talking about large caps coming back. We saw a bounce back to 23,800. We've again seen a pullback now. What's the sense at this point, both on the Nifty and the Nifty Bank? Give us perspective.
Very good afternoon to you, your team, and your viewers. And thank you for inviting me on the show. See, Nifty, this structure is very interesting. If you look at the daily charts on Nifty, it bounced back from what we call as a descending channel pattern, descending triangle pattern, pardon me. And the bounce back exactly happened from the support area, which was placed at 22,800. The recent fall, reversal, or, again coming back lower, whatever one needs to call it, it happened exactly from the resistance area of that particular triangle. So in my opinion, till the time 23,800 is not conquered on a closing basis, Nifty will likely see pressure. But that does not mean that we will start falling aggressively lower. Immediate supports 23,300. If that sustains, we may see a bounce back sort of coming in. There will have to be support from any heavyweight index, probably Nifty 50, Bank Nifty, for Nifty to also see a bounce back. If you see right now, we are seeing underperformance coming in Nifty as compared to other broader market or sector indices. So in my opinion, that is where the pain point lies. As you rightly mentioned, that at higher levels we are seeing, and people are talking about large caps coming back in the picture, coming back in the foray, but that is just not helping. 3 or 4 stocks, they were up, pulled the Nifty higher, but now we are seeing profit booking across. So in my opinion, that is a key level to watch out for, 23,300.
Gaurav, been a long time that we haven't spoken to you, so good talking to you today, Neeraj here. I heard you speak about the possibility of a bounce back. What's the possibility of the indices correcting further 5-7% from here? And also couple that up, of course, Gaurav, with the stock recommendations that you have for this afternoon.
Hi Neeraj, yes, it's been a long time, and good to have you in the same show. See, there are 2 questions within your question. One becomes Nifty on a very immediate basis, which we have spoken about. There may be a bounce back if 2300 sustains. Overall, the second part of your question is a more interesting one. So the idea is that if we are talking about a triangle is basically two lines converging towards themselves, right? And what that basically means that if upper band is not taken out, you go and test the lower band. So in that perspective, there is a possibility that Nifty may go towards 22,800 and slightly lower than that, because the last support was 22,800 on the triangle pattern, which would again go back lower because it's a descending one. So yes, there's a possibility of that also happening. One will have to be ready for that. Second interesting part is that we had a very strong rise in Nifty in the last few quarters, and it was trading in what we know call as a ascending channel pattern. We had a breakdown of that. The resistance of that lies at 23,950, 24,000. So the point I'm trying to make is the rise is likely to be met with ferocious resistance. Even if you talk about a bounce back, there is a possibility, and in my opinion, we are suggesting our clients that they should be ready for levels of 22,500. And that is where I think we may see some stability sort of coming in. But yes, there's a very strong possibility of that happening. Till the time 23,800 is not taken out, see, multiple supports were broken, and those will now act as resistance. And being in a hurry to spot a bottom, I think that's more of an egoistic thing. I got the bottom, I picked the bottom, right? But that's not how the markets behave, and how you don't make a proper return for that. So I would just say that the structure, if you see Nifty, every time we are seeing rise, it's been met with strong resistance. Volume-based selling is seen across large cap as well as broader market stocks. This is not how the bottoms are formed. So, in my opinion, some more pain is left, and then we may try to talk about that. But as of now, there's a possibility of downside towards 22,500 to 22,700. Coming to the stock recommendations, the first recommendation would be on Canterville. If you see overall, it's been trading in a very strong rising channel, a multi-year rising channel. It's been consolidating, and now we have seen a breakout happening in Canterville. So I like the stocks which are forming consolidation. What it basically does is it's capturing the upside also, and when the markets are soft, it does not see a very big crack as such. So in my opinion, from here on, we can see 350 in Canterville. One can keep a stop of 295. Second would be buy on Reddington, where we have seen breakouts happening, swing breakouts, a small cup and handle pattern breakout on daily charts. Volume participation is quite robust. Again, I am only selecting stocks which have been outperforming, so that in case if there's a bounce back sort of coming in, we tend to make money faster and it becomes safer as well. So one can buy Reddington for target of 260, keeping the stops at 227.
Okay, Gurmeet is here with us as well. Gurmeet, good afternoon. It's less than 1%, of course, though the small caps are down 2.5%, but it feels like it's nearly a couple of percentage points kind of a cut, right? And coupled with what happened on Friday, it's 2 days on a trot now that we've had fairly sluggish market conditions. I mean, is this a good time to cherry pick, Gurmeet, or would you believe that maybe there are more downsides? China is getting the money, so on and so forth, because the valuations are attractive, all of that. Maybe there is more downside here. Be tactical.
No, I think the former one, Neeraj. I think, see, every past correction looks like an opportunity. The current one always looks very risky. And I think we have had a stellar 2.5, 3 years in markets. Some bit of, 10, 15, 20% correction is normal. Always happens. The names keep changing. But yeah, I mean, but I would not say the entire market has suddenly become reasonable. So that point is well taken. I think you got to cherry pick and got to see things which are falling, which are beyond tariffs. So, for example, the banking stocks, yes, there will be some slight NIM compression because the deposit rates won't come down immediately. But eventually a rate cut and some liquidity infusion by RBI, pickup in consumption would eventually lead to better credit demand. And the delay in LCR guidelines by a year also augurs well for bank in terms of a short-term perspective. So I think financials look good. Entire bank Nifty is very reasonable, 13, 14 times, less than 2 price to book. Most banks are less than 1 book. Then you have a lot of consumption names which have been completely been ignored in the market. They do not rely too much on tariff, whether it is a bit of travel and tourism, bit of QSR, bit of some of the food names, in my view, where there is a correction. Also, I heard the defense secretary over the weekend, he spoke about more than 2 lakh crore defense contracts this year. Last year was 1.2 lakh crores. So I think defense within CapEx would see more contract awarding, and the correction has been quite steep in a lot of stocks, 30, 40% in a lot of cases. So I think you got to cherry pick, you got to stagger it, and I also think India's trade deficit with US is hardly about $40 billion. If you compare that with China and Mexico, Canada, they make up the top three and probably 50% of the trade deficit. So I think tariffs are not the end goal. They are the means to reduce get the balance of payment more favorable to US. And 3-4 things positive have happened, Neeraj, which markets are ignoring. There's a rate cut, there is a budget boost to consumption, liquidity infusion by RBI. There's a lot of good events which have happened in the last 7-8 days. I think we probably need some better readings in PMI, a little soft inflation, some macro indicators better reading, and I think market should take heart from it.
Very interesting. Gurmeet, I'm going to come back to you in a jiffy on the same, but I'm going to go across to Anushi, who's waiting by to give us a lowdown on Mazagon Dock. It's been buzzing all day on the back of Q3 numbers, as well as a bit of commentary which was positive. Anushi joining in with a perspective on Mazagon Dock.
Hey Harsh, thanks for that. So let's start off with firstly the Q3 numbers which had come out on Friday. So this had already been discussed, but if we see what the kind of the numbers were, they were a beat across the street estimates which were there. We're looking at a 33% of an uptick in terms of where the revenue is concerned, with the revenue standing at about 3,144 mark, EBITDA seeing about a 52% of a jump at 817 crore and margins increasing to 26% as compared to 23% of last year. So overall a very healthy set of numbers that we are seeing. In fact, even the net profit saw about a 30% of a jump in line with what the revenue growth was. But it's the con call takeaways which were also very interesting to note for the company. Now, in the previous discussions, the company has remained conservative on what the kind of margin picture is going to be forward, as in defense companies, in Mazagon Dock especially also, if you look at the margins, some of the new orders which flow in, they have a different product mix, so there could be a contraction going forward. But for the year FY26, they have maintained their margin picture going forward, so they do not expect a further fall in where the margins are concerned. In fact, the profit before tax margins will be in range of 15 to 20%. So that is something that we'll be seeing. Margins overall will remain in the 12 to 15% of a level, which is in line with what the industry levels are. So something that we can take a note of. Now coming to the delivery aspect, in Q4, there are no deliveries expected for the business. So that is something that we can note out for. And in terms of whether revenue is concerned, management is confident that there would be no revenue shortfall in terms of where the FY26 picture is. So overall, we are looking at a very healthy set of numbers, along with management commentary remaining on the positive side for Mazagon Dock, and that is why we are seeing the kind of uptick in trade today in terms of where the performance is concerned for the business.
Yeah, tough day, but Mazagon doing well on a day like this. Gaurav, quick perspective with regard to technicals on this one.
If you talk about Mazagon, right? If you see overall, many of the stocks in the similar space had seen a good correction. They have seen around 40 to 50% fall already, but many of the stocks are now witnessing more of a time correction. To speak about Mazagon, it witnessed a 38% retracement from the rise that started in 2023. And from there, after a robust upside, what we are seeing is correction, and then we are seeing more of a time correction happening. So in my opinion, many of the defense stocks, whether we talk about Kochi Shipyard, GRSE, Mazagon, or likes of HL, BDL, BL, in my opinion, the price correction, we have seen a good part of that already happening. I'm not saying that we have formed a bottom as such, but I don't think there will be another 30-40% crack sort of coming in. So as a disclaimer, we have also advised our clients that one can start at least entering into the stock, not buying the entire quantity right away. Keep some dry powder if there's a correction sort of happening in market, as Neeraj also discussed earlier, that if there's a possibility of a correction. So in that scenario, we may have some more dry powder to, actually put in the markets. But for now, I think these defensive stocks are looking good, especially if you talk about Mazagon as well.
Okay. Yeah, but watch out. I mean, defense names could be interesting to focus because of the Aero show, because of the meeting between Prime Minister Modi, who's meeting not just Donald Trump, but there is also a meeting the French president, and could some defense deals comes out of there. Gurmeet, are you constructive this pocket? This corrected quite a bit. Valuations have sobered down a bit. Good time, or maybe wait for a bit?
The business is always lumpy. In good times, we were discounting 20-30 earnings and order books. And now, when things don't go well, you heard about Mazagon Dock talking about no deliveries in last quarter, right? So that's the nature of the business. But, of late, there is a pickup in, select ordering activity. So Ministry of Defense has suddenly signed 2 large orders. Government of Maharashtra has signed an MOU with a couple of companies, including Solar Industries, for almost 12,000 crore in terms of few products. We got to go a little, artillery-wise, ammunition-wise, and product-wise. I think this year the defense minister spoke of the year of modernization. Speaking of Prime Minister visit, there could be some announcements. France has been eyeing a few things from India. There is also a Rafale exchange program we have. So there could be some activity on drones, on Pinaka rockets. With US, it could be more related to fighter jets. HL in particular, more than 60% revenue comes from service and maintenance, and in between there had been concerns of engine availability that in the near term could get addressed. So we are looking at essentially three names in our portfolio: Solar Industries, Zen Technology, and HAL. And we would be watchful of any development which happens as a result of any bilateral agreement. Our view is very, very long term. We are not looking at 1 quarter, 2 quarter. We believe that the defense expenditure as a percentage of GDP will keep inching up, and the absolute ordering, as the defense secretary pointed out, would remain pretty high.
Okay. Now, the other thing is, of course, what could happen to some of the consumption names. And before we talk about liquor, just a quick word, Gurmeet, on whether you believe consumption allows buying because of what the budget did, or do valuations bake in the positives? I mean, for a HUL which grows at 6%, you paying 45 times, is that good enough?
I agree, Neeraj. There's not much in staples. I don't think so there'll be much impact there. I think there you have to properly track the rural recovery. I heard Mr. Anish Shah today talking that tractor sales in Q4, the industry could grow 15%. So I think there are green shoots in rural recovery. If that happens, maybe staples can come. But a better play there is tractor play, two-wheeler ancillaries, and more broader consumption. I would still play discretionary more. One thing I've realized is that the new generation, more you interact with them, their consumption basket is very different. It's more the QSR, more the quick commerce, more travel and tourism, and more discretionary in terms of electronics and gadgets, rather than the traditional consumption buckets which we are used to. Also, private labels are giving a lot of larger names, including HUL and Davos of the world, in terms of the basic hair care and BPC. So I would go for more discretionary names, something in consumer durable, maybe an airline stock, couple of hotel stocks, and play that as a theme versus the traditional names.
Okay. Gurmeet, what are those maybe two pockets which you like at this point, or you would buy at the dip at this point?
I like some of the CDMO names. I think there's a lot of capex which has happened in the last 3 years, and some of it we are starting to see results. And whether Biosecure Act comes later or now, but I think a significant shift in supply chain, I think, is there. It's not to be denied. We have Laurus Labs in the portfolio. We finally saw some green shoots in the last quarter numbers. I think this will pick up. My sense is the company has the potential to do, 2,500-3,000 crore CDMO business. And this is a high gross margin business, 60-70% business, which means you're talking of 1,500-2,000 crores of EBIT over the next 2-3 years, which is as large as some of the larger CDMO names. So we like that. We have some more names here, the old tried tested DVs in this portfolio. We got lucky with Newland. Then we also like some of the branded generics like Mankind Pharma. That's more an FMCG play. The stock is corrected almost 20% from the peak, but they are the number one pharma company in terms of number of prescriptions signed by the doctors, doing very well in the consumer healthcare portfolio. And that, the woman fertility segment after the acquisition of BSV, I think you'll start seeing some more synergies and debt reduction over the next few quarters. Then we like, as I said, some of the banking names. I think a lot of them are at book value. And we are cherry picking some recycling names. I think environment tech, water, I've spoken about this earlier. I think this is one big problem we are facing. And sometime down the line in future, I think the luxury would not be the Merck or the high-end apartments. It would be clean air and clean water.
Okay. But let's switch focus to alcohol.
You need alcohol with clean water.
Yes, I believe so. But all's not well for Tilak Nagar Industries. Bombay High Court dismisses company's plea in Mansion House trademark dispute. however, granted Allied Blenders interim application allowing it to enter the West Bengal market with Mansion House branded products. Mahima joins us with all of the details on this one. Mahima.
Right, so as you rightly mentioned, the Bombay High Court has dismissed the plea in Mansion House intellectual property dispute, and the court has granted Allied Blenders the permission to enter the West Bengal markets with respect to the house brand products, Mansion House brand products. In terms of, with respect to the appeal also, there is a temporary stay granted to Tilaknagar to file an appeal, so they will not be able to file an appeal also against this verdict. In terms of the company, the management has said that they don't see any financial implications with respect to the High Court decision, but the stock is tanking in trade today. In terms of the timeline of how this has happened, just to give a context to the viewers, in 1987 is when Tilaknagar Industries entered an agreement with Herman Jensen Beverages for obtaining ownership rights of Mansion House as well as Savoy Club trademarks. In 2011, there was a dispute between Herman as well as Tilaknagar Industries, and in 2011, the Bombay High Court ruled in favor of Tilaknagar Industries. Post that, Herman appealed in Bombay High Court, and the final verdict of this is yet to come out. But in February 2025, Allied Blenders bought 50% ownership rights in Mansion House and Savoy Club brands from Herman, after which Tilaknagar had filed an appeal against that, saying that it is illegal and citing that there is pending judicial proceedings in the High Court already, and this cannot happen. Post which the High Court has today came out with a verdict saying that Tilaknagar will not be able to use this right now. Allied Blenders will be using the brand Mansion House for their products as Mansion House. In terms of why this is big for Tilaknagar, because FY24, Tilaknagar Industries sold 85 lakh cases of Mansion House brandy and 4 lakh cases of Mansion House flandy, and around 112 lakh cases of the total sales was their IMFL sales. Now, in terms of why brandy matters, well, in terms of the total IMFL sales in India, 20% of that is brandy, and it is growing at a significant pace, and it's a significant amount of the total liquor that is being sold in India, which is why Tilaknagar is facing the brunt. But how big is West Bengal market for Allied Blenders? That is something to watch out for, which is why we are not seeing such an uptick in the Allied Blenders stock today.
Consumption, thank you firstly, Mahima, thank you so much for taking us through that. Consumption as a theme, Neeraj, may well play out well, and a lot of analysts talking about alcohol being a key play to that consumption theme. Quickly, Gurmeet, if I can have your views on this as well, because it's an interesting play, and how would you play it? Specific stock in your mind, or would you just avoid it at this point, given that valuations don't look as reasonable?
No, it's not much about valuations. It's more about regulatory concerns always in, we call it sin stocks, because you will have some action or the other. You just discussed what happened with Tilaknagar just now. You can have few states taking action as you approach elections. MP in particular, for example, decided not to issue any more licenses for opening new shops. So something always keeps happening, So I think here you probably have to look at some of the larger names with the ability to create brands. We tactically did take some exposure in Piccadilly Agro when Indri was awarded the best, scotch. But there's more to Piccadilly rather than just the whiskey part of it. There is sugar as well as liquor to it. But haven't taken any structural long-term view on any of the stocks. I think we do track United Spirits and United Breweries. That's something we like. United Breweries is more for the leadership change. The PNG head joined them, and we believe that United Breweries has it in it in terms of the brand and the reach to do that. But we do not have any large exposure in any of the liquor names or alcohol names.
Okay, Gaurav Bisa, very quickly before we take that break, any thoughts on any of the liquor companies?
First and foremost, if you look at Tilaknagar Industries, we have seen a decent correction sort of happening. One interesting data point on that, if you look at the weekly charts, then it's closely bouncing from 89 exponential moving average on the weekly charts. Currently, that is placed at 265 odd levels. Since 2020, it has not given a weekly close below this level. So any declines towards 265 can be bought into, and the bounces are generally to the tune of 20% or 30% minimum. So that is one part. On a long-term perspective, I also like global spirits, where the structure is quite good. Whether we talk about price action, whether we talk about elevator counts, so that is one stock that is I'm very closely monitoring, and we have recommended to our clients as well. So that will be a disclaimer as such. So these two stocks are on radar. One can definitely keep both on the radar.
Okay. Gurmeet, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. Gaurav, please stay on. A couple of more questions with you. But we need to slip into a very, very quick break. Stay tuned. We'll be right back.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching India Market Close here on NDTV Profit. Thanks for staying with us. At that time of the show, we bring in Samir Sarkar to give us everything that he's been hearing from the street in the special segment Heard on the Street. He brings us dealing room chatter as well as all that we generally don't hear. So Samir, over to you.
Well, the first stock is Kotak Mahindra Bank. Now, if you had seen the chart of Kotak Mahindra Bank on Friday, it zoomed up in the last 5 minutes of trade. And today it's also up around 1%. What I understand is there's strong buy flows coming in on a DI and HNI desk. Obviously, valuations are relatively cheaper for Kotak Mahindra Bank. And also another thing that dealers are pointing out is that post the RBI commentary, the street is expecting that the credit card clearance, which was RBI had put in a ban on new customer addition when it comes to credit card. This clearance might come in soon for Kotak Mahindra Bank, and that's the reason we are seeing this kind of a move in such a weak market also for Kotak Mahindra Bank. The second stock on the list is Lupin. Large HNI desks are active buyers on this counter. The stock is down today because of the uncertainty related to Trump tariffs, but what I understand is that it has relatively lesser exposure when it comes to the US market, around 30% and there won't be much of a financial impact to come in when it comes to Lupin, and hence large HNIs have been accumulating this counter Lupin, which is down around 2% in trade. And lastly, it's Hindustan Aeronautics and BL. In fact, the entire defense pack, but these two counters specifically, strong buying interest has been seen for these two counters. Sales teams have been aggressively pushing these two stocks to their dealers, and this is ahead of PM's meet with the US President and the French President as well. That is expected to happen in the next couple of days, and also the Aero show is going on in 2025. So multiple positive triggers could come in for both these counters going forward is what the dealers are indicating, and hence there have been an aggressive push that we have been seeing from the sales team of multiple brokerages.
Three very interesting picks, Neeraj and Samir: banking, defense and pharma.
Pharmas are also defensive, by the way.
Yeah, exactly. And that's what really stood out.
The only interesting thing about pharma might be that individual stocks may do what they do, and Varsha will come in a bit later on and talk about it. If tariffs kind of play a spoil sport for pure play US generic companies, because that could be a small issue in the near term. But otherwise, very interesting stuff, Samir, as usual. Thank you.
Thank you.
Well, actually, let's quickly take maybe a technical check on this one. Gaurav, what's your take on Kotak?
Kotak is an interesting play. If you look at the weekly charts from October 2021, it has been trading in what we know as a descending channel pattern. It's given a breakout, sustaining, as you pointed out a couple of minutes back, that there are flows. It's been sustaining in such markets as well. That itself means that there's some sort of buying interest that is being emerging here. A close about 2000 levels can push it towards 2200, 2300 in a relatively short period of time. If somebody wants to look for a pure banking name and a large cap, I think Kotak is one that can be on the radar. Risk reward is favorable. Things are looking good. It's now trading above the Ichimoku cloud on weekly charts, which again suggests that the uptrend might be starting now. So in my opinion, that is one stock that can be kept on radar.
Himen Kapadia also joining us, DR Choksey FinServ Private Limited. Thanks, Himen, for taking out time, joining us as always. Himen, quickly your take with regard to defense before I take your view with regard to the index itself.
A very good afternoon to you, Harsh. Thank you for having me on the show. It's always a pleasure. Defense, this very selective Mazgaon frankly speaking, go through the roof, and everything else. See, the thing is, most of them have been multi-baggers. They've run ahead of time technically and maybe even fundamentally. So they are consolidating. Even Mazgaon Dock has been for the past 6-7 months. That's not going to change. I have a feeling that a major part of this year, it's not going to be one way. I think fair to lump them in a group saying 70 to 80% of them would actually hatch eggs, do nothing for this calendar year. But yeah, next year would be glorious for them. So it's going to be up and down. It's not going to be one way. But I feel looking at the way they've multiplied, virtually all of them have gone up 5, if not 10 times. So long drawn time price consolidation is what we are seeing. So selectively, there would be like some stocks popping up like popcorn. But overall, I think it's going to take time. But when the time is over, the next couple of years would be very sweet.
Okay. Himin, your quick call with regard to the index.
First, frankly speaking, 1,000 points in 7 days was unsustainable. There's a bear market rally. The main trend has turned bearish, if not negative. So expecting a 1,000-point rally to sustain without a correction was asking for too much. There were a couple of gaps. Nifty's covered that gap. Unfortunately, the bank Nifty is not covered that gap. But the concerning thing is, after covering the gap, the Nifty should have bounced back. It's not. So that's not a very good sign. But the bank Nifty still left the gap open. The VIX came off from 19 to 13. We have 14.5 again. So frankly speaking, it's a no trade zone. If 23,100 breaks from a closing point of view, I would definitely be worried. Otherwise, it's going to take some time. This 1,000-point rise needs to get digested. There's not very much of an upside left. So we are going to sort of amble around aimlessly, meandering without any direction. But yeah, consolidation is what it is. I'm not too bearish. I would be more bullish, waiting for stocks to turn around. Many of them are, but okay, if there are event risks like these announcements coming in, it's going to be a volatile year. But I still think that I don't think we'll make a new low this month again.
Okay. Hemant, picks for this afternoon?
Okay. Couple of stocks, frankly speaking, not very convincing though. Convincing in the sense markets haven't yet turned. So, but yeah, couple of stocks. Firstly, there's a buy call on HCL Tech. Deeply oversold, downside appears limited, positive divergence, crossover buy, the bounce is underway, correcting the fall from 2,000 to 1,660. So buy on HCL Tech at 1,725, stop loss 1,700, target 1,775. Second one is more of a slightly, not a very short-term call, maybe 3 to 4 weeks. IRCTC. Stock is forming a base on the weekly chart. The oscillators have all turned positive. So I have a feeling that 740 needs to hold. I'm assuming that it will hold. So buy IRCTC at 734, stop loss 750, target 823. It's going to take some time, but I believe the worst is almost over, at least from a medium-term point of view. Harsh.
Okay. I'm taking over, but just that interesting that it's difficult to give out a buy call on too many stocks, and completely understandable there, because today even good results have gotten punished. So Balu Forge is down, yes, down 3%. Even Sarda Energy mildly in the red. And a stock which really zoomed up post its numbers, Avalon Tech, 2 days on a trot, was on an upper circuit, is down on a lower circuit as well. VATech Babag was up about 9-10% on that order win, is now up just about 2.5%. So the broader markets have taken it on the chin. Remember, the Nifty Bank on a day like this as well is down just about 0.5%. So that is not sulking as much as are the mid caps, and the small caps in particular really taking it on the chin. So not a great outing from that perspective. Stocks which have come off in the last few minutes of trade as well. India Pesticides, or IPL, is down. There is weakness, I believe, in IDFC and a few others. IDFC First is corrected quite a bit as well and is down now. In fact, marginally up, but certainly off the highs of the day as well. Pasalo Digital has had a sharp crack as well, if I'm not wrong. So those are a few names that you want to keep at the back of your mind for sure. Just one quick follow-up. Metals were the toast of town last week. Does the pull back today, because of tariffs of course, but this pull back today damage the charts entirely, or is there anything out there near supports from where it can bounce back? Vedanta, for example.
I'll just briefly take 30 seconds needed for the Nifty Metal Index. Frankly speaking, until the Trump announcement came, you were right. I thought there would be follow-up and metals were looking promising, because international copper, Neeraj, has turned. Not only on the short term is not very relevant. I mean, it'll change in a day or two on the medium term. So normally Indian stocks follow suit, and they trail and mimic the international copper chart. So I was thinking things would be gung-ho, at least for a few weeks. Now that's gone the other way. But having said that, the metal index 8300 support, 8050 support, we need to close above 8700. So Oh, okay, there's been a knee-jerk reaction to what has been said. I believe a base formation is in place. If we break down before that, we'd need a closer to 8,000, which I don't think is happening. So I would be slightly not that negative as far as metals are concerned. And coming back to your stock, Vedanta, Neeraj, I think it's mimicking what the Nifty is doing, a range between 410 to 467. It's not looking that bad. A short-term bottom in place, trying to overcome the 55-day moving average. That would be a precursor to the weekly turnaround. So let's wait for a day or two. I don't think things are as bad as the price action is showing as of now.
Okay, things not as bad as price action is showing.
Metals in particular.
Yes, metals in particular on that count. But Himen, I did take a view from Gaurav with regard to Kotak Bank because it's holding firm today on a very tough day otherwise. What's the sense with regard to this one in particular?
I think that's the saving grace for the Bank Nifty. But wouldn't be surprised. 4 years, HDFC Bank and Kotak Mahindra Bank. If you go back in time, for the 20 years before that, they've led the markets. Banks, I mean. So 4 years, these two stocks have done nothing. Okay, HDFC did something, it fizzled out, came back again. But overall, HDFC Bank and Kotak Bank both have taken almost 4 years and maybe even more to consolidate. The Bajaj twins did the same. So frankly speaking, now the time has come. So Kotak looks interesting. I'd be more positive about 2050, but things are turning positive on the monthly chart. Is this a flash in the pan? I don't think so. It is a real thing. Is a real thing? Yes, but the markets don't support something like that. Standalone, I think Kotak looks like a buy after a long time. Those, like I said, 2050 hasn't been taken out yet, Harsh, but looks promising, looks positive, and if things are turning positive after 4 years, quality bank, I would be more bullish than bearish on both Kotak and HDFC Bank.
What about Bajaj Finance? You mentioned that as well, that's why.
Well, that's a dream formation. 4 years ascending triangle breakout, stock is going to 11,000. Will this wishy-washy year for equity markets of 2025 prevent Bajaj Finance from doing so? I don't know, but 11,000 coming this year or the next, Harsh.
Right.
Okay, Siddharth Khemka joins in, Head of Research, Wealth Management, Motilal Oswal with us on the show. Siddharth, good having you. Thanks for joining in. You know, we were talking about metals, Siddharth, and how today due to the Trump, excuse me, the tariffs, the stocks have come off. But if you look at the CRB commodity index, commodity prices seem to be breaking out. Chinese stocks we know are in a bit of, but a significant bull market out there too, right? And therefore all of that should augur well for metals. Are you a buyer at dips or are you waiting and watching?
Yeah, hi, good afternoon, Neeraj. Thanks for having me on the show. I think the view is a bit mixed, especially given the geopolitical current situation where a lot of flip-flop things will happen, and with US and China trade war, I think one of the big casualty could be metals. But on the other side, as you rightly pointed, these core metal commodity prices are on the rise. Earnings from a low base are looking up better going forward. I would say I would be a bit cautious. I would wait out for the current volatility and whatever has to be done. This time we are seeing that Trump, although it has a very strong view, is looking at resolution and taking things ahead rather than sticking with his thought process. So I think resolution will come sooner, and that should augur well for commodities once this tariff war thing settles down. I think one should wait, not jump into the volatility, and when things become more clear, that is the time when one should look at entering into something like a global commodity space like metals.
Okay, so that is one. And when talks come around tariffs and exports and rupee, etc., I think you can't leave out one sector, and which is textiles. So Siddharth, I would love for you to come in a bit later on textiles, because we are talking to a textile company, and that's Gokaldas Exports. While margins may have been maybe a bit off, but I think the revenue number looked rock solid. and therefore this 79-80% uptick was very, very strong. It got accompanied by near 65% if I'm not wrong, profit uptick as well. And Mr. Sivarama Krishnan Ganpati, Vice Chairman and Managing Director of the company, Johnson, right now to talk about the numbers and the outlook. Mr. Ganpati, good having you. Thanks for joining in. It's been a while, Neeraj here. Good afternoon. But you must be happy with the performance. Were there things that you would have probably you can complain about?
No, of course not. So, we have had a lot of work which have culminated in this performance. I think a lot of operating improvements have happened across the range of factories and across the business. I think we are seeing a fairly good amount of demand traction. The geopolitics notwithstanding, it's only helping us rather. So we are seeing a good amount of tailwind in our business, and with growth, we will also see some operating leverage kick in. So we are working towards margin improvement while we sustain our growth as well. So we are in a good position from that perspective.
The belief, Mr. Ganpati, or at least the market wanted or painted one side of the picture, which was that while these tariff wars, etc., and restrictions might be coming, it might be too late for Indian textile exporters to take advantage because the season stocking would have been done. Now, I would love to understand what went behind in this quarter for the strength, particularly in the export side, and how does the year look like? Because I did hear a fair degree of optimism in your opening answer.
See, I think, what had happened was last year we saw, brands were having excess inventory and most of those inventories were pared down. So there was a natural bounce back after that correction. On top of it, the costs are increasing in China. There is geopolitical issues which are constraining more buying from China, and Vietnam also is becoming expensive. Bangladesh has got its own political problems. All of this are resulting in brands trying to reallocate business to other regions. So beneficiaries are countries like India, Indonesia, and so on and so forth. And we are seeing a fair amount of traction given that we have a very good track record of execution. The product varieties that we handle also are fairly diversified, and we compete well with China and Vietnam-based players. So that also helps them, helps international retailers to look at us when they are diversifying from that region. So that is helping us from a growth standpoint. And I would say that, if I look at the next 2 to 3 years, I think this is going to continue, given that India has a cost advantage over those regions. Secondly, tariff-wise also, as long as relatively speaking, we don't get tariffed more than some of our competing regions, I think we are in a good shape. So, and I anticipate that India will not have a higher tariff than China or Vietnam. So from that perspective, also we are in a reasonable position. And then on top of it, we have about a quarter of our revenues coming from Africa, which goes duty free. So if there is a tariff across the world, and Africa continues to be duty free, then that increases the competitive advantage of Africa even more. So overall, I think we are positioned well from the uncertainties of tariff. Our relationship with customers are good. Most of our customers are doing well in their markets. So I think it's in a we seem to be in a good position from that perspective. Order book is full for fall winter, which is production for Q1 and Q2. And when I look at spring summer also, we seem to be seeing fairly good traction, good amount of prognosis from our customers.
Mr. Ganpati, this is Harsh also joining in. You spoke about how margins, or there is room for margins to expand from here. How quickly and by how much?
See, margin improvement cannot happen overnight because it requires a lot of work from an operational improvement standpoint. So there's a lot of work which is going on. And I think as the contribution from low-cost factories keep increasing, because that's where we are expanding. Secondly, our efficiencies in those factories are also improving as we speak. I would say sometime in the next financial year, you will definitely see a stronger margin improvement over this current financial year. So FY26 versus FY25. You will start seeing that all these play out.
So would that, so apologies for interrupting. Would that be H1 FY26 or H2?
So H1 you will find some, H2 will find a little more because progressively we'll be able to take it up.
And so what are the risks like of some of these tailwinds receding and receding quickly? Do you see absolutely any risk there?
No, so the market is very big. The whole global apparel market is over 500 billion. We are a very small player, in that market. So I don't see, the tailwinds receding. I don't see in the horizon any new country emerging which will compete with us. In fact, we are in a favorable position from that standpoint. So I'm not seeing any tailwind. The only tailwind could be, how Indian inflation, if it goes up and cost of labor goes up. But, we also have a depreciating rupee, which augurs well for exporters. So from that standpoint also, we are somewhat covered from an inflation standpoint.
I'm presuming at least in the last 12 quarters, this is probably the one with the highest revenues, highest operating profit, and presumably not the highest net profit, but at least the highest operating profit. You reckon over the next 4 quarters, these numbers can look significantly better?
No, they will progressively go better because
of course.
So that is how it will happen. And quarter on quarter we will see that as the capacity utilization keeps growing, because we are adding more capacity as well, it will keep improving. Yes.
Mr. Ganpati, sorry, just curious to ask, maybe because I've missed this. Had you given any formal guidance for FY25, and are you on track to meet that? Part 1 and part 2. Would you give a formal guidance for FY26 based on your assessment of how business is looking currently, maybe at the end of the year?
So we don't give guidance, but internally we had said that we will grow at about 15% in FY25. And when I look at standalone Gokuldas, without the acquired entities, we are growing at 19%. So we are tracking well above where we wanted us to be. And if I look at the next year also, I think we will keep the momentum up.
Okay. Fair call. We'll leave it at that. Thanks so much, Mr. Ganpati. All the best for the quarters ahead.
Thank you so much.
All right. So now, Siddharth Kemba, you got a chance to hear that conversation as well. Sounded fairly confident, and it's something that I've heard Dipali Goenka of Welspun also say about business momentum going ahead. Are you constructive textiles, or are there better pockets to invest in?
So, Neeraj, one of the themes that we are looking for in 2025 is the exports revival or exports recovery as a theme. And in that, textiles do fit in. And what we are seeing or witnessing is that increased or improved growth demand for Indian textile players. The global tariff war is positive for India because India is at a higher tariffs compared to some of the other emerging nations like Bangladesh, where they itself are undergoing a lot of turmoil in the domestic front. So Bangladesh +1 story plus rupee at all-time low, that is also supportive. And the key factor that supports is that demand drivers are in place now, which was something which was missing a few years back. And demand from both US, Europe. Europe is a big key market for India's apparel exports, India's textile exports, and I think that is where recovery in demand is supporting textile players in India.
Okay, Himen, any thoughts here? Any of these names?
I was looking at Gokuldas file. You're connecting with the management. Once again, maybe sounds a bit repetitive, but phenomenal move. We walked into correction. I believe this, at least half of this financial year is going to be a washout. Nothing much expected. Maybe it doesn't go down much if the fundamentals are solid, but nothing exciting. If you're looking at Welspun, similar story, getting top heavy. Not yet. It's probably better than Gokuldas, but yeah, it's getting top heavy. It's just on the cusp of a correction. So they don't look great, at least at this point in time.
Okay. Well, now time for the bull versus the bear segment, or the bull and bear segment. Time to place Rucha versus Rucha to analyze Zaggle prepaid, because the numbers seemed okay. They've upped the guidance, but presumably means that Q4 will not be a great quarter for them, which is maybe the reason why the stock is down 10%. Rucha, what do you have for us?
Definitely, Neeraj, thank you so much for that. So this one is tanking on the back of its third quarter numbers. Though the company has raised guidance, this means a muted growth in the fourth quarter. Let's move at the first point of bull versus bear. Strong revenue growth is definitely a positive one. However, there could be a potential competition coming in, and this could also dent growth. And as I mentioned, that even though the company has upgraded its guidance, it implies a muted growth in the fourth quarter. Moving on to a segmental view over here, well, program fees are up about 54%, and the Propel platform revenue is also up 87%. So strong momentum is what we could see over here. However, on the bear side, we have a higher base impact, which could actually deter the growth and also the sustainability of this growth, because the momentum or the kind of fluctuation is very much over here. But let's move on to margins. Well, the guidance which the company has given is at about 15 to 16% over the next 3 to 4 years. So a positive one in the bull case, and in fact the management was very strong or had a very strong positive sentiment about reaching 15 to 16% margin. However, because of some issues, the company had faced dilution of margins in this quarter. So largely the commentary, the kind of strong commentary which the management mentioned, is not getting reflected in the numbers. So definitely this one is a bear case and something that is to be watched out for. Well, moving on to the next one, we have valuations. Company actually in terms of valuations, I think it has been swapped over here. This is the bull case, wherein 50% growth runway till FY28 is definitely a bull one for the company, and margin could also be better. However, the bear case over here is that the company trades at around 70 times, which is a big one and very expensive. Therefore, maybe investors are not looking forward to this one as a right time to enter into. But lastly, if we can see at the kind of stock performance over the last 6 months, the company has given about 17.5% growth, and over the last 1 year the company has given 72% growth. So we'll definitely see whether the company performs as per the management's expectations or not.
Well, thank you so much for that, Rucha. Of course, it's been a very solid run that the company's had over the last 12 months or thereabouts, as highlighted. But we also spoke with the company's co-promoter, MD and CEO, Avinash Godkhindi, about their margins as well as outlook for the coming year. Listen in.
Margins, as I said, in 3 to 4 years, we'll be at 15 to 16%, and it won't be a gradual, it won't be a step up. It will be a gradual increase. So you will see margins expand in the coming, years as we go along. That's something that we are clear about. And this is not a business where margins have always been suppressed. Historically, we've had higher margins. It's just that in the last 2-3 years, we've focused a lot on growth. Cash flow has been a focus, and we've gone cash flow positive this year. Last couple of years in our entire journey of about 14 years, we were always cash flow positive. A couple of years we invested more post the IPO, and cash flows went negative, and we are back to positive cash flows now. So same with EBITDA. EBITDA has taken a little bit of a dip in the last few quarters, and we will come back.
Okay, so of course that's Zaggle in focus, stock down 10%, but we're going to slip into a very short break. On the other side, we'll get you top BTST ideas, and we'll discuss more stocks on the other side of this very short break. Stay tuned.
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
कि अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई इसके लिए सेंटर्स बनाए हैं।
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Okay, welcome back. You're watching India Market Close here on NDTV Profit. Now, one pocket or one space which is facing some bit of pressure today is pharma counters, and they've cracked between 1 to 6% odd across the board. Let's pull up the constituents of the pharma index as well today, and of course underperforming the Nifty 50. But look at those. Look at the pressure that's building up across the board, from a Gland Pharma all the way to an Alchem Labs, which is down nearly 7%. Of course, numbers also contributing to that. But the pack is in focus, and markets speculate that Trump's tariffs, which could be announced, could cause more pain here. Varsha joins us with perspective on this one. Varsha.
Thank you for that. So yes, pharma stocks are down due to concerns over possibility of US imposing tariffs on pharma imports. Now, Trump has threatened to impose 25% tariff on steel and aluminum imports in US, adding that similar tariffs would also be imposed on other goods, including pharmaceuticals. And this is the reason a lot of pharma companies are under pressure. Several pharma names like Dr. Reddy's, Cipla, Lupin, Aurobindo Pharma and Sun Pharma were down 1 to 3%, and weighed down by these losses, the Nifty Pharma index, if you see, slipped almost 2% in trade today. Now, if Trump went ahead and imposed tariffs on pharma imports in the US, it could be a huge setback for the Indian drug makers. Tariff would increase the cost of exporting drugs to the US and potentially reducing margin for these companies like Sun Pharma, Dr. Reddy's. However, even though these concerns loom large, there haven't been any clear details, of Trump's plan to impose tariffs. But let's see what are the revenue contribution of the several companies. You have Cipla, wherein 28% of contribution comes from US, Lupin 37%, Dr. Reddy 46%, Sun Pharma 32%, and Torrent Pharma 10%. So, but do note that this includes drugs which are manufactured in US and sold in US, where tariff wouldn't apply. But this is in the range of only 10%, while majority of the US contributions comes from the drugs manufactured outside US, which includes India and other countries.
Okay, thank you so much for that perspective, Varsha. Siddharth, if I can come to you, we've spoken about textiles as a theme of playing, of course, a weaker rupee. Pharma could well be that other play, and along with it, the tailwind with regard to CDMO and the possibility of China plus one could well play out much better in pharma than in textiles, you reckon?
Yeah, I think pharma is much better placed compared to some of the other sectors. India has a clear niche in terms of the end products that we supply, and I think US will not go to large extent in putting tariffs on pharma, because that impacts the core healthcare of the public. So while there are concerns, I think this is an opportunity. Some of the companies are doing very well, be it in the generics or in the CDMO space. Both are likely to do well. And also on the third front, there are a lot of companies which are purely focused on the domestic market, be it in the pharma space, be it in the healthcare space. That also, as a segment, is doing consistently well, and we believe that a mix of all these three factors: improvement in demand, stability in the key raw material prices, and hence improvement in margins, and finally your domestic market continues to remain strong. So these 3-4 factors contribute to strong earnings both in this current quarter as well as in the coming quarters for the pharma space.
Just Siddharth, just a quick follow-up on this one, because pharma was such an outperformer of 2024, and generally when you see the outperforming sectors of a particular year, it becomes difficult for them to perform in the year immediately after that. You believe valuation comfort still available in this particular segment?
Yeah, Harsh, I think if you look at that could apply to a sector like real estate, which was a stark outperformer. I think pharma has been a consistent performer, and that performance is clearly linked to the earnings delivery. I think for the last 8 consecutive quarters, pharma as a sector has been delivering strong growth. Even for Q3, the December quarter, we are expecting a 20% earnings growth on a Y&Y basis. And on back of that, I think earnings are pretty stable and valuations still comfortable. If these companies could continue to deliver 20% earnings growth, I reckon that valuations at around 20-22 times on FY26, FY27, I think that still leave some room for the upside in terms of the earnings growth that could come by. So if you look at stocks like Lupin, they have been consistently delivering. Oro Pharma, again, bearing few of the US FDA issues observations. Apart from that, delivery has been consistent, and the largest of them all, the Sun Pharma, I think there the earnings delivery is pretty constant, pretty stable. Even for FY26, we are expecting a 21% earnings growth. And if you look at from a valuation perspective, I think the valuation at around 28-29 times FY26 kind of factors the growth, but the upside would still be there in terms of the earnings growth. So we are looking at a target price of 2,100, almost like 20-21% upside from current levels.
Okay, very quickly, Hemen, with regard to pharma, what's your sense at this point and any picks?
Pharma's corrective will take some time. Harsh, if I had to pick one stock, not short term, probably 1 year time frame, Divi's Lab. We are going to go to 6,800, 7,000.
Okay. I remember, Hemen, you had suggested Divi's Lab at 7,000 2 years. You've come down to 6,800 1 year. So that's possibly a positive, at least the way I look at it. But let's switch focus though. Anant Raj, that's the stock which is doing fairly well in a tough market today, 2.5% higher. And Nomura's initiated coverage by rating. Anushi joins us with details on that one. Anushi.
Hey, thanks for that, Harsh. So Nomura, as you've mentioned, has initiated a buy call on Anantraj, and this is with a target price of 750. If we compare it with the current levels, we are seeing an upside of around 18 to 19% for Anantraj. Now, a couple of factors in play. We have seen a lot of correction in the past for the stock after the recent news of DeepSeek emerging in the business, but after the company came out with its clarification that more data centers and more of these AI intelligence thrust that is there is going to be beneficial, the stock did see a recovery after that. But what Nomura has to state, let's look at some of the factors of here as well. Now they are poised to successfully execute some medium-term data center and cloud targets with comfortable net debt to equity levels. So this is an advantage for the business going forward. Along with that, in the residential space also, the company is planning to launch about 2 to 3 projects in FY25 and another 3 projects in FY26. So this the residential side of the business is also on a strong footing as we see. Concerns have remained around the data center that I had highlighted in the earlier part of the conversation also, but now the pricing and the pricing risks seem to appear overdone. So after the kind of correction that has happened, the reward versus the risk is more favorable for the company going forward, and that is why this brokerage has a buy call on the stock. Along with that, the strong demand with the GCCs emerging should aid the residential segment also to generate some cash flows, solid cash flows for the business going forward. So overall, a very positive view coming for Anantraj. We have seen a couple of other notes also in December to Jan period coming for Anantraj, wherein a lot of these other brokerages had initiated coverage. If there was DAM Capital along with some other ones also. So let's see how this one does in trade. A lot of thrust on the data center business going forward for Anantraj.
Thank you so much for that perspective, Anushi. Stock has corrected 40% from the highs. Thereafter, we've seen a bit of a recovery. So it's still 30% down from the highs. I want to first come to Hemen. Hemen, sense on this one?
Okay, Anantraj has fallen off a cliff. So he's just trying to sort of gathering his wits, so to speak. Okay, short-term downside is limited. We are in a dead cat bounce. A close above 640 should make the bounce go higher. I'd wait for this whole thing to play out a bit because 50 to 950, 950 to 550 in 1 month. I think we need for the volatility to settle, and it's moved quite a lot here. So I'd stay away. Yeah, extreme short-term, if it closes above 640, yes, we'll probably see some sort of an upside, but in the scheme of things, it would be a recovery, not a rally, because this fall of a cliff fall has hurt the technicals. A lot of them have been disturbed. So sometime I'd prefer to stay away for the time being.
Siddharth, I know we have to let you go in about a couple of minutes. I was wondering, because the markets are volatile, is it possible for you to stay with us till maybe 320? Is that okay? Okay, great. So Siddharth, I want to start off this by asking you about maybe an Anantraj or maybe some of the other real estate names. Now, maybe you've spoken about it, but here's my question. We know that at least until December and probably Jan as well, NCR was doing okay in terms of sales. MMR Mumbai property registrations also very, very high. Probably the best January thus far as well, even though it was lower month on month. December was higher than Jan, but Jan was the best January that they've enjoyed. So would you take a bet on any of the real estate names with the index being down 20% from its all-time high, so technically in a bear market, or would you believe that there is more downside before you start accumulating these stocks again? And if so, would you choose an NCR player, would you choose an MMR player, or would you choose a South India player?
Yeah, so I think if you look at in terms of the pre-sales, we have been witnessing a strong record pre-sales in the month of Jan as well. What is impacting sentiment is a lot of stocks have run up, and in this market, valuation is something which market is clearly having a relook, and stocks which have trading at high multiples or high valuation, and even a slightest of miss in terms of growth or earnings or margins is being punished. So in terms of real estate, what is lagging here? I think the new launches have slowed down. A lot of the growth was driven by launches in the, you can say, a premium or the luxury segment, where you cannot have a continuous flow of supply. The mid-market is steady, but has not seen that kind of strong demand. Interest rate cut, thankfully, has started, but we need to see how long the interest rate cut cycle sustains. because that is very key and important for the mid-market segment in the real estate space. Having said that, I would believe that the Mumbai MMR region is much better placed in terms of demand supply compared to the NCR region, followed by the Bangalore region. Still better to bet on a national player like Godrej Properties, which is present in the mid segment, plus has presence across India. So that is something that we like a lot from our coverage. We have a target price of almost 3,200, which is 40% upside from current level. So I would suggest it's a good time to start nibbling into these names. A good correction, healthy correction in the real estate space after the sharp rally that we had seen in 2024. Slowly and gradually, I think the sector will come back in focus.
Okay. So that's on real estate. Siddharth Khemka, my final question to you is on Mahindra and Mahindra, or maybe even put in an escorts there, but M&M in particular. Strong results. Almost all brokerages today came out and said that they are upping the target price. Now, clearly, the market mood has led to the stock coming off the way it is, but is a dip in Mahindra and Mahindra an opportunity to buy into it, or would you again out here wait for a bit?
So yes, I think Mahindra has been clearly stock outperformer in the entire auto space. If you look at the 3-4 segments, sub-segments on the auto, tractor is something that has remained pretty strong in terms of volume growth, and that is sustaining the performance for M&M. What is also helping is that they are entering into the EV space. That is taken the market very positively. The new models that they have launched. So the commercial launch is during the week, which should also be supportive. So yes, we remain positive on M&M. We believe the correction could be an opportunity. A lot of this correction is also because of the pre-positioning in the market before the results, because the results were expected to be strong and they have come out to be strong. Look at the volume numbers in terms of tractors. We have seen 20% growth. The UVs, which is another stronghold for M&M, is the volume grew by 17%. Realization has been pretty flat, but what is interesting is that they gained 240 basis points market share in the tractor segment, reaching a record 44%. So I think the tractors will be the key growth driver for M&M in 2025 as well, followed by UVs, where they have a strong hold. The EV booking, which will start in Feb, that is also an additional positive, and we believe that valuations are comfortable. Given that 18% earnings CAGR is what we are expecting. So we have rated buy with a target price of 3,675, almost 50% upside from current levels.
Well noted. Siddharth, thanks so much for taking the time out and being with us. Really appreciate your time. Thanks for extending that a little bit as well. It was important to get this going. Okay, let's first hear out what the management had to say, and then we'll get in Heyman to give us his sense on both M&M and escorts, which is kind of done reasonably well today. But hear out what Dr. Anish Shah had to say.
So we're seeing good demand on the farm side, and we've said that we expect the fourth quarter to be 15% higher than last year, which is a fairly significant number in the context of where we've been in the recent past. And the rate cut should also be looked at in conjunction with the recent demand stimulus that was provided in the budget. And a combination of both of those two factors, I think, will address some of the short-term issues that we were facing in the economy. And I think we will see a fair amount of demand stimulus as a result.
Okay. Heyman, any thoughts on Mahindra and Mahindra or escorts or both?
Neeraj, Mahindra and Mahindra looks a bit easier. We spent 8 months doing nothing. Range is between 2640 and 3222. And the sell-off today or the cool-off today, not very surprising. 1, 2, 3, 4, 5, 6, 7, 8. We've made 8 attempts at overcoming 3222 on the weekly chart. We may have gone about it, but we never closed about it on the weekly chart. So 8 attempts. When it closes about 3222, it's going to be a 10% up move. So it's a cool-off consolidation in a bull market, but the undercurrent is so strong, Neeraj, that we should have been at 2400. We never went below 2640 sort of. So undercurrent is solid. Escorts, on the other hand, I believe this year is going to be dicey. Currently, short-term oversold downside doesn't appear much, but if I look at the slightly longer-term charts, I believe 2024 is the year for exports to be forgotten. Next year onwards, things should start looking up. Neeraj.
Okay. Hemin, 10 minutes from close, your BTST, STBT calls.
Okay. It's a BTST on RBL Bank. Banks are the saving grace, and I'll also stick to the saving grace. Buy at 167, stop loss 164, target 173. Upward bar reversal on the hourly chart. Mechanical indicators on the 30-minute charts and 45-minute charts are given a crossover buy. A bounce is underway. I believe a recovery should manifest itself in a better way tomorrow. Harsh.
Okay, so that's the call, BTST, STBT. But on to an NDTV Profit exclusive. IHCL's MD and CEO Puneet Chhatwal talked to my colleague Agnidev Bhattacharya on what the Taj Group is looking forward to in Nagpur and how the Indian tourism economy will turn out to be, at least over the next year or so. Listen in.
We are a very humble and a very down-to-earth organization. So you cannot, without wanting to be misunderstood, Taj is the crown jewel of India. It's not one of those brands that you mentioned. That's number one. Number two, Nagpur is a very important destination which we have missed for so many years. When we opened our first Ginger, it was a runaway success from the very first day. The second one, which opened last week, is also a big success. And so we do believe that, given that an international airport is also coming to Nagpur, given the infrastructure development, on also the proximity of Nagpur to other areas, it's a very important destination that Taj was missing as a brand. And we are very pleased and happy to get Taj to Nagpur, because it will also uplift further the importance of Nagpur. Hotel business is such. We sometimes, how were hotels built? How was the first Taj built? How was the first hotel built by the government in the capital? Was to create that infrastructure to absorb a very important event that India was hosting. So similarly, going forward in future to host events for 700, 800,000 people, now together with Taj, Land's End and Bandstand, that would be possible. That this will allow the local people to enjoy the benefits of the foreshore area, which we are converting into public pathways, jogging tracks, gardens. That will also add to the community. And finally, the amount of jobs it will create, the amount of tax income it will create is phenomenal for the success of any city or state.
Right, so quick 30 seconds. The Indian hospitality space is getting really competitive. We know the ITC hotels just listed. So what do you think the hospitality space is going to look like in the next 2 or 3 years? Also, before you go on to that question, where exactly in Nagpur is the Taj going to come up?
Well, the Taj will be coming up in the city center, and we're also looking at a gateway branded property near the airport that is not yet signed. I think the hospitality space in general has seen some growth between the years 2010, 12 to 17. And then because of COVID, a lot of supply got stopped, and it's beginning to see a lot more supply coming in. But having said that, India has reached number 5 level as an economy in the world, poised to be number 4 with the aspiration of becoming number 3. And the branded hotels that we have is less than 200,000 rooms. New York City has more rooms than entire India under brands. So I think the opportunity is immense. The contribution to GDP will be immense, and the growth on the jobs with the kind of skilling that we are providing will be just fantastic for the country. So I think we have to look at 3 trillion tourism economy at India at 2047.
Okay, so that's of course Agni exclusive conversation with IHCL's Puneet, the MD CEO at IHCL. But anyway, let me quickly switch focus. What to watch? You have ECB President Lagarde who will be speaking. You'll have China's outstanding loan growth, China's M2 money supply, and US inflation expectations, all of which will come through. In terms of earnings, plenty to look out for. You have Devyani International, a Vodafone Idea, IRCTC, Kolte Patil, Lupin, that will be the big one in the pharma pack, and SAIL. All of those expected, and then you'll have some corporate actions which will come shortly on your screen, and those are some names to keep your eye out on as well on the back of dividend payouts. Also, you'll have shares, the lock-in expiry for SBFC Finance, 21% of the capital will expire in terms of lock-in expiry to holders of SBFC, and will be available for them to sell. That will be a big one because we've seen negative knocks on some of those counters. But a couple of counters which are really zooming in trade, and Avanti Feeds is one of them. A PNC Infra, after the numbers declared, also holding in the green. Hemin, couple of these counters, your view?
I think Avanti Feeds is looking promising. Okay, 760 is a bugbear for sorts. It doesn't have pleasant history around 760, but the stock has been consolidating for 7 years, Harsh. So if this 760 level gets taken out, I think it would be very interesting. As of now, it's firing on all cylinders. If you look at the short-term charts, if you look at the medium-term charts, well, even the longer-term charts. So daily, weekly, monthly, even quarterly charts are so. It's in an uptrend on all time frames. Yes, he's gone from 540 to 760. The market is not very copacetic for a big move currently, but standalone Avanti Feed actually stands out. So I would say if the 7-year breakout happens at some point in time, I think it would be very, very interesting. So it looks good. I'm not sure if the market supports something like this in an overall point of view, but standalone.
Okay, very quickly, Hemen, 30 seconds because we're very close to market close. Stock called Zinka Logistics, Black Buck, up 5% today, up 5% Friday. Define the trend. Any thoughts?
I can't find the stock.
Okay, never mind. Okay, man, maybe we'll talk about it next Monday, man. But that's completely fine. Thank you for all the wisdom today. Really appreciate your time. And Harsh, over to you. Looks like a damp squib of a close.
Yeah, I mean it's a tough day, and especially on the broader end of the spectrum. Let's pull up the Nifty intraday, and let's see where we're closing in at. Well, not very much off the lows of the day. We're just about maybe 60 odd points from those lows. We're still ending with a cut of around 180 points on the Nifty, and the breadth also not looking too good. Let's pull up the heat map, and the breadth continues to look tough, even though it's improved a wee bit for sure. So maybe a few more stocks in the green is what we're seeing. Kotak Mahindra Bank is now up 1.7% in trade. So well, it was part of what we spoke of on Heard on the Street, and it's the top Nifty gainer today, also the top Nifty contributor in trade today. So you want to keep your eye out on that one, because it's looking like a very special move on a day like this. What's not doing well, there's a whole bunch of sectors, pretty much all sectors trading in the red. So I'm not going to talk specifics here. % plus lower on nearly 30 stocks. So there's plenty of pressure across the board. Let's look at the advanced decline for the entire day in terms of the graph. And that's the advanced decline that we're sitting on currently. A marginal bit of improvement for sure visible, but that's in the day, and it's been a tough day pretty much all the way through. Let's look at where the broader markets are sitting in at. The Nifty Mid Cap Index down 2+%, so not much improvement there. The Nifty Small Cap Index down 2.3%, so a wee bit of improvement there is what we are seeing as we close out. Over the last hour or so, there's been a slight marginal improvement, if at all. We've closed for the day now. Let's look at sectors and try and round those up. Pretty much all sectors in the red, but let's try and focus in on what's really outperformed today in relative terms. The Nifty Private Bank has done fairly well, including the Nifty Bank as well. Both of those have outperformed. The Nifty FMCG Index also has done fairly well for itself in comparison to the Nifty 50 for sure. When you're looking at what's not done well, the Nifty Metal Index really taking a bit of a knock in trade today. The Nifty Realty within the broader markets and you're seeing pressure on the Nifty Pharma, which we spoke about, and the Nifty Auto, which is down 1.6%, versus the Nifty 50. You're seeing some pressure there. The Nifty IT largely in line with where the Nifty is, but that's how it's shaping up. The VIX spiking as a result of all of that that's happening on your screen at this point. Let's look at the Nifty metal constituents before we move to the Nifty Bank, because those were the two interesting plays here. Just look at the pressure across the board. 5% lower on a Nalco, a sale also due for numbers. Vedanta also down 4.5%. So those are some stocks where you really saw strong moves. And let's look at the Nifty Bank, because that's the other one where there's been a decent outperformance in trade today. The Kotak and ICICI are the only two which are sitting in the green. Outside of that, you have a whole host of companies sitting in the red. PSU banks also seeing some bit of pressure. PNB is one of those, 1% odd lower. Can Bank also seeing that. Last off, the BSE 500 top gainers, top losers, and we'll try to close with that. Those are some names on your screen. Reddington on the back of numbers, good ones, strong ones, 4.5% higher. And Avanti Feeds also seeing a bit of a spike right towards the end because of numbers. PNC Infra because of the 12-month period where they weren't allowed to make bids, now shrunk to 4 months, coming post the High Court appeal that they made. JM Financial, among others, under pressure. You also have an Alchem Labs down 7%, delivery on the back of numbers. Again, you'll see a whole host of shares or stocks on this side of the screen because it's just been that kind of a day. But it's been a tough day. You've seen broader markets decline sharply. Of course, it's going to be an interesting week that plays out, so stay tuned. With that, it's completely out of time on this edition. From Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. Good afternoon. You're watching Market Express and I'm Malika Mishra. Let's get straight into the show. Benchmarks kickstart the week with losses as threat of US President Donald Trump's tariff loom. Nifty breaks support level after 1% drop. Sensex sheds 700 points. Broader markets see sharper cuts, underperform benchmark indices. All sectoral indices in a sea of red, led by Realty Index. Metals tank on fears of Trump's tariffs. Media, pharma and PSU banks and oil and gas stocks follow. Rupee hits record low to open at 87.92 against the US dollar Monday morning, marking the Indian currency just 8 paise away from the 88 mark. It has fallen 2.6% this year, making it the worst performing Asian currency during the same period last year. The decline in rupee value comes on the back of Donald Trump announcing fresh tariffs on aluminium and steel imports. Zaggle shares hit 10% lower circuit today as the fintech platform reports 3% drop in profit after tax in Q3, while the company counts strong revenue growth as a key positive. Rise in incentives, cashback, employee costs, and a sharp increase in depreciation hurt EBIT and EBIT margins. Nomura initiates a buy rating on Anant Raj with a target price of 750 rupees. The company is poised to execute medium-term data center targets. The company is expected to launch 2 to 3 projects in FY25 and additional 3 projects in FY26. The brokerage firm believes that the concerns around data center pricing risk appears to be overdone. In fact, the risk-reward ratio is skewed towards reward post-price correction. JP Morgan maintains a neutral rating on Mazacon Dock but hikes target price to 2,262 rupees, which was earlier 2,124 rupees. Company's stagnated order book is now ready to take off. The firm, however, believes that despite large orders, the margins could be lower. The revenue growth has been strong but could slow temporarily if large award is delayed. Nomura's neutral call on Hero Motors slips the stock in the slow lane. The brokerage firm trims the target on the stock to 4,594 rupees, citing near-term demand challenges. Additionally, Nomura expects the two-wheeler industry to face growth risks in FY26 due to slower GDP growth. Meanwhile, Nomura retains a neutral stance on Apollo Tyres with a target price of 470 and an upside potential of 10%. The firm reckons that growth-related headwinds from a weak macro market and the company's focus on profitability over market share could be detrimental in the medium term. Moreover, earnings could continue to suffer on the heels of weak export outlook and competitive pricing pressure. Axis Securities initiates a buy call on Kalpataru projects. The stock weakens after the brokerage company highlights execution delays, slip in capex sentiment. Axis Securities thinks Kalpataru's QIP proceeds to further aid lower leverage. The company has a conservative order selection and intake. Axis sees 16% revenue CAGR over FY24-27. BHEL and Hitachi come under investor radar after they receive a letter of intent from Rajasthan Part 1 Power Transmission Limited. The award pertains to a special purpose vehicle or SPV under Adani Energy Solutions in order to establish 2 terminal stations in Rajasthan and Uttar Pradesh. This will be executed in 2030. All cargo Gati shares under pressure despite in-line revenue and strong EBITDA beat. All cargo's Q3 revenue improves on the back of sales initiatives. The EBITDA improves on the back of cost initiatives. A momentum in sales growth drives margins higher. The company records highest ever quarterly volumes in Q3. Let's now get your view on consumer services. Axis Capital comments on Zomato, Swiggy and Zepto. It says, while Swiggy and Zomato underperformed the benchmark due to stiff competition in QCom, Zepto turned out to be the player with the most aggressive pricing. With margin pressure to peak in 2 to 3 quarters, Swiggy stands most vulnerable. Key risks are price-sensitive users and heavy discounts from Amazon or Reliance. It changes its preferred stock from Zomato to Swiggy. In a bid to boost travel to Georgia, travel services platform Thomas Cook signs a pact with Georgia National Tourism Administration. As per their exchange filing, Thomas Cook India's internal data reveals strong travel appetite from Indian consumers for fresh, new destinations and easy visa regimes. This partnership aims to showcase Georgia along 3 key axes: attractiveness, accessibility, and affordability. JSW in its 3-month business update reports consolidated crude steel production of 7% of 25.18 lakh tons year on year. The company's Indian operations jumped 7% to 24.52 lakh tons. Glenmark, along with Cosma Pharma, receives approval from Medicines and Healthcare Products Regulatory Agency in the United Kingdom for a medicine called Winlevi. Winlevi is a topical treatment for acne vulgaris in patients aged 12 years and older. As part of the agreement signed in September 2023, Glenmark has in-licensed the product from Cosmo Pharmaceuticals for distribution in Europe and South Africa. A big setback for Tilak Nagar Industries. Shares of the company hit lower circuit as Bombay High Court dismisses plea in Mansion House IP dispute. The court grants Allied Blenders permission to enter West Bengal market with Mansion House branded products. Bad day for metals as big names in the space take a massive blow after Donald Trump announces fresh tariffs on aluminium and steel. Nifty metal falls over 2% today with constituents like SAIL, Vedanta, Nalco, NMDC and Tata Steel plunging over 3%. Trump says that the tariffs would apply to import of the metals from all countries. Shares of Brainbee Solutions, more commonly known as First Cry, surges over 9% as losses decrease in the third quarter. The company reported a net loss of 7.8 crore rupees versus 31.5 crore in the same quarter last year, narrowing the figure by over 5 times. Revenue rose by over 14%, EBITDA shot up by 84.4% and margin came in at 4.9%. Fortis Healthcare declines after the hospital's diagnostics vertical faces a slowdown. Nomura highlights a 2% revenue beat driven by hospital revenues, which were 3% higher than expected. Diagnostics segment revenues aligned with Nomura's estimates, but consolidated EBITDA was 3% below expectations due to one-time branding-related expenses in diagnostics. As growth slows down, equities struggle and downside risk rise. HSBC picks top 5 stocks that stand out in a slowdown. Dixon Technologies, Maruti Suzuki, PB Fintech, Godrej Properties and LTI Mindtree make it to the list. The brokerage calls the pack the India 5. It also highlighted reasons for picking each of them as follows. For Dixon, strong growth story. Maruti, export potential. PB Fintech, competitive advantage. Godrej Properties, large land bank and pan-India presence. And for LTI Mindtree, rising demand from banking clients. The RBI announced a 25 basis point rate cut and brokerages have mixed views. Macquarie pegs growth recovery to be modest and forecasts another 25 to 50 basis points rate cut in the future. BofA is neutral and signals more room to cut rates. Nomura hangs on to the RBI governor confirming a regime shift on rates, liquidity, foreign exchange and regulation. UBS reads the rate cut as a growth booster and Morgan Stanley says the policy pivot was in line with expectations. Beer biceps Ranveer Ahlabadia is in controversy for a vulgar comment that he made on Samir Arora's India's Got Latent show. The YouTuber is being slammed online for posing a controversial question to one of the contestants regarding sexual activity between parents. The video went viral and triggered comments from numerous netizens. In fact, even Chief Minister Devendra Fadnavis said anyone who crosses limits of decency will face action. Following the outage, Ranveer took to his social media apologizing for his comment. In an exclusive interview to NDTV Profit, Road Transport and Highways Minister Nitin Gadkari says that Maharashtra is set to contribute significantly in making India the third largest economy in the world by 2030. He said that the state is on the path to become the aviation capital with development plans on multiple fronts like agriculture, rural, industrials and manufacturing. He also said that Maharashtra's Vidarbha region will soon become India's steel and logistics hub. Tech aggregator Redington goes all in at Lead 2025, a premier tech event in Saudi Arabia. The company announces to spend a colossal sum of 2 billion Saudi riyal for the kingdom. This will be funded via internal accruals. This spending will include a state-of-the-art headquarters, an automated and distribution center, and investments into building talent. The company has been present in the kingdom for the last 24 years. Natco Pharma gets final approval for abbreviated new drug application of Bosentan tablets. Bosentan tablets are used to treat high blood pressure. Natco Pharma's marketing partner for the and Lupin for the ANDA Lupin Pharmaceuticals will market the product in the US. PNC Infratech jumps over 4% after the Ministry of Road Transport and Highways reduces disqualification period for new bids participation. The period is reduced from 1 year to 4 months. The company earlier sought revocation of the disqualification to Delhi High Court. The Transport Ministry had disqualified the company in participating in any bids for 1 year period. Varun Beverages Q4 revenue jumps 40% on a yearly basis. EBITDA is also up 39%, but the margin remains flat. The net profit of the company is up 40%, surpassing estimates. The company is now debt-free through prepayment of debts by using the proceeds from the QIP issue. The consolidated volumes of the company increased by 23%, of which India volume constitutes 11%. South Africa sales volume also saw an uptick of 12.5% this quarter. Ashoka University establishes Havel School of Management and Leadership with 250 crore rupee grant. This commitment is Havel India's third and largest commitment to Ashoka, which will be spread over a period of time. The management school will offer both UG and postgraduate programs. Mastech announces strategic partnership with OpenANA, an innovative AI-driven platform modernizing software development life-cycle processes. This partnership marks a significant milestone in Mastech's journey to enhance generative AI capabilities, enabling businesses to innovate faster, optimize development workflows, and accelerate digital transformation. Trend stock slips fall over 4% despite a buy call on the company. The company delivers a strong operational performance in Q3. Citi believes the company's like-for-like moderation is led by slowdown in discretionary consumption, blended with higher base. Citi picks Trend as their top stock in the consumer discretionary and retail sector. Energy sector stocks IOCL, BPCL, HPCL, MRPL, and Chennai Petro and RIL are in focus. Singapore gross refining margins rise up to $8.7 per barrel versus $2.8 per barrel. The GRMS rise up to $8.7 per barrel versus $2.8 per barrel. Generally, every $1 per barrel rise in gram could impact MRPL's EBITDA by 1,000 crore rupees, whereas for Chennai Petro, the EPS could rise 30%. For the OMCs, IOC, BPCL and HPCL, higher GRMS means earnings increase of 16% and 14%. Morgan Stanley downgrades delivery to equal weight and cuts target to 320 rupees from 450. The analyst firm highlights the sharp earnings miss. Additionally, Morgan Stanley sees limited growth visibility for the industry. The company has strong competitive moats and a large optionality value. However, Morgan Stanley believes that uncertainty around timeline for the same makes risk-reward less exciting at this given point. The India Energy Week kicks off today. Petroleum and Natural Gas Minister Hardeep Singh Puri expects energy agreements to be signed during PM Modi's visit to the US. Prime Minister Narendra Modi interacts with students, teachers and parents in the 8th edition of Pariksha Pe Charcha. The event features notable personalities including spiritual leader Sadhguru, actors Deepika Padukone and Vikrant Massey, Olympic champion Mary Kom and Paralympic gold medalist Avani Lekhara, who will share their insights and experiences. This year, Pariksha Pe Charcha has drawn an overwhelming response with over 3.3 crore students, 20.71 lakh teachers and 5.51 lakh parents registering for the interactive session. Aero India 2025, the air show and the aviation exhibition began on Monday and will continue until February 14th at Yelahanka Air Force Station, Bengaluru. President Draupadi Murmu takes a holy dip in the Triveni Sangam this morning as she visited the Mahakumbh in Prayagraj. Visuals showed the president was escorted by the guards on the floating jetty, after which she climbed down a ramp and took a dip. She is only the second Indian president to take a dip in Sangam after Rajendra Prasad. Her visit comes over a week after a stampede killed about 30 devotees during the auspicious occasion of Mauni Amavasya, as a huge crowd turned up in the early hours to take the dip in the Sangam. Thousands of devotees heading to the Mahakumbh are stranded in highways due to massive traffic jams stretching hundreds of kilometers on routes leading to Prayagraj. Many suggest that the queue of stranded vehicles was as long as 300 kilometers. Finding it difficult to manage the traffic, Cops in several districts of neighbouring Madhya Pradesh have stopped vehicle movement on a route to Prayagraj. It's impossible to go towards Prayagraj today as there is a traffic jam of 200 to 300 kilometers, reports quoted the police saying. Union Minister Ashwini Vaishnav announced comprehensive railway arrangements at 8 stations for Prayagraj Mahakumbh ahead of Maghi Purnima Snan on February 12th. The preparations include deployment of 13,000 railway personnel, special trains and advanced surveillance systems, while President Draupadi Murmu took a holy dip at Triveni Sangam as part of the ongoing celebrations. Prime Minister Narendra Modi's visit to the United States this week for talks with President Donald Trump has global implications. The upcoming discussions between the two leaders will center on defense cooperation, trade relations, and countering China's growing economic and military influence. One of the key items on the agenda will be the India-Middle East-Europe Economic Corridor, a multinational infrastructure initiative that aims to create an alternative to China's Belt and Road Initiative. A crucial player in this ambitious project is Gautam Adani's Adani Group, a company that has rapidly expanded its footprint across key infrastructure sectors from ports and power plants to defense technology. Prime Minister Narendra Modi sets off to France, followed by US, to advance AI inclusion and reinforce partnerships in tech, trade, defense and energy. United States will import 25% tariffs on all steel and aluminium imports, announces President Donald Trump. This would come on top of additional metal duties expected to be disclosed later this week. The Republican, however, did not clarify who would be targeted with the reciprocal tariffs. Trump stresses that the US would match tariff rates levied by other countries. Taiwan's export to Mexico soared by nearly 500% in January, reaching $2.7 billion. This surge is mainly driven by shipments of graphic processing units for AI servers. The shift comes as tech companies move production out of China, with firms like Foxconn and Wistron building factories in Mexico to assemble AI servers for the US. However, the trade now faces uncertainty due to US threats of higher tariffs on Mexico. Donald Trump tells US Treasury Secretary to stop minting new pennies, citing costs. He announces that he has directed the Treasury Secretary to halt production of the 1-cent coin featuring Abraham Lincoln as part of a broader effort to cut waste in the national budget. For far too long, the United States has minted pennies which literally cost US more than 2 cents. Now, he said in a Truth Social post, "This is so wasteful." Arvind Srinivas challenged his Tesla counterpart Elon Musk to stop him if he can from raising a mammoth sum from the federal agency USAID. Egypt announces Sunday that it will host an emergency Arab summit on February 27 to discuss new and dangerous developments after US President Donald Trump proposes to resettle Palestinians from the Gaza Strip. Trump's suggestion, made at a White House meeting with Israeli Prime Minister Benjamin Netanyahu last week, infuriated the Arab world, including Egypt, Jordan and Saudi Arabia, key allies of Washington. Both Egyptian President Abdel Fattah al-Sisi and Jordanian King Abdullah dismissed Trump's call to resettle 1.8 million Palestinians in Gaza and for the US to take ownership of the enclave, but Trump claims that they would eventually accept it. Barcelona cut the gap on LA Liga's top two with an interesting 4-goal win over Sevilla. The team managed to win despite playing out the final half an hour with 10 men after Fermin Lopez's red card. Robert Lopez, Rafinha and Eric Garcia made it to the score sheet. India wins ODI series win with Rohit Sharma's sharp roar back into form with 32nd ODI century. Skipper Rohit Sharma's scintillating century helped India defeat England by 4 wickets at cut to take 2-0 lead in the series. Ed Sheeran's live performance at Church Street, Bengaluru was halted by the police today minutes after he began singing. Authorities stated that the event lacked official permission, while Sheeran's team claimed it was a brief act with prior approval. Ed Sheeran is currently in India for the Mathematics Tour and is set to perform in Bengaluru today. He has already performed in Pune, Hyderabad and Chennai. Well, viewers, that's a wrap on Market Express. Stay tuned to NDTV Profit for more news and updates.
बजट भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to
kickstart the week with losses as fears of Trump's tariff loom on the market. Realty cracks, metals melt, and Pharma weakens the most. Broader markets see sharper cuts, underperform benchmarks. The Indian rupee hits a historic low at 87.48 as an after effect of Trump's tariff threats becomes the worst performing currency in Asia region for the year. 12 months later, engines from GE will be ready for a light combat aircraft Tejas made by HAL. Up to 24 aircraft would be delivered in the next fiscal. That's the big news coming in from the Aero India show that has begun in Bengaluru today. State-run oil companies are likely to bid for LNG supply from the US. Oil Minister Hardeep Singh Puri hints at potential agreements being signed during the Prime Minister's visit to the US. $100 billion of investment, 1 million direct jobs and 4 to 5 million indirect jobs. That's on the table under the European Free Trade Agreement, says Union Commerce and Industry Minister Piyush Goyal. Will the Prime Minister ensure that US President Donald Trump spares India in his tariff spree? Trade talks are on the cards on February 12th, but the Prime Minister meets French President Emmanuel Macron before that. Hello and welcome. Good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will bring you the latest on markets as well as national and international news. To begin with, US President Donald Trump announced that the United States will impose 25% tariffs on all steel and aluminum imports. These tariffs are expected to be on top of existing duties. Trump did not clarify who would be targeted with reciprocal tariffs, but he stressed US would match tariff rates levied by other countries. Listen in.
I'll be announcing probably Tuesday or Wednesday at a news conference reciprocal tariffs, and very simply, it's if they charge us, we charge them. That's all.
When does it go into effect?
Almost immediately, but I'll be announcing the details of it, highly detailed, and it'll be great for everybody, including the other countries. But if they are charging us 130% and we're charging them nothing, it's not going to stay that way.
This is on every country?
Every country will be reciprocal.
President, can you confirm
it won't affect everybody because there's some where we have similar tariffs. But the ones that are taking advantage of the United States, we're going to have it's reciprocity, it's reciprocal. We're going to have a reciprocal tariff. But we'll have a news conference Tuesday or Wednesday.
Just on the steel question, just so I understand.
We'll also be announcing steel tariffs on Monday.
In fact, the Indian benchmarks feel the heat. They end lower for the fourth session in a row as US President Donald Trump escalated trade tensions. The announcement also sent the rupee to a record low of 88 intraday. All sectors closed in red with metal, realty and media falling as much as 3%. Harsh is joining us with a complete market roundup of the day.
Well, a weak global setup, first off, led to markets opening weak and in fact a sustained weakness starting to creep through as the day went by. The Nifty 50 though was down a little less than 1% and therefore not too much damage done on the index. But when you're looking at the breadth was extremely weak. We just had about 40 declines to just about 10 advances, and that's where really a day like this really stood out. So one, we had weak global cues. Two, we had an extremely weak breadth in terms of the market. Three, you had banks outperform the Nifty 50 as well as the broader markets. The broader markets saw much more pain. You saw the Nifty mid cap down over 2%, the Nifty small cap index also down over 2.25%, closing just off the lows of the day, but there was very little left in terms of the bounce back from the lows, and therefore how do we perform tomorrow will come into the picture really quickly. What did well? Banks were relative outperformers. None of the sectoral indices were in the green. Banks were relative outperformers in that sense, and private bank in particular. The top gainer on the Nifty 2 was Kotak, and that stock was up 1.7%. Also, you saw what was probably the top loser, broader end. real estate, Nifty Realty was down over 3%. What was also under pressure due to the entire tariff play and everything around tariffs that's happening, you had the Nifty Metal, which is down over 2.5%. So some metal stocks really pressured in trade. Last off, some big gainers, losers on the back of news. Some BSE 500 top gainers, top losers on your screen for perspective.
Right, Harsh. Thank you for marking the, wrapping the market for us today. Well, the markets are not in a bull run, but they are not exactly falling apart either. There is no reason to think that investors will not make any returns. This is what Samir Arora, the founder and fund manager of Helios Capital, had to say during a conversation with NDTV Profit. Listen into that conversation.
I think that Indian market is not some bull run, best time ever, which I've been saying for 2-3 years. But the public was overselling India to say this is the golden decade and this is Amrit Kal. That is not needed. The Indian market generally has given returns in line with its earnings. If you see broadly any period, that means you do 3-year, 1 year, 10-year, 15-year, broadly the earnings growth has been 12-15%, and the market growth, that is in rupee terms, has been 12-15%. Right now, what has happened is that because the FIs have sold a lot in the last 4-5 months, that has led to, of course, their selling. But secondary, it has led to this liquidity pull out, you can say whatever, because the government or the RBI had to sell those dollars to them and basically took away the liquidity. So that is being addressed. So big picture, we are not saying it's some big bull run, but there is no reason to think that this market or the world is falling apart. You'll make your same return plus minus a few percent going forward. The last 3-year returns are below average for Nifty and the 500. And 500 is more or less in line. Nifty is below average. Separately, small caps are high and okay, but the problem with small caps is there are some, 500 of them. So everybody says, I have 3 of them, which I like, and I don't care in aggregate what the small cap valuations are. But in the very short term, they will also be influenced by how the aggregate things are doing.
India's primary market will be buzzing in the second week of February with 9 public issues scheduled to open for subscription, mostly in the SME space. Quality Power Electrical Equipments, Hexaware Technologies and Ajax Engineering will launch their IPOs on the main board space. Concreting equipment player Ajax Engineering's 1,269 crore IPO is scheduled to open on February 10th. The price band for this IPO has been set in the average range of 600 rupees per share. On the other hand, Hexaware Technologies has set a price band of an average price of 700 rupees per share for the IPO that will open on February 12th. External commercial borrowings by Indian corporations touched a 4-year high in December. This was due to big-ticket issuances by Shriram Finance, REC, Reliance Industries and Tata Capital. My colleague Shubhana Sheikh is joining us with further details of the same. Shubhana, what are you picking up on this matter?
Hi. So yes, ECB borrowings and dollar bond issuances have hit over a year, a near 4-year high in December. Now this was largely because a lot of NBFCs such as Shriram Finance, IFL Finance, and even corporates for that matter like REC, Interglobe Aviation, Reliance Industries, had heavily tapped the offshore debt market to meet their fundraising needs. Now these ECB borrowings, these companies raised over $9 billion in December, which was sharply higher than over $5 billion that they would have raised in the same period a year ago. Now the last time that this number was so high was in March 2021. When NBFCs and other corporates had raised about $9.23 billion through this route. Now, it is also important to understand that over $3 billion of this fundraising has actually come from, financial services and a private corporate. Now, Shriram Finance, has been the biggest, has been one of the major issuer in this market. They have tapped the market 6 times in December and raised, and they've solely raised over $1 billion billion. Now, this has largely come because the Reserve Bank of India has actually been nudging the NBFC sector to actually, cut down their dependence on bank borrowing and diversify their funding needs. They had also raised risk weights on bank lending to NBFCs back in November 2023. So this current credit slowdown and the RBI's nudge to reduce bank borrowing and diversify NBFC fundraising needs, and also the tight liquidity conditions in the market has driven ECB borrowing to this high. What market participants are also telling us that merchant bankers believe that other corporates such as PNB Housing Finance, Cholamandalam and Shriram Finance will continue to tap the ECB bond market for the rest of the financial year and the next financial year.
Understood. Thank you for bringing us that report, Subhana. Moving on, the National Company Law Tribunal directs BCCI's insolvency withdrawal application to be submitted to Baiju's creditors committee. NCLT has also directed reinstatement of Baiju's lenders, Glass Trust LLC and Aditya Birla Finance Limited, to the committee of creditors. Varun is joining us with details on this. Varun, could you please explain the story to us?
Hello.
Yes, Varun, could you please explain what's happening here? Okay. No issues. We'll move to the next story. Defence Minister Rajnath Singh inaugurates a stellar lineup at Aero India 2025 event at the Yelahanka Air Force Station, drawing a parallel with the ongoing Mahakumbh. Defence Minister Rajnath Singh said that while the religious gathering symbolizes faith and devotion, Aero India represents innovation and research in defence and aerospace. The event aims to feature high-speed aerial maneuvers, advanced aircraft displays and strategic business discussions. On to some exclusive voices now. At the sidelines of Aero India 2025 event, my colleague Sajjit Manghat caught up with Godrej and Boyce's Manik, I can't pronounce his surname, and Optimize Electrotech's Sandeep Shah. Listen into a slice of that conversation.
So for Brokerage, our passion is engines. As you rightly said, we started manufacturing for ISRO way back in 1985. And since then, we have been working with ISRO for various engines. And India does need the next generation gas turbine engine. And we won this order from DRDO GTRE about 2 years back. And since then, we have been manufacturing and developing this particular engine. We have shipped one set of engine to GTRE, and what you see over here is the second set which is being displayed over here. So we are on an advanced stage. A lot of work from manufacturing of toolings to understanding the process, metallurgy, welding, the ovality of all the various casings, etc. So a lot of learnings have come through, and I think we are well ready to deliver further engines to the Indian programs.
You know, one of the things which has been in discussion here is about the delay in Tejas. I know you don't do much for Tejas except for some of the actuators which are used here, right?
Yeah, for Tejas we have developed along with ADA the flight control actuators. Yeah. So the LESA and the ABC are now flying, and what you see over is the L1 actuator. So this will be under test very soon. Also, we have developed various lubrication pumps. The nose wheel steering is our own design. So this is a part of the landing gear where after the aircraft lands, it kind of maneuvers onto the tarmac and takes it to the parking. So that's the nose wheel steering. That's our own design. So we have ventured into the build to spec. Earlier, up to 2021-22, we were a build to print company. With this, we have ventured into build to spec. We are also working on ejector release units, again for various programs. The uplocks which take care of the landing gear when they lock in or to be released. So various hydraulic and electromechanical actuators, whether they are for the flight or otherwise, is something what we are focusing on. That's where we are developing our design team. We just launched our design team now, and our design head will be here in a short while. So a lot of new things are happening from build to print to build to spec, but focus remains on the engine.
Optimize Electrotech, we have been building AI-based imaging systems. These have got edge analytics at the equipment level itself. We have been winners of IDEX multiple times as well as with Aditi now. And with all of that, we have been building different types of products, but the overall structure remains the same. We build optics to AI, everything on our own. For example, this is one of our products. This is a micro missile seeker. This is a micro missile. This is useful for tactical warfare. This is used in drones. This is used in drones. So the drones would normally carry the missile. That is how it works. So the micro missile is useful for tactical surveillance, and then the moment it has seen and you have allocated what the target is, what we have built is this seeker. The seeker allows the missile to make sure that only the person or the object of interest is followed, tracked, and then eliminated. So for example, here you can see that the seeker would have different targets that are given. Those targets can be given by the drone and said, this is the person of interest. Only that person may be followed. This is one of our products. Similarly, we have other products that are for different purposes, like this one here. So this is for a grenade launcher. In this, we have been able to do precision elimination of targets at distances. So in a normal case, a grenade launcher requires you to have a lot of computations being done because grenade travels in a projectile motion, unlike a bullet which travels in a straight line motion. So because it's a projectile, it's important that the corrections are done for wind, temperature, velocity of muzzle velocity, everything before you fire the grenade. And thereafter you need to make sure again that it works in day and night. So this particular equipment can work in day and night and can do precision elimination of targets.
The India Energy Week kicks off today. State-run oil companies are likely to bid for LNG supply from the US Oil Minister. Hardeep Singh Puri hints at potential agreements being signed during the Prime Minister's visit to the US amid more. Listen in.
We've had 9th round of OALP, open acreage licensing policy. We've had 9 rounds of bidding. We're hoping to do the 10th round during this thing. So, what does it add up to? It adds up to, yes, you have to do E&P, and we are securing some recent successes. We've got some navigation to do in the Andaman Sea. We need some help from other global majors in terms of seismic survey. We are signing a couple of MOUs today also, immediately after this. We are also, that 20% biofuel blending, we were supposed to actually achieve 6 years from now. So we are not doing it 5 years in advance, we're doing it 6 years in advance. Then green hydrogen, you're talking about a bus, but it's not the bus. The IOCL has actually issued a big tender in which there are a number of participants. So, first somebody has to come up with a policy, then they have to design it, then he has to issue a tender, then people participate. That's how the ecosystem builds.
Union Minister of Commerce and Industry Piyush Goyal, in an event with European Free Trade Association, launched dedicated platform EFTA Desk to promote trade, investment and business facilitation between the two regions. He even mentioned that the relation will boost investments and create jobs in India. Listen in.
Joining us, the four countries of the European Free Trade Area, EFTA, joining us to take one important step forward in our agreement to promote trade and investment between the EFTA countries and India. As you are all aware, we had entered into a Trade and Economic Partnership Agreement, TIPA, last year. Subsequent to that, in all the four countries, significant steps have been taken to ratify the TIPA. There's a lot of positivity in all four countries, and we hope to operationalize the TIPA in the later part of this year. This agreement was the first of its kind in the economic history of global trade and investment. This is the first agreement where, within the contours of a trade partnership or a trade agreement, we have also introduced the element of $100 billion of foreign direct investment. This does not include foreign institutional investors or FII investment, which, for example, the Norway Sovereign Fund does in India. This is foreign direct investment, catalyzing manufacturing, innovation, services, industry areas which create large number of jobs. With this $100 billion foreign direct investment, I personally believe we could be catalyzing investment, overall investment of maybe $400 or $500 billion in the Indian ecosystem. Similarly, the commitment includes 1 million job directly being created, which again will translate to 5 or 6 million jobs directly and indirectly.
President Draupadi Murmu visits the Mahakumbh Mela in Prayagraj and takes a holy dip at the Sangam. She was accompanied by Uttar Pradesh Chief Minister Yogi Adityanath. The President also performed puja and darshan at Akshayvat and Hanuman Mandir. She later visited the Digital Kumbh Anubhav Center. She is only the second Indian president to take a dip in the Sangam after Rajendra Prasad. Her visit comes over a week after a stampede killed about 30 devotees during the auspicious occasion of Mauni Amavasya. Onto the political front, the BJP has not only stormed to power in Delhi, but with a win of 48 out of 70 seats and reducing the AAP to 22. This is in stark comparison to the 2020 elections, which saw AAP's resounding victory with 62 seats. On the big question today at 6 p.m, we ask, will Delhi finally get what it deserves? Here's a snippet of the discussion.
Over the years in Delhi, the middle class has been playing a role in the election of the governments. Even the Aam Aadmi Party, though it was getting significant support from the poor and lower socioeconomic class, they were providing it a base vote share. But it was the middle class who was switching from the BJP to the Aam Aadmi Party in Vidhan Sabha elections, perhaps lured by its anti-corruption plank, its public participation online or a transparent funding, etc., etc. That is the middle class which has stayed back with the BJP largely in this election. And why it has happened? See, voters have become transactional. What BJP has done smartly this time is that while continuing or while promising that the poor and the lower socioeconomic class will receive benefits as they are receiving under the AAP government with the continuation of the schemes, the budget announcement of this tax break, because that is helping almost everybody. I mean, 90% of the populace of India earns less than or shows an income of less than 12 lakh when they file returns. So that was a tangible benefit also given to the middle class to manage their discontent because they were reeling under high inflation, high taxes, etc. So this was smartly done. See, the middle class voters have shifted towards the Aam Aadmi Party largely due to corruption and this tax break. But what is missed in this entire discussion or entire analysis of the Aam Aadmi Party losing is that the gap is only 3.5. And the strategic blunder which the Aam Aadmi Party has done is that they have not transferred any single installment of the Mahila Samman Yojana to the women beneficiaries. If they would have transferred 1 to 2 installments, they had already allocated for the this amount in the budget of last year. If they would have done or transferred even 1 to 2 installments, the election results would have been starkly different.
Prime Minister Modi has left for the US. His first meeting with US President Donald Trump in his second tenure is scheduled to take place on the 12th of February. The big question is whether Modi will be able to stop Trump from imposing tariffs on India. Modi issued a statement ahead of his taking the official flight first to France and then to the US. In this, he said, although this will be our first meeting following his historic electoral victory and inauguration in January, I have a very warm recollection of working together in his first term. He also said that discussions would take place for agreements in the partnership in technology, trade, defense, energy, and supply chain resilience. At France, he will co-chair the AI Action Summit, which is a gathering of the world leaders and global tech CEOs. He stated that he would also explore the 2047 Horizon roadmap for India-France strategic partnership with President Macron. In another cost-cutting measure, US President Donald Trump has directed the US Treasury Secretary to stop minting new pennies. He announced that he has directed the Treasury Secretary to halt production of the 1-cent coin featuring Abraham Lincoln as part of a broader effort to cut waste in the national budget. For far too long, the United States has minted pennies which literally cost US more than 2 cents. He said in a Truth Social post, "This is so wasteful." Beer biceps Ranveer Ahlabadia is in controversy for a vulgar comment that he made on Samir Arora's India's Got Talent show. The YouTuber is being slammed online for posting a controversial question to one of the contestants regarding sexual activity between parents. The video went viral and triggered comments from numerous netizens. In fact, even Chief Minister Devendra Fadnavis said anyone who crosses limits of decency will face action. Following the outage, Ranveer took to his social media, apologizing for his comment. Well, that's all the time we had on this edition of Profit 360, but do stay tuned to NDTV Profit for more news and updates.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources tells NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines.
One might expect that there would be a substantial amount of debt on the books, which is not the case, at least as far as this particular company is concerned. In fact, you will have a significantly higher debt even in automaker, an auto manufacturer, but that's not the case for Action Construction. So, of course, the kind of growth that we've seen over the past few years has aided the company in becoming debt-free, which is why we'll give this one a thumbs up as well. But Puneet, then let's talk about cash flows. They look all right as well.
Yeah, definitely. We spoke about the income statement growing at a very steady pace, and that's reflected in the cash flow from operations as well. So it's come in at 433 crores in FY24, and that's grown at a steady CAGR of 71% over the last 3 years. And that's been one of the key positive aspects about this company, that while the revenue has been growing, it has firmly focused on the cash flows as well, and that's reflected in the numbers. While on a net cash flow basis, the company has, degrown in terms of, negative 3% over the last 3 to 4 years. But it has heavily invested in building up capacities, and while you rightly said, Agam, that it has not taken on as much long-term debt, which has benefited the cash flows as well. So overall, while the net cash flow has been negative, it's expected to do better over the next 2 to 3 years, while the net cash flow from operations has been growing steadily and is expected to continue this momentum as well.
All right. So, moving on from your cash flows as well, let's talk about your return ratios, and that will also give you an idea about how things are panning out as far as profitability is concerned, the stability of the returns. And we usually talk about the return on equity, and we talk about the return on capital employed. So when it comes to return on equity, is a very healthy 31%. Remember that any number over the mark of 20-25% is a pretty good return on equity, and that is what Action Construction does have. If you move on and talk about your return on capital employed and you judge it by the same standards, its return on capital employed for the year gone by stands at around 43%. And remember that some of these numbers will resemble those of your staples companies. So this is a pretty good return on capital, return on equity as well as return on capital employed, which is why it's certainly going to be a thumbs up here as well. So if you consider your overall income statement, you consider the balance sheet, the cash flows, as well as your return ratios, it does look like the company is on a very strong footing. Of course, we'll talk to the management a little later on the outlook of the company, but so far it has done very well, and it does seem like it has taken advantage of the push in infra as far as the nation is concerned. And to a certain extent, we've also seen that demand come through for the company, which is why we've seen such a strong growth rate. So this is as far as your financial statements go. Let's talk about the shareholding then. And okay, so Puneet, why don't you take up this aspect? How do things look here?
Well, definitely, the promoter shareholding has been very stagnant and not a lot of movement there at 65.41%. And that's one of the key positive as well. While foreign institutions own almost 12% in this particular company, we've seen lower ownership by domestic institutions. So specifically, your mutual fund houses, among others, have lower ownership on the company, but the public as a whole have close to roughly about 21% in the company, and it's a well-diversified company in terms of one of the retail, wouldn't call it a retail favorite company, but specifically one which has been in the radar of investors, and that has, propel the stock, over the last 3 to 4 years as well in terms of share price performance as well. So Agam, overall, while, promoter holding has been stable, that's one of the key positives. Rest of the factors also don't seem too much of a complaint about Action Construction in the shareholding aspect.
Right. And so now, we're coming to a little bit of a puzzling aspect, and I'll tell you why that's puzzling. Is because I talk about the street coverage. And if you consider the Bloomberg consensus, where we don't have anyone who's covering Action Construction, this isn't exactly a small company. It has a market cap at around 15,000 crores, and it has grown from strength to strength, as will be evident, when Puneet talks about the kind of returns that the company has given. But even as you see such companies climb, you tend to see at least sell-side analysts, if not buy-side analysts, initiate coverage. And while we do have a handful of companies, or rather brokerages, cover Action Construction, we haven't seen anything very substantial at this point in time, which is why, and given the fact that after the kind of growth we haven't seen any coverage, we're going to give this aspect a thumbs down for now. But in terms of returns, as I was telling you about, Puneet, certainly a huge multi-bag over the last few years.
Well, definitely. We've taken the 5-year return performance just for comparison, and it's up almost 15 times It's given 1,550% in terms of stock price performance. It currently trades at around the 1,200 to 1,300 range and has fallen from the highs of about 1,600. That's largely because of market performance. But I did just check the lowest Agam for this particular stock price, and it was around 56 rupees in the COVID time. So from there, it's gone all the way up to roughly about 12 to 1,300. And definitely, if someone held on to the share or got in at that particular point of time, it would have been a big multi-bagger for them. While the dividend yield is not too much to talk about, it's a high growth company. It has been investing heavily in terms of new products, R&D, as well as increasing the capacity. So wouldn't take this as a negative, so as to say, while the dividend yield is just 0.16% for this particular company, there are some other factors to look at. So definitely not a negative. It would be somewhat not a thumbs up or a neutral as well, but it's just the fact that while the dividend is low, a high growth company, definitely a big positive for Action Construction in terms of business performance, and they've been investing there as well.
Okay, so that's coming down to the kind of returns that the company is given. It's very evident. It's for everyone to see. Even if you consider the 1 year returns, the returns that you got is positive. The reason why we don't want to consider 1 year returns at this point in time is because the markets in general have taken quite a hit over the last 4 months particularly, and which is why it may not necessarily be fair to especially compare a relatively mid-cap company with the benchmarks, or for that matter, something in the mid-cap, the small-cap company. But I will tell you this, that even on a 1 year basis, it has given you positive returns, even as we see a lot of the other companies reel and under pressure and give you those negative returns. Well, I come down to the aspect of valuations then. And when it comes to that, again, as if you consider the FY24 valuations, based on that, it's coming in at around 46 times. One might say that it does look expensive, but we must also remember that the company has once again shown a tremendous amount of growth in the 9 months gone by. And if you consider that, well, the valuations will be considerably lower, around 30, 35 times. And at this point in time, given the kind of growth that the company has seen, the expectation of the company in terms of growth, well, that would perhaps tend to suggest that the valuations are not unreasonable at this point in time for the company. So which is why we'll give the valuations a neutral stance at the moment, because a lot of the investors are still figuring out what the new normal for valuations is, especially given the kind of correction that we've seen over the past few months. Just want to, Puneet, you want to add a factor here?
Yeah, definitely, because management in Q1, so a couple of quarters ago, had mentioned that they're expecting revenue to grow 3 times in the next 5 years, and I think that's one of the key aspects. And valuation just, of course, comes down dramatically. But we'll quiz that to the management as well once on that aspect of what's the growth aspect going forward. But one of the key aspects to look at, while there's no street coverage to compare with or forward valuations, I think the forward guidance is something that the management has always given and expecting to do well as well going forward.
Well, that remains crucial. So, on that note, I'm going to firstly sum up all the factors that we will put together and give you an overall rating on the company. So we've spoken about the income statement, the balance sheet, the cash flow, the return ratios. It's a thumbs up for all these 4 important parameters. Even if you move beyond that, we are looking at good stability when it comes to shareholding. Of course, street credentials are massive thumbs up because it's been a clear multi-bagger. I'd reckon that it does not have street coverage, so that's one factor which may work against it. But besides that, valuation picture, again, a lot will depend on the outlook. So based on that, it's got a total score of 6.5 out of 8. That's the NDTV Profit rating for the company. Now, moving on, if you just consider very quickly, we have the management standing by to chat with us. But before that, I'll very quickly go through the strengths, weaknesses, opportunities, and threats. So, in terms of strength, of course, it's an integrated player in the crane segment. Given the fact that it has a 63% market share, it does have a dominance in this particular area. And over the past few years, it's built a lot of credibility in its name, against its name as well. So that certainly is a strength. And it crossed the 18% EBITDA margins in the third quarter of FY25. That is the ongoing quarter. That is the quarter just gone by. In terms of weaknesses, again, new segments like agri and machine handling are seeing a little bit of slower growth. And there is, of course, a little bit of slowdown in government ordering. But Puneet, let's talk about opportunities and threats then.
Yeah, very quickly, the new segments we spoke about, the agri and machine handling will be doing very well over the next, 2 to 3 years. So definitely a high growth opportunity there. While new products to be, introduced in the export market, that's something that the company has been mentioning as well, and it's present in the latest presentation as well. And while threats, there's not too much to talk about. Valuations is one of the key things that we discussed at 46 times price to earnings for FY24. While not a direct competitor, something like an Escorts Kubota, which is a listed player in the tractor space, that is trading at a lower valuation, but the growth aspect is there as well. The growth is much lower compared to Action Construction, while, export will have intense competition. But, Agam, these are some of the key aspects of strength, weakness, threats, and opportunities, and I think we'll discuss that with the management as well.
Absolutely. Well, on that note, let's get in Saurabh Agarwal, Executive Director at ACE, that is Action Construction Equipment, who joins us on the show. Saurabh, good morning and thanks for joining in. So far, the company has seen a lot of strength, not just in the quarter gone by, in the 9 months gone by, but over the last 5 to 6 years. At this point in time, there is conjecture whether or not there will be saturation in the markets. I know that the government does have a very ambitious outlay in infrastructure. As far as real estate sector is concerned in general as well, there are plenty of projects lined up, which could, of course, take advantage of the construction equipment that you're in. The question now is, based on the last 9 months, the kind of growth that we've seen, what can you tell us about the growth over the next few years? You've given us a guidance that Puneet mentioned as well. Do you still stand by it?
Yeah, good afternoon. We do stand by what we have said, and the way the country is shaping up, the way the infrastructure and the focus of government on manufacturing sector is there apart from infra, and these are the two main domains in which we operate. I see no reason that we should not be able to fulfill the guidance of, let's say, doubling or tripling our revenues, which we've given in the last 2-3 years. So I believe that within this coming next year, as compared to FY23, we should be in a position somewhere to double ourselves. And then about a year back, we had said we'll triple ourselves in the next 5 years. So I think we are on track. We are seeing reasonable traction again back in the infra segment. Manufacturing has been strong, our supply side. So I think on the whole, things are moving in the right direction. Even real estate is chipping in well. That contributes about 10 to 12% to our revenue, apart from infrastructure and manufacturing. So I think on the whole, things seem to be in a decent space as per whatever we had planned for our company.
Mr. Agarwal, good morning and thank you so much for joining us today. It's Puneet this side. I just wanted to understand about your export part as well. That's one aspect that you've been focusing on but hasn't reflected in revenues yet. I just want to understand from a medium-term perspective, next 2 to 3 years, what is the kind of potential that you're expecting from revenue in terms of the export market? What percentage? Is it somewhere between 15 to 20%? And do you see it coming from newer categories, or do you see cranes as one of the biggest revenue growth drivers in the export market?
For exports, about 3-4 years back, we had planned that we take it to about 15% contribution within our company, which was at a minuscule 1%. And till last year, we were able to grow it to at about 8% contribution. It has been a little slower this year, owing to a lot of factors, but I'm sure it will catch up. So our medium-term plan is to, get to about a 15% contribution from exports, which I'm sure over the next 2-3 years we'll be able to do. And apart from that, around that time, we had also started focusing on the defense business, and we wanted about a 5-6% contribution at least to be coming from defense, which was a possibility. So in the current year, I think we should be doing about 2.5-3% from defense. But for the next year, with orders in pipeline, which we see, I think the contribution can go as high as 5 to 6% from defense in the next year. So maybe exports and defense coupled together next year can go to 10-12%, maybe slightly more. And our medium long-term target was 20% coupled from defense and exports together. So I think we are on track, and hopefully it should play out well.
Just a follow-up, Mr. Agarwal, in the previous, conference call as well as interviews with us, you mentioned that you were looking to set up a new facility in Africa, and I think that was based on some conditions of some outlay. Just wanted an update on that, and do you see defense being more of a localization theme, or would exports also have some kind of defense component revenue as well?
No, defense is purely a localization theme. And in the past 2-3 years, we worked very closely with DRDO on certain types of cranes and equipment which are required for handling and even for some of the missile programs. And we have already successfully supplied some machines also to that extent. And it's a domestic play with respect to defense. And we are on the verge of getting one of our biggest defense orders. And it should have gone through by now, but yes, stuck up in some paperwork. So hopefully, over the next week, 10 days, we should be getting that one of our biggest orders, which will actually help us, achieving 5-6% contribution from defense in the next year, and maybe even the year after that, because we are supposed to deliver it in about 2 years.
Okay, Saurabh, just talk about the near term, and you have spoken about this particular defense order, but even beyond that, the last quarter, is that also a seasonally strong quarter for you when it comes to a higher amount of orders? Is that also the case for your particular company? And going into the next perhaps 3 quarters, what kind of ordering activity can you expect going in?
See, traditionally for our company, the first half, because of monsoons and the construction activity getting a little slower, especially in quarter 2. So about the first half is about 40-45% of our revenue. And the second half is 55-60% of our revenue. So definitely quarter 3 and quarter 4 are bigger than quarter 1 and quarter 2. And obviously, as it has happened in the last 25-30 years, similar thing has played out again. So second half is much stronger for us. So going forward, I think in the next year, let's say H1 next year, it will definitely be smaller as compared to H2 of next year. And, obviously we are going great guns in quarter 4 every year. And similarly, we are going great guns. So hopefully, I think again, we are on track for our biggest ever quarter again in the current quarter.
Mr. Agarwal, I just wanted to an update on something that you've spoken previously, which is your acquisition strategy. You had a couple of acquisitions over the last 2 to 3 years. Any kind of update that you can give on that?
See, somehow we've not been able to conclude anything much. Apart from the joint venture, currently we are in the process of forming with a Japanese company to make bigger cranes. So hopefully that should take shape by end of this quarter or within the next quarter. And but we are actively pursuing and looking at inorganic growth. So hopefully going forward we'll have some good news.
Saurabh, your balance sheet also looks like it's in a very comfortable position at this point in time, considering the growth plans that you have on the anvil, the kind of demand that you have for your equipment and cranes. Do you think that at some point in time in the next 2 to 3 quarters, you would potentially need more funds, or would internal accruals be enough for you to fund all the operations so far?
I think internal accruals will be good enough. And even currently, we have a capacity of 4,500 crores revenue. I mean, within this quarter, it'll be increased to 5,100 crores. So which should be good enough for us for the next 1.5. We are generating good amount of cash. We have close to about 900 crores available with us in the company for future growth. So I see no reason that we should be looking to raise funds or looking towards debt going forward, unless and until something really big turns up in for inorganic or something. So as of now, we really don't have any plans to raise money going forward. Right. I think we should be able to manage from internal accruals.
Saurabh, also a question on your focus in defense and of course your exports. Are those businesses, are those segments, what kind of impact can it have on your operating margins? Do you think that they'll help maintain them? Because I believe that, if I'm not mistaken, we've seen the highest operating margins in the quarter gone by. Do you think that there will be some sort of an impact there, a positive or a negative? What can you tell us here?
See, again, our margins with respect to export or defense business are in line with our company margins. So, they would really not be affecting positively or negatively with increase or decrease in contribution of this business. And primarily, we started focusing on these two aspects of the business to make our business a little counter-cyclical, as it was, 5 years, 10 years back. To have certain more revenues from where we can garner business, which can, give stability to the company when the cyclicality part plays in. So I think to date, we've been able to do it at a reasonable level. And going forward, as we discussed, we want to increase the contribution from these two segments.
Just one last question, Mr. Agarwal. You had mentioned that a new segment could be the electric segment for you in terms of electric crane. How have you seen the acceptance currently in the market for that kind of a product? And do you see export margins to be higher than the domestic margins going forward, or currently what is the scenario for the same?
See, with respect to the electric crane, we had introduced this crane about more than a year back. Then certain government regulations with respect to CMVR and registrations were not in place. And these have been gazetted in November last year. So, and then obviously then we required CMVR approvals from ARAI. So there again, there is still some more clarity which ARAI requires. So I think we are still at least 2-3 months away from commercially being able to sell the electric machines in our country due to lack of regulations with respect to CEV, construction equipment vehicles. With respect to traction and acceptance or the excitement around it, I think all the bigger companies, whether in the infra and especially in the manufacturing space, are really bullish and gung-ho on that, and they're waiting for deliveries, to be very frank with you. It's just that going by the legality part of it, we are just playing safe so that when all the regulations are in place with respect to the government, then we should hit the market. So hopefully Q1 next year onward, we should be commercially able to start deliveries of these machines. We have delivered some machines already, but they are primarily focused on where the registrations are not required. So I think this should start to take shape in the next this thing. There was another part to your question. I missed that, please.
Export margins, is it higher than the domestic play, or is there nothing too much to it, or is there something I'm looking for?
They're definitely slightly better, but those machines are also slightly higher spec. So they're definitely slightly better than the domestic margins, yes.
Okay, Saurabh, we leave it at that. Thank you so much for joining us and shedding so much more light on the company as well as the prospects of the company as well. Thank you so much.
Yeah, thank you. Bye-bye.
Well, and on that note, that is all that we have on this edition of KYC, and a very interesting company that we've covered, but lots more lined up on the other side. Stay tuned to NDTV Profit.
गोल्ड प्लस के ग्लास ऐसे जो देश बनाए।
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims?
Hi, thanks so much for joining in. We're talking about Your Money Matters on NDTV Profit because we understand that your money matters. My name is Alex Matthew, and on this program we talk about your money, your personal finance, and how you should go about the strategy for investing, for expenses, so that you make the most bang for your buck. On today's program, and this is a special episode because we've invited one of you to speak to us and to get advice. In fact, joining me all the way from Sweden is Nikhil Trivedi, and we're going to be talking about Nikhil's most important financial goals. And I'm not obviously going to give Nikhil advice. Joining me to do that in studio is Rohin Pagdiwala, founder of Pagdiwala Investments. Thank you so much to the both of you for joining in. The idea, Nikhil, is that by answering your questions, Rohin will be addressing the questions that other people also have. So first, let's lay the context. Let's talk about a few of the details that you've shared with me in your snapshot. You want to plan for 10 years from now, at which point you want to move back to India from Sweden. You've got two children, one is 4 years old and one is a newborn. Congratulations.
Thank you.
What you want to know is how much you need to set aside for their education back in India. And the reason you're moving back to India is also to take care of your parents. So you need to set up a certain amount of corpus. And you've told me that you're in the IT industry and you want to safe-proof, or you want to future-proof yourself. You don't know what the scenario is going to be in 10 years. That's the most important thing, right? The last one, which is you don't know how the scenario is going to be and you want to set up a corpus. Can you talk me through these three goals?
Yes. So thanks, first of all, thanks Alex for having me on your show. So for first, after 10 years, what I see in a challenge in IT industries that in the way of AI, and after the certain age, it is very difficult to get a different switch, which is very easily in starting of a career. So I want to plan my corpus accordingly, that after 10 years I should have independently I can manage my services. So those are the first primary goal is my retirement planning. Second goal was related to my child education, and as my main objective after going back to the India was related to my parents. I can take care of my parents. So for that I have insurance and things are in place, but it is more like the emotional support, and over the time the corpus which I have made, it will help me to take care of my parents.
You've shared a financial snapshot as well. I'm going to take you, ensure that this is correct before I hand it over to Rohin so that we're all on the same page. You've said that your income is to the extent of 30,000 Swedish krona, which is multiplied by 8 essentially if we're talking about Indian rupees. And your expenses are about half of that, 15,000 Swedish krona. Your current corpus, and you've mentioned this in rupee terms, right? You've said 50 lakh rupees is what you've saved, correct?
Yes.
And your current investments per month is about 1 lakh. But if I understand correctly, if you convert into Indian rupees, your surplus is about 1.2, 1.5, right?
Yes.
1.2 to 1.
Correct. The major part of this savings, I'm also saving here a little bit just for a global diversification perspective.
Yeah.
And I want to invest in the USA and the local Swedish market.
Yeah. Okay, fantastic. Rohin, over to you.
Okay, thanks, Alex. Nikhil, nice to meet you. A few questions straight up, and actually the big one here. I've of course worked out some numbers for you, which will help you in take some help you take some decisions. But the first one that is the most important is, I'm assuming that, and you mentioned that you want to continue working till as long as you can, right? In the notes that you shared with us. So I've taken into account that when you come back 10 years later, you'll have a period of about 12 months without a job. So that's typically a good time for people to find a replacement job. After which, I'm assuming you will be able to you'll find a job, and then you will continue working till you're 60 years old. So that's a key input that I've taken into the plans that I've made for you. Otherwise, I understand that the top 3 priorities, the top 3 goals for you are obviously retirement for yourself and your partner, kids' education, and here I've taken into account both postgraduate and undergrad education. So is my understanding correct so far?
Yes, that is correct. And I have also calculated all those parameters, and then I come to the fire number of 6 crore. But as I'm not, I have a more detailed understanding in finances. So if you can just enlighten whether it is correct number or if I need to improve on these calculations.
See, let's not worry about the fire number right now, because like you mentioned, you have a desire to continue working. So I've got some numbers for you, and I'm going to start by sort of defining them.
Before you do that, for everybody that's not come across FIRE, which is essentially financial independence and retire early. So since we're talking in the context of Nikhil moving back to India in 10 years' time, assuming that at that stage he decides to not work, is he going to be able to, with the corporates that he's going to accumulate over the next 10 years, achieve that? And his thinking is 6 crore, and Rohan is saying that he shouldn't worry about that. This is context. Go ahead, Rohan.
Yeah. Just to also add to what Alex is saying here, Nikhil, is that I've taken into account that you're going to work till 60, right? So the fire number, in case you decide to leave earlier, is something that we have to maybe do a second round of discussion on. Currently, 3 goals that I've sort of made plans for. First is your retirement, which is at the age of 60. Now, for that, the future value, and these numbers will sound very, very large in the beginning, but don't be afraid of them. The number that I have is about 14.25 crores. Now, this assumes that your expenses remain similar to what they are and will grow at the rate of inflation. So the expenses I've taken into account are 140,000 a month, which is pretty comfortable for a standard of living in Ahmedabad, which is where you. It's
actually very high.
Which is very high, but I like to be a little more conservative in the planning, at least at the planning stage, right? So 140,000 a month, growing at 6% inflation, is the expenses that we're assuming here, for which you need about 14.25 crores at the end of when you hit age 60, right? That's goal number 1. Now, what do you need to do for this? You need to have about 54,000 rupees of SIPs going on, which you're already doing, right? So it's not so far out of reach, right? Now, goal number 2, you mentioned that when you come back, you may or may not have a job, or you may struggle to find a job for a while. So like I mentioned earlier, taking into account that for 12 months, you will not have a job. And therefore, for 12 months expenses or a year's expenses are sort of kept aside, for which, again, you need to have about 30 lakh rupees at that point of time, which is 10 years later. The SIP that you need to account for that is about 15,500 rupees. Right. Again, inflation here is considered as 6%.
Okay.
Nikhil, any questions so far, or should I proceed?
So let's discuss those two, right? Nikhil, first of all, we're talking about 1.4 lakhs current expenses in Ahmedabad, right? That's right, what you've assumed.
Right. Yes.
So, Nikhil, you're based in Ahmedabad in India?
Yeah, means my parents are staying there, and after I move back to, I want to reside in Ahmedabad.
Okay. And the other clarification that I had for you is, will you be staying in your own home in Ahmedabad, or will you be having to buy a property when you move back?
I have my own home, and means I have paid all those EMIs, so it is completely debt free.
Okay.
property.
So then from that perspective, Rohin, allow me to clarify on your behalf. Of course, you can also ask questions. Nikhil, please go ahead. But what struck me right now is that 1.4 lakhs might be a little high only because he's got his own property, and the standard of living, of course, it's higher than certain other cities, of course, but it's not like Mumbai, where you're talking about a family of 4 with 2 small children. It may not necessarily go to 1.4. So are we overestimating too much is the question that I have.
Maybe you're right. But in my experience and of course the clients' data that I see day in, day out, large chunk of them are from Mumbai. A family of 4 expenses without EMI is typically 160, 170 in Mumbai, 160,000, 170,000 a month in Mumbai. Of course, depends on each one's standard of living. So I think, like I said, 140s per month is an overestimate, but I would rather it be conservative. So there is a little buffer if things go wrong, right? Because there are several assumptions that we typically make in financial planning. You're assuming 12% return on equity, on equity investments. You're assuming 6% return on bond investments. You're assuming 6% inflation. Yeah. Any of these change a little bit, right? Sure. Then you can go wrong.
So Nikhil, then I want to ask you, does that sound the number, and what was the total corpus that we arrived at the age of 60? What do you need?
14.25 crores.
Does 14.25 crores sound like a very unachievable number, or do you think that it's par for the course?
Yeah, it is fine. Means it is achievable. The matter what I am worried that the inflation which we are calculating, it is for a regular. But when I talk back with my friends who moved to the India, they say that education is way costly and it is increasing more than 6%. So how can I tackle that?
I will come to that, Nikhil.
So
I will come to that.
Goal that we've not talked about, which is the third goal.
So we've so far covered 2 of your 3 big goals, right? Which is retirement and emergency funds, right? For which collectively you need an SIPs of about 70,000 a month. I think that should be manageable for you. Now you have 2 kids. Of course, they're very young, so education, the goals for education are far away, but I'm going to cover those as well now. And here the inflation is assumed as 10%, right? Education inflation is roughly 10% in India. It's higher than developed markets, but even in developed markets, education inflation is higher than their local inflation, their regular inflation. So 10% is the number that I've taken into my calculations. Now the older son's undergrad education, right, which is the first thing that will come up, will happen. I've assumed rather that they'll do this when they're 18 years old, so that is in 2039. The money that you'll need at that point of time is about 1.76 crores.
Wow.
Okay. Now the assumption here is that an undergrad course is a 4-year course, and it's 10 lakhs per year as fees. Right now, this could vary a lot from the kind of course that your son eventually picks, and neither will you know this nor will I be able to estimate it. But 10 lakhs is again a fairly conservative number, I'd say, slightly on the higher side. There will be several courses, especially if they're government funded, which will be cheaper. But there will be several courses which will be higher as well. So 10 lakhs, in my experience, a good number to work with. 1.76 crores, for which you need a small SIP of 6,000 rupees. That's it.
Are you serious?
Yes.
And what is the rate of return that you're estimating?
12%.
12%. You're saying equity investments.
So in all my workings, I've assumed an 80-20 mix.
Okay.
Except for the emergency fund corpus, which is a 50-50 mix. 80 being 80% equity, 20% bonds. And in 80% equity, you're assuming 12% return. On 20% bonds, you're assuming 6% return.
So, Nikhil, does that sound odd to you? 6,000 rupee SIP right now, and would you be stepping that up, Rohin?
No, the SIP amount doesn't change.
Okay.
But this is assuming he can start. See, we'll come to this. I think my suggestion would be go through the whole picture.
Sure, please.
And then,
go ahead.
Nikhil, maybe you can ask some questions as well.
Please.
Now we spoke of the older son, right? Okay. Sorry, Alex. I'm going to clarify here.
Okay.
We've accounted for 29 lakhs of his existing 50 lakhs already reserved for this goal. Sorry, okay. I should have mentioned that in the first case. So that obviously makes the SIP amount required in the future a lot lower, right? Similarly, younger son's undergraduate education, year is 2042. Amount required will be 2.35 crores, which is slightly further, more than the 1.76 because it's further away, right? The goal is further away. 10% inflation. We've already put 9 lakhs away for that from the 50 lakh corpus, and SIP requires about 24,000. Older sons, post-grad education. Now, post-grad education, the assumption is the tuition fees are 20 lakhs a year, 2-year course in India, right? Requirement is 2.34 crores, and the amount that you require from an SIP perspective is 34,000, sorry.
34,000 from now?
34,000 from now. And younger sons post-grad education, 3.11 crores in 2046. SIP amount is 31,000. So all of these put together, the key point that Nikhil you should note is that you will need to save about 1.6, 1.7 lakhs a month, which I understand will be maybe beyond your capacity at this point. You're already doing you're doing some 20,000 in Sweden. But if you can squeeze out a little bit more, 20, 30,000 from somewhere, you keep a watch on your expenses, then maybe you can achieve this goal, all of these goals. Plus, of course, your income will increase over time. So as your income increases, the expectation is that you keep increasing your SIP amounts.
Okay. Nikhil, any questions?
So when Rohin mentioned that 6,000, so is it for one child and for another child, what was the exact number?
So I'll read out these numbers again, right? Older son, undergrad education, 6,000 rupees, because you've already saved some money towards it, right? And what typically, the best practice here from a planning perspective is that the corpus you save, you assign it to the nearest goal that you have, right? Nearest large goal that you have. In this case, your older son's undergrad education will be the first thing that comes up. So I put a chunk of the money, 29 lakhs out of the 50 lakhs that you've already got towards his education, which is why his SIP amount sounds very small. 6,000 rupees is a small number, right? Yes. Older son post-grad, 34,000 SIP. Okay. Right. Younger son undergrad, 24,000 SIP. Younger son post-grad, 31,000 SIP. Collectively, 164,000 for all goals put together.
Including your retirement corpus
and your emergency fund.
Thank you. I got a clear picture now.
So now do you want to also talk about, you've shared a breakup, Nikhil, of what you're doing right now in terms of investments, and you've got a large and mid cap fund, you've got a mid cap fund, you've got a flexi cap fund, a small cap fund, actually another flexi cap fund, Kotak, and you've got a Mirai asset focused fund. So what is the thinking that you had behind this? Did you just look it up online?
No, I took help from a financial advisor.
Okay.
And
okay, I got that. So, Rohin, you want to come in just to see if he's doing the right thing, or should he make different allocations?
Yeah, so I think, Nikhil, my guidance to you would be first look at it top down, right? I think the first thing that you should work on is the amount of money that you're able to save, right? Your savings rate. And the common mistake that a lot of investors make is they're worried about which schemes they've chosen, how they've invested, whether it's in regular plans, direct plans. See, those are minor. I mean, in the long run, they have significant impact, but they are, in the overall scheme of things, they have a smaller weightage. The first thing that you should solve for is, can you save more, right? And which is what I'm telling you, that 1 lakh is not enough for the aspiration that you have. So you need to figure out ways of increasing that savings rate. That's number one. Second is your asset allocation and your risk taking. From whatever you've sent me so far, you're almost all in equity, in either through stocks or through funds, which is great from a risk-taking perspective. But I would recommend maybe a mix of equity versus bonds. So typically, given you're 33 years old and you're willing to be a little more aggressive, I think 80-20 is probably a good mix to have.
Which is not what it is right now, considering that
it is not what it is right now.
25 lakhs in an emergency fund or in the liquid fund, right? Nikhil, this is in mutual fund liquid funds, right?
Yes, mutual fund liquid fund I have invested. And the major portion means what I'm doing right now, that from wherever I get a salary, I transfer it to the liquid fund, and from there I do the STPs.
Okay.
So my assumption on that is that the STP will get deployed in equity over time. So I've taken all those 25 lakhs as equity allocation today. So anyways, in the overall scheme of things, doesn't matter. I think when you build a portfolio, Nikhil, keep in mind that you should have something in bonds, maybe a little bit in gold as well. 80-20 or 18-15-5 is something that maybe you can work with. So 80% is equity, 15% is in fixed income, and 5% is in gold.
Yes.
Go ahead, Nikhil.
Yeah, so recently I come across one article and few influencer videos where they are mentioning that what instead of bond we invest in a gold, because recently gold have given a very good return over the time. So is it a thing that equity plus gold can we do?
I mean, can you do it? Yes, of course you can do it operationally. But what I sense, Nikhil, is that you're very influenced, you're kind of influenced by a lot of what people say around you, and you shouldn't be, you really shouldn't be constantly listening to everything that's been said to you, right, from your friends or from your family. You must, if you're abroad, my suggestion would be to find a advisor, planner, distributor over here who can help you and who's probably more knowledgeable than what you are, right? I think gold works best in times of crisis. While it's done really well in the past, that's because there's been a couple of wars, the Israel-Hamas war, the Ukraine-Russia war, oil prices have gone up, so gold will naturally do well, dollar's gone up, again gold will do well. So there are some kinds of crises, that's when gold will do well, but I don't think more than 5-10% in the portfolio is warranted.
Okay, so having said that, we've broadly discussed certain things that you need to do in terms of the allocation, right? Is it possible for you to move it up? And we've discussed, and I've asked for information on this. Nikhil, you've shared that your wife is currently learning Swedish and she might actually be able to practice as a dentist. If she supplements your income, you might actually be able to do this, right?
Yes, I can do this. So that is our goal, that if both person can start working towards this goal, then we can achieve this easily.
Okay, so we've got another couple of minutes. If you have any last questions for Rohin, please do ask.
Yes, so there are momentum indexes. So is it right time that if I choose, because NSE have published those indexes and there are a backtested data, and if we compare over 20 years, it has significantly outperformed the broad-based indexes.
So again, Nikhil, a word of caution here, don't go by backtesting this data alone. What I'd suggest is if you want, and you mentioned you are very keen to do factor-based investing or smart beta investing, that should be a tactical allocation. So maybe 20% of your mutual fund portfolio can be in smart beta funds. Rest, I would suggest, especially in small and mid-cap, let it be active funds. Again, your portfolio is very heavy towards small and mid-cap. Don't do that. Primarily, a portfolio should have large cap. If you're doing smart beta, do multi-factor funds like a UTI Quant, which will let the fund manager decide which factor he's picking for you instead of you deciding.
Okay. Rohin, in your opinion at this juncture, what should Nikhil's allocation in terms of large, mid and small be?
I think given the valuation of mid and small, I mean, if I was building a portfolio today, I would have probably zero.
Small cap.
Small and mid, because of the way the markets are poised. But in the long term, I prefer to do 50-25 or 50-30-20. So 50 large cap, 30 mid cap, 20 small cap. That's typically what I'd like from a long term perspective.
Okay. Nikhil, I hope that this conversation has been insightful for you, at least in a directional sense. And I must point out that when you do take your decisions, it's best to consult a financial planner directly. This conversation is aimed at helping you get answers to some questions that you might have in the planning process. So you can take this and you can have conversations further. But thank you so much for joining me today and having this conversation with me.
Thank you so much, Alex and Rohin, for guidance and support. I look forward to follow this plan.
Absolutely.
I will consult.
Absolutely. Pleasure. Thank you so much. Thank you so much, Nikhil, for joining in. We have one last a conversation point, of course, and this would necessarily have to be a quick answer because this is being discussed, and I take from the point that you made on mid cap and small cap about SIPs in mid cap and small cap, and it's been a gravitational pull almost for retail investors to get into these categories because of the way that they performed over the last 2 years. In your opinion, is this now the best time? It's a little late, but should you reallocate if you are tilted too heavily?
Yes, 100% you should reallocate, but not necessarily from the SIPs. I think there may be a case for booking, and again, it varies based on the portfolio, how much of a small cap and mid cap the investor has in his portfolio. But if it's a large number, then yes, book profits, maybe move to flexi cap funds. I think the SIPs, again, depending on the allocation, could continue.
Fantastic. Thank you so much for joining me today, Rohin.
Thank you,
Absolute
Alex.
pleasure. And look, this conversation is aimed at helping you think of the way that you should save for the future and how to allocate towards goals. If you would like to speak to us, then you can write to us on the number that should be on your screen and let us know whether you'd want to discuss your financial goals. We'd be happy to get in touch with you. Do stay tuned. Lots more coming up on NDTV Profit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में ही ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Benchmarks kickstart the week with losses as fears of Trump's tariff loom on the market. Realty cracks, metals melt, and pharma weakens the most. Broader markets see sharper cuts, underperform benchmarks. The Indian rupee hits a historic low at 87.48 as an after effect of Trump's tariff threats becomes the worst performing currency in Asia region for the year. 12 months later, engines from GE will be ready for a light combat aircraft Tejas made by HAL. Up to 24 aircraft would be delivered in the next fiscal. That's the big news coming in from the Aero India show that has begun in Bengaluru today. State-run oil companies are likely to bid for LNG supply from the US. Oil Minister Hardeep Singh Puri hints at potential agreements being signed during the Prime Minister's visit to the US. $100 billion of investment, 1 million direct jobs and 4 to 5 million indirect jobs. That's on the table under the European Free Trade Agreement, says Union Commerce and Industry Minister Piyush Goyal. Will the Prime Minister ensure that US President Donald Trump spares India in his tariff spree? Trade talks are on the cards on February 12th, but the Prime Minister meets French President Emmanuel Macron before that. Hello and welcome. Good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will bring you the latest on markets as well as national and international news. To begin with, US President Donald Trump announced that the United States will impose 25% tariffs on all steel and aluminum imports. These tariffs are expected to be on top of existing duties. Trump did not clarify who would be targeted with reciprocal tariffs, but he stressed US would match tariff rates levied by other countries. Listen in.
I'll be announcing probably Tuesday or Wednesday at a news conference reciprocal tariffs, and very simply, it's if they charge us, we charge them. That's all.
When does it go into effect?
Almost immediately, but I'll be announcing the details of it, highly detailed, and it'll be great for everybody, including the other countries. But if they are charging us 130% and we're charging them nothing, it's not going to stay that way.
It's not every country?
Every country will be reciprocal. Every
President, can you confirm
it won't affect everybody because there's somewhere we have similar tariffs. But the ones that are taking advantage of the United States, we're going to have it's reciprocity, it's reciprocal. We're going to have a reciprocal tariff. But we'll have a news conference Tuesday or Wednesday.
Just on the steel question, just so I understand.
We'll also be announcing steel tariffs on Monday.
In fact, the Indian benchmarks feel the heat. They end lower for the fourth session in a row as US President Donald Trump escalated trade tensions. The announcement also sent the rupee to a record low of 88 intraday. All sectors closed in red with metal, realty and media falling as much as 3%. Harsh is joining us with a complete market roundup of the day.
Well, a weak global setup, first off, led to markets opening weak and in fact a sustained weakness starting to creep through as the day went by. The Nifty 50 though was down a little less than 1% and therefore not too much damage done on the index. But when you're looking at the breadth was extremely weak. We just had about 40 declines to just about 10 advances, and that's where really a day like this really stood out. So one, we had weak global cues. Two, we had an extremely weak breadth in terms of the market. Three, you had banks outperform the Nifty 50 as well as the broader markets. The broader markets saw much more pain. You saw the Nifty mid cap down over 2%, the Nifty small cap index also down over 2.25%, closing just off the lows of the day but there was very little left in terms of the bounce back from the lows, and therefore how do we perform tomorrow will come into the picture really quickly. What did well? Banks were relative outperformers. None of the sectoral indices were in the green. Banks were relative outperformers in that sense, and private bank in particular. The top gainer on the Nifty 2 was Kotak, and that stock was up 1.7%. Also, you saw what was probably the top loser, broader end, real estate. Nifty Realty was down over 3%. What was also under pressure due to the entire tariff play and everything around tariffs that's happening. You had the Nifty Metal, which is down over 2.5%. So some metal stocks really pressured in trade. Last off, some big gainers, losers on the back of news. Some BSE 500 top gainers, top losers on your screen for perspective.
Right, Harsh. Thank you for marking the, wrapping the market for us today. Well, the markets are not in a bull run, but they are not exactly falling apart either. There is no reason to think that investors will not make any returns. This is what Samir Arora, the founder and fund manager of Helios Capital, had to say during a conversation with NDTV Profit. Listen into that conversation.
I think that Indian market is not some bull run, best time ever, which I've been saying for 2-3 years. But the public was overselling India to say this is the golden decade and this is Amrit Kal. That is not needed. The Indian market generally has given returns in line with its earnings. If you see broadly any period, that means you do 3-year, 1 year, 10-year, 15-year, broadly the earnings growth has been 12-15%, and the market growth, that is in rupee terms, has been 12-15%. Right now, what has happened is that because the FIs have sold a lot in the last 4-5 months, that has led to, of course, their selling. But secondary, it has led to this liquidity pull out, you can say whatever, because the government or the RBI had to sell those dollars to them and basically took away the liquidity. So that is being addressed. So big picture, we are not saying it's some big bull run, but there is no reason to think that this market or the world is falling apart. You'll make your same return plus minus a few percent going forward. The last 3-year returns are below average for Nifty and the 500. And 500 is more or less in line. Nifty is below average. Separately, small caps are high and okay, but the problem with small caps is there are some, 500 of them. So everybody says, I have 3 of them, which I like, and I don't care in aggregate what the small cap valuations are. But in the very short term, they will also be influenced by how the aggregate things are doing.
India's primary market will be buzzing in the second week of February, with 9 public issues scheduled to open for subscription, mostly in the SME space. Quality Power Electrical Equipments, Hexaway Technologies and Ajax Engineering will launch their IPOs on the main board space. Concreting equipment player Ajax Engineering's 1,269 crore IPO is scheduled to open on February 10th. The price band for this IPO has been set in the average range of 600 rupees per share. On the other hand, Hexaway Technologies has set a price band of an average price of 700 rupees per share for the IPO that will open on February 12th. External commercial borrowings by Indian corporations touched a 4-year high in December. This was due to big-ticket issuances by Shriram Finance, REC, Reliance Industries and Tata Capital. My colleague Shubhana Sheikh is joining us with further details on the same. Shubhana, what are you picking up on this matter?
Hi. So yes, ECB borrowings and dollar bond issuances have hit over a near 4-year high in December. Now this was largely because a lot of NBFCs such as Shriram Finance, IFL Finance, and even corporates for that matter like REC, Interglobe Aviation, Reliance Industries had heavily tapped the offshore debt market to meet their fundraising needs. Now these ECB borrowings, these companies raised over $9 billion in December, which was sharply higher than over $5 billion that they would have raised in the same period a year ago. Now the last time that this number was so high was in March 2021, when NBFCs and other corporates had raised about $9.23 billion through this route. Now, it is also important to understand that over $3 billion of this fundraising has actually come from, financial services and a private corporate. Now, Shriram Finance, has been the biggest, has been one of the major issuer in this market. They have tapped the market 6 times in December and raised, and they've solely raised over $1 billion. Now, this has largely come because the Reserve Bank of India has actually been nudging the NBFC sector to actually, cut down their dependence on bank borrowing and diversify their funding needs. They had also raised risk weights on bank lending to NBFCs back in November 2023. So this current credit slowdown and the RBI's nudge to reduce bank borrowing and diversify NBFC fundraising needs, and also the tight liquidity conditions in the market has driven ECB borrowing to this high. What market participants are also telling us that merchant bankers believe that other corporates such as PNB Housing Finance, Cholamandalam and Shriram Finance will continue to tap the ECB bond market for the rest of the financial year and the next financial year.
Understood. Thank you for bringing us that report, Subhana. Moving on, the National Company Law Tribunal directs BCCI's insolvency withdrawal application to be submitted to Baiju's creditors committee. NCLT has also directed reinstatement of Baiju's lenders, Glass Trust LLC and Aditya Birla Finance Limited, to the committee of creditors. Varun is joining us with details on this. Varun, could you please explain the story to us?
Hello.
Yes, Varun, could you please explain what's happening here? Okay. No issues. We'll move to the next story. Defence Minister Rajnath Singh inaugurates a stellar lineup at Aero India 2025 event at the Yelahanka Air Force Station, drawing a parallel with the ongoing Mahakumbh. Defence Minister Rajnath Singh said that while the religious gathering symbolizes faith and devotion, Aero India represents innovation and research in defence and aerospace. The event aims to feature high-speed aerial maneuvers, advanced aircraft displays and strategic business discussions. On to some exclusive voices now. At the sidelines of Aero India 2025 event, my colleague Sajjit Manghat caught up with Godrej and Boyce's Manik, I can't pronounce his surname, and Optimize Electrotech's Sandeep Shah. Listen into a slice of that conversation.
So for Brokerage, our passion is engines. As you rightly said, we started manufacturing for ISRO way back in 1985. And since then, we have been working with ISRO for various engines. And India does need the next generation gas turbine engine. And we won this order from DRDO GTRE about 2 years back. And since then, we have been manufacturing and developing this particular engine. We have shipped one set of engine to GTRE, and what you see over here is the second set which is being displayed over here. So we are on an advanced stage. A lot of work from manufacturing of toolings to understanding the process, metallurgy, welding, the ovality of all the various casings, etc. So a lot of learnings have come through, and I think we are well ready to deliver further engines to the Indian programs.
You know, one of the things which has been in discussion here is about the delay in Tejas. I know you don't do much for Tejas except for some of the actuators which are used here, right?
Yeah, for Tejas we have developed along with ADA the flight control actuators. Yeah. So the LESA and the ABC are now flying. And what you see over is the L1 actuator. So this will be under test very soon. Also, we have developed various lubrication pumps. The nose wheel steering is our own design. So this is a part of the landing gear where after the aircraft lands, it kind of maneuvers onto the tarmac and takes it to the parking. So that's the nose wheel steering. That's our own design. So we have ventured into the build to spec. Earlier, up to 2021-22, we were a build to print company. With this, we have ventured into build to spec. We are also working on ejector release units, again for various programs. The uplocks which take care of the landing gear when they lock in or to be released. So various hydraulic and electromechanical actuators whether they are for the flight or otherwise, is something what we are focusing on. That's where we are developing our design team. We just launched our design team now, and our design head will be here in a short while. So a lot of new things are happening from build to print to build to spec, but focus remains on the engine.
Optimized Electrotech, we have been building AI-based imaging systems. These have got edge analytics at the equipment level itself. We have been winners of IDEX multiple times, as well as with Aditi now. And with all of that, we have been building different types of products, but the overall structure remains the same. We build optics to AI, everything on our own. For example, this is one of our products. This is a micro missile seeker. This is a micro missile. This is useful for tactical warfare. This is used in drones. This is used in drones. So the drones would normally carry the missile. That is how it works. So the micro missile is useful for tactical surveillance, and then the moment it has seen and you have allocated what the target is, what we have built is this seeker. The seeker allows the missile to make sure that only the person or the object of interest is followed, tracked, and then eliminated. So for example, here you can see that the seeker would have different targets that are given. Those targets can be given by the drone and said, this is the person of interest. Only that person may be followed. This is one of our products. Similarly, we have other products that are for different purposes, like this one here. So this is for a grenade launcher. In this, we have been able to do precision elimination of targets at distances. So in a normal case, a grenade launcher requires you to have a lot of computations being done, because grenade travels in a projectile motion, unlike a bullet which travels in a straight line motion. So because it's a projectile, it's important that the corrections are done for wind, temperature, velocity of the, muzzle velocity, everything before you fire the grenade. And thereafter you need to make sure again that it works in day and night. So this particular equipment can work in day and night and can do precision elimination of targets.
The India Energy Week kicks off today. State-run oil companies are likely to bid for LNG supply from the US Oil Minister. Hardeep Singh Puri hints at potential agreements being signed during the Prime Minister's visit to the US amid more. Listen in.
You know, we've had 9th round of OALP, open acreage licensing policy. We've had 9 rounds of bidding. We're hoping to do the 10th round during this thing. So, what does it add up to? It adds up to, yes, you have to do E&P, and we are securing some recent successes. We've got some navigation to do in the Andaman Sea. We need some help from other global majors in terms of seismic survey. We are signing a couple of MOUs today also, immediately after this. We were supposed to actually achieve 6 years from now. So we are not doing it 5 years in advance, we're doing it 6 years in advance. Then green hydrogen, you're talking about a bus, but it's not the bus. The IOCL has actually issued a big tender in which there are a number of participants. So, first somebody has to come up with a policy, then they have to design it, then he has to issue a tender, then people participate. That's how the ecosystem builds.
Union Minister of Commerce and Industry Piyush Goyal, in an event with European Free Trade Association, launched dedicated platform EFTA Desk to promote trade, investment and business facilitation between the two regions. He even mentioned that the relation will boost investments and create jobs in India. Listen in.
Joining us, the four countries of the European Free Trade Area, EFTA, joining us to take one important step forward in our agreement to promote trade and investment between the EFTA countries and India. As you are all aware, we had entered into a Trade and Economic Partnership Agreement, TIPA, last year. Subsequent to that, in all the four countries, significant steps have been taken to ratify the TIPA. There's a lot of positivity in all four countries, and we hope to operationalize the TIPA in the later part of this year. This agreement was the first of its kind in the economic history of global trade and investment. This is the first agreement where, within the contours of a trade partnership or a trade agreement, we have also introduced the element of $100 billion of foreign direct investment. This does not include foreign institutional investors or FII investment, which, for example, the Norway sovereign fund does in India. This is foreign direct investment, catalyzing manufacturing, innovation, services, industry, areas which create large number of jobs. With this $100 billion foreign direct investment, I personally believe we could be catalyzing investment, overall investment of maybe $400 or $500 billion in the Indian ecosystem. Similarly, the commitment includes 1 million job directly being created, which again will translate to 5 or 6 million jobs directly and indirectly.
President Draupadi Murmu visits the Mahakumbh Mela in Prayagraj and takes a holy dip at the Sangam. She was accompanied by Uttar Pradesh Chief Minister Yogi Adityanath. The President also performed puja and darshan at Akshayvat and Hanuman Mandir. She later visited the Digital Kumbh Anubhav Center. She is only the second Indian president to take a dip in the Sangam after Rajendra Prasad. Her visit comes over a week after a stampede killed about 30 devotees during the auspicious occasion of Mauni Amavasya. Onto the political front, the BJP has not only stormed to power in Delhi, but with a win of 48 out of 70 seats and reducing the AAP to 22. This is in stark comparison to the 2020 elections, which saw AAP's resounding victory with 62 seats. On the big question today at 6 p.m, we ask, will Delhi finally get what it deserves? Here's a snippet of the discussion.
Over the years in Delhi, the middle class has been playing a role in the election of the governments. Even the Aam Aadmi Party, though it was getting significant support from the poor and lower socioeconomic class, they were providing it a base vote share. But it was the middle class who was switching from the BJP to the Aam Aadmi Party in Vidhan Sabha elections, perhaps lured by its anti-corruption plank, its public participation online or a transparent funding, etc., etc. That is the middle class which has stayed back with the BJP largely in this election. And why it has happened? See, voters have become transactional. What BJP has done smartly this time is that while continuing or while promising that the poor and the lower socioeconomic class will receive benefits as they are receiving under the AAP government with the continuation of the schemes, the budget announcement of this tax break, because that is helping almost everybody. I mean, 90% of the populace of India earns less than or shows an income of less than 12 lakh when they file returns. So that was a tangible benefit also given to the middle class to manage their discontent because they were reeling under high inflation, high taxes, etc. So this was smartly done. See, the middle class voters have shifted towards the Aam Aadmi Party largely due to corruption and this tax break. But what is missed in this entire discussion or entire analysis of the Aam Aadmi Party losing is that the gap is only 3.5. And the strategic blunder which the Aam Aadmi Party has done is that they have not transferred any single installment of the Mahila Samman Yojana to the women beneficiaries. If they would have transferred 1 to 2 installments, they had already allocated for the this amount in the budget of last year. If they would have done or transferred even 1 to 2 installments, the election results would have been starkly different.
Prime Minister Modi has left for the US. His first meeting with US President Donald Trump in his second tenure is scheduled to take place on the 12th of February. The big question is whether Modi will be able to stop Trump from imposing tariffs on India. Modi issued a statement ahead of his taking the official flight first to France and then to the US. In this, he said, although this will be our first meeting following his historic electoral victory and inauguration in January, I have a very warm recollection of working together in his first term. He also said that discussions would take place for agreements in the partnership in technology, trade, defense, energy and supply chain resilience. At France, he will co-chair the AI Action Summit, which is a gathering of the world leaders and global tech CEOs. He stated that he would also explore the 2047 Horizon roadmap for India-France strategic partnership with President Macron. In another cost-cutting measure, US President Donald Trump has directed the US Treasury Secretary to stop minting new pennies. He announced that he has directed the Treasury Secretary to halt production of the 1-cent coin featuring Abraham Lincoln as part of a broader effort to cut waste in the national budget. For far too long, the United States has minted pennies which literally cost US more than 2 cents. He said in a Truth Social post, "This is so wasteful." Beer biceps Ranveer Ahlabadia is in controversy for a vulgar comment that he made on Samir Arora's India's Got Talent show. The YouTuber is being slammed online for posting a controversial question to one of the contestants regarding sexual activity between parents. The video went viral and triggered comments from numerous netizens. In fact, even Chief Minister Devendra Fadnavis said anyone who crosses limits of decency will face action. Following the outage, Ranveer took to his social media apologizing for his comment. Well, that's all the time we had on this edition of Profit 360, but do stay tuned to NDTV Profit for more news and updates.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में ही ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
All they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate.
Welcome, you're watching The Big Question with me, Tamanna Inamdar. If there was any doubt about the enduring dominance of the BJP politically, the people of Delhi have put an end to it. The results of the Delhi Assembly elections for 70 seats is astounding for several reasons. First, the obvious. It's a comeback for the BJP after 27 years, a win for the BJP despite no clear chief ministerial candidate versus Arvind Kejriwal, and the Aam Aadmi Party being rejected so profoundly that Arvind Kejriwal lost his own seat. Now, while political experts will interpret the results and the focus will now shift possibly to who will be the next Chief Minister of Delhi, it's important to look at one more aspect. Delhi, the national capital, has been suffering with worsening air quality each passing year, garbage piling up everywhere, and quality of life in general deteriorating. The Delhi vote is not just one for political stability, and yes, it possibly is echoing the double engine ki sarkar hope, but it's also a plea for change. BJP has not only stormed to power in Delhi with a win of 48 out of 70 seats, but they have now been given the task to fix the national capital, which is why you saw the Aam Aadmi Party reducing to 22 seats. This is in stark comparison to the 2020 result, which saw Aam Aadmi Party's victory with 62 seats and the BJP with just 8.
दिल्ली के लोगों का ये प्यार, ये विश्वास हम सभी पर एक कर्ज है. इसे अब दिल्ली की डबल इंजन सरकार, दिल्ली का डबल तेजी से विकास करके चुकाएगी।
नमस्कार। आज दिल्ली के चुनाव के नतीजे आए हैं और जनता का जो भी निर्णय है, जनता का जो भी फैसला है, उसे हम पूरी विनम्रता के साथ स्वीकार करते हैं। जनता का निर्णय सर माथे पर। मैं भारतीय जनता पार्टी को इस जीत के लिए बहुत बहुत बधाई देता हूं और मैं उम्मीद करता हूं कि जिस उम्मीद के साथ और जिस आशा के साथ लोगों ने उनको बहुमत दिया है, वो उन सभी उम्मीदों और आशाओं पे पूरा उतरेंगे। हमने पिछले 10 साल में जनता ने जो मौका दिया हमें, उन 10 सालों में हमने बहुत सारे काम किए। शिक्षा के क्षेत्र में, स्वास्थ्य के क्षेत्र में, पानी के क्षेत्र में, बिजली के क्षेत्र में और भी अलग अलग तरीके से लोगों को राहत पहुंचाने की कोशिश की उनकी ज़िंदगी में।
Now, in an effort to counter Aam Aadmi Party's campaigns, the BJP has pulled out all stops to woo voters by also announcing a host of freebies ranging from free scooters for the youth to financial assistance for the marriage of daughters from poor families, among other things. They've also promised to continue all schemes that were initiated by the Aam Aadmi Party, including that of free water and electricity. The BJP in their manifesto has also promised a cleaner and more developed Delhi. But can the state's finances now sustain the promises made? And can Delhi follow the path that the voters have hoped for? Of course, a big question for the Aam Aadmi Party is where do they go from here? Punjab is the full state that they now have. Will they now continue their dominance there? But the biggest question really is, will Delhi finally get what it deserves? To speak on this, I'm joined today by Aarti R. Jairat, senior political commentator, Amitabh Tiwari, political strategist, with us on the show. I'm speaking with Sandeep Shastri, national coordinator, Lokniti Network, and Yashwant Deshmukh, director and founding editor, See Voter. Welcome to all of you. Aarti, let me come to you first because we had a conversation before the elections, and I suppose there was the exit polls at least talked about the BJP being strong. Everyone must have had their guesstimate. Would it be safe to say that this kind of a result was not anticipated?
Well, so let's say before the exit polls, yes, I think there was still this expectation that Aam Aadmi Party would hold on to its core voters, which is, the poor, really, the poor and the minorities. But the indication that people wanted a change was there because, I've been covering Delhi elections for many, many years. And this was the first time in many years that I heard people actually mention the BJP as an alternative. Through Sheila Dikshit's time, it was always the Congress. And then when AAP exploded on the scene, then it was only AAP. That's all one heard. But this time, one actually heard people mention the BJP. So obviously, the BJP was emerging as an alternative for people who were quite disenchanted and disillusioned with what had happened to Delhi, particularly in the last 3 years, as the AAP engine started spluttering and its leaders went behind bars, and all these allegations started about corruption, Sheesh Mahal, liquor scam, and so on and so forth. So, and then of course the exit polls, I must say this time, got it right because they got the numbers almost spot on. So yes, and it's a huge victory for the BJP. And now AAP will have to go back to the drawing board and see whether it can survive this blow because it's a very new party and it does not have a dedicated cadre or a loyal support base. So whether it can actually recoup from this loss or not, we'll have to wait and see.
Okay, so that's the political side of it, or whether Aam Aadmi Party will recoup from its loss. What next for the BJP in Delhi? And Yashwant, what is the one clear message in your view coming out of this election?
Actually, there is not one. I mean, when you look into the overarching thing that, okay, there is a meticulous planning and the way BJP learns from its mistakes, that's the election management and the political management side. But what I feel that, the freebies and Labharti Yojanas, they are all said and done.
But at the end of the day, India is also witnessing a new caste group which is called middle class. It is emerging itself as a new group which thinks alike, regardless of caste or religious divisions in the society. And particularly in the urban areas, they do have some expectations from the civic life, because middle class has been asking for a really long time that we are the taxpayers. We are not really anti-poor. We are fine with the fact that government is giving and doing something for the poor. But at the end of the day, if we are being taxed, at least keep the inflation low. And if we are being taxed, at least give us a better place to live in. I mean, not a city where I cannot breathe the air is not breathable, the water is not potable, the roads are not drivable. You know, that's the minimum expectation.
Yashwant, you think this is a vote for living conditions? Is it a vote for some of those issues that, you know, we talk about in drawing rooms, but we're never sure it makes it to the political hustings?
Yes. Tamanna, we did in our post-poll survey actually ask the people who voted for Aam Aadmi Party why exactly they vote for Aam Aadmi Party even this time, and those who voted against Aam Aadmi Party, both the reasons. While on the for side, you know, those who voted for Aam Aadmi Party, you would be surprised to know that lesser number of people voted for free bijli and free pani. More number of people said the mohalla clinic and the schools than the free bijli pani. See, even the bottom of the pyramid does understand that beyond the freebies, there is an essence of governance over there. While on the other side, those who are really, really upset with the Aam Aadmi Party, I mean, keep aside that disillusioned part of the middle class which said that, you know, it is no more the same party which was a anti-corruption crusader and all that, and move aside the central budget and Nirmala Sitharaman and what Mr. Modi did. But the bigger number of the people who complained about the bad quality of water that is coming to the tap, the garbage piles that are everywhere littered, you know, the civic infrastructure crumbling down. People fondly remember Sheila Dikshit ji for a reason, that in under her 15 years of rule, Delhi did become a world-class city. And that tag in the last 10 years came crumbling down. At what cost? So while Arvind Kejriwal's preference or the priority of bottom of the pyramid was well appreciated by the votes over there, but a large part of Delhi was not appreciating that it is coming at the cost of the quality of life. Delhi has literally become unlivable. So I think these are the things which has propelled BJP to power. But then BJP has to actually provide solution. I'm telling this upfront. If the let's wait.
We'll come to the solution bit. Because then that's the crux of it, right? After such an astounding victory, you have one party at all levels. You have one party at completely all levels, and they can really fix things. They now have all levels of power. Sandeep Shastri, do you agree that this was a vote against the living conditions of Delhi and not as much as Sheesh Mahal, corruption, etc.?
Tamanna, we constantly make this point that when an election result comes out, somebody loses the election, and because somebody loses the election, very often somebody wins the election. And for me, this Delhi verdict is a conclusive verdict of not accepting or not responding to what a party had promised to do for 10 years. I think that was clearly this verdict. It was a verdict after 10 years of AAP being in power that there seemed to be some credibility deficit, both in terms of your promise and in terms of the leadership. And the benefit of this credibility deficit went in favor of the BJP because it was the main opposition at this point of time. So I think I would view this victory as a very clear statement of the voter that they were looking for the fulfillment of promises. And as Yashwant rightly said, it's not just about your economic safety net. I prefer not to use the word freebie. It's not just about the economic safety net. It is much more about certain fundamentals with regard to the quality of life, about cleanliness, about drinking water, about pollution. These were issues. It was about Yamuna River. And that's why the Prime Minister made this the second statement in his victory speech. So there were clear issues on which people had a high degree of dissatisfaction. And that dissatisfaction was expressed in terms of the verdict that you see. Yeah. But let's also remember, the Aam Aadmi Party managed to hold on to 1/3 of the seats. And that is because certain segments of the society, the poorer segments of the society, segments of it may have gone towards the BJP, but a large segment remained with the Aam Aadmi Party. What went away from the Aam Aadmi Party, I think, was the middle class, which Yashwant made reference to. The middle class which had certain aspirations, and those aspirations were not, it does not seem to have been met in the last
Okay, so this is an interesting angle. This is an interesting aspect. Was there a class divide in the vote that we saw as well? Amitabh Tiwari, come in on this. We're talking about whether this was a vote for a better Delhi. And then will Delhi finally get what it deserves?
See, essentially, if you see the CSDS post-poll data itself, the lead of the Aam Aadmi Party amongst the poor has also reduced. It used to be 28% in 2020. This has reduced to just 8%, which means that the issues of cleanliness, which was being highlighted by Yashwantji and Sandeep sir, even amongst the core vote bloc, the Aam Aadmi Party, though is ahead of the BJP or was ahead of the BJP, it lost support because of basic civic issues. Then amongst the middle class also, it used to have a lead of 14%. That has swung towards the BJP. The BJP now has a lead of 3% as per CSTS. And amongst the rich, where the BJP was leading by just 1%, and amongst the rich is key here because air pollution, Yamuna cleaning, etc., all these issues normally would appeal to these kind of voters. The lead has grown from just 1% to 31%. So this is the class divide. But if you see the issues, people were very clear about the issues. And if I extrapolate the data of CSDS, on points like unemployment and price rise, the voters have blamed the BJP. A higher number of people have supported Aam Aadmi Party, for whom unemployment and price rise were the basic issues. But for people whom corruption and lack of development were the key issues, there is a significant lead in favor of the BJP. And in fact, corruption perhaps is adding to a lead of 4% vote share to the BJP, likely to appeal more towards the middle class. And also the relative non-performance of the Aam Aadmi Party in Kejriwal's second term is also contributing almost 3% vote share lead to the BJP. So there's a clear issue divide also in terms of issues. People who are blaming or people who are citing unemployment and price rise clearly see it is the failure of the central government, and corruption and lack of development as failures of the state government, which is the Aam Aadmi Party.
Okay, so on balance, the voter has made her choice clear. And Aarti, Jairat, I want to come to you because this was a conversation we were having before the election. This was a question I asked you as someone who's from the city, that why is air pollution, for example, not a bigger issue? And you talked about other problems such as garbage, etc., piling up. Is this now a real chance you think that the people of Delhi have for some solutions over here? Because now there is no excuse left, right? Whether it's at the municipal level or it's at the central level or at any level.
Well, technically the municipality is still in the hands of Aam Aadmi Party, but of course by a bare majority. So technically we still have two different parties, sort of in this three-layered structure of governance that we have in Delhi. We have two parties, in power. So we'll have to see what happens in the municipal corporation. Remember, one of the reasons why Aam Aadmi Party won the municipal elections 2 years ago was because the BJP had headed the municipal corporation for 15 years. And the municipal corporation, which actually handles all these civic problems like garbage and sort of state of the roads and water and so on, the municipal corporation had done absolutely nothing. I mean, Delhi was still looking quite shabby, although it's become even shabbier now, but it was still looking quite shabby. I just want to say one thing, that when Aam Aadmi Party rose, it rose on the back of support from the middle class. Delhi, at the end of the day, is a middle class city, and I use the term loosely because whether you are earning 10 to 20,000 rupees a month, or you're earning 1 lakh a month, or you're, in the upper bracket and earning much more than that, the aspirations of being in the middle class, I think, cuts across the economic barriers. Everybody wants a better life. Everybody wants better education for their children. Everybody wants better healthcare. Everybody wants roads that they can zip on. They want bigger cars, better mobiles. Those middle class aspirations, I think, really cut across all classes. And when Aam Aadmi Party came up, they promised two things. One, of course, was a corruption-free government. The other was to return power to the people. So decisions would not be taken from top down, but they would actually create mohalla committees, consult people before they took big decisions. So, decision making would be down up, from the ground up. Unfortunately, all that collapsed. And, essentially, Aam Aadmi Party started losing the middle classes from even in its first term, because it started being perceived as a party that caters only to the poor, that only, gives out freebies, just looks at the slum areas, does not really bother about us, because, the facilities that we are used to as middle class voters, they were fast getting shabby. And of course, the last 3 years, those facilities and amenities have just completely collapsed. Delhi is driven by middle class sentiment. And if middle class sentiment turns against a party, I think that party is in trouble. That's what happened with AAP. Middle class sentiment very clearly turned against. Today, now that the BJP is in power, middle class expectations are very, very high. And the middle class, it knows how to help a party win. It also knows how to help a party lose. So if middle class expectations and aspirations are not met in the next 5 years, I can tell you the BJP will be in for a drubbing next time around, because the middle class, when it punishes very harsh.
It's the season of the middle class, I must say. After a very long time, Yashwant Deshmukh in the budget, the middle class is front and center. Maybe some impact of that in Delhi as well. One doesn't know. It was being speculated. The middle class as a vote bank is something quite unheard. Are we seeing that turning point here with the example of Delhi? With, of course, the understanding that Delhi is quite different and unique from any other electoral battlefield.
Unique, but this phenomena of middle class is pretty much across India that is emerging. There is some